which is not an insignificant thing.
Thank you. That's all I'm saying is that whatever the press says, try. I always say try to get one. Just try to get one. Now I was able to get the phone by using the new video chat, which is just superb. Thank you, Chris, for doing a great job. But these are not easy things to get. So you always struggle between what the press says and what the public says.
Larger, I think what's more interesting is, of course, as we know, Apple started designing its own chips some time ago. They replaced Intel inside.
So yes, they sure did.
You've got NVIDIA and AMD, as Steve Kovac was reporting this morning on Squawk Box, reminding us, competing potentially in the PC market. Yes. Obviously, AMD's already, but NVIDIA potentially, Qualcomm. And it's also important to note how many companies now design their own chips that are not chip companies, whether it's Apple or Amazon or Meta.
Right.
Correct? Correct. And many of those then go and get sent to Taiwan Semi that actually makes the chips. But it's an amazing time for chip design.
Yes, it is.
Which is everything, really. That's all it's about.
That's why Cadence should work, because Cadence is everybody. And Cadence guided, people didn't like the guide, but the guide. Cadence is one of the best performing stocks in the last 10 years.
Jim, who are all these people who design these chips? Say NVIDIA, for example.
They're smarter than us. The people
what are their people? Yeah, what are their degrees all in? It takes them years sometimes to design these chips.
They're usually in comp engineering, not comp sci. It's like if you go to NVIDIA has thousands of engineers. We have a shortage of engineers in the country. But
what do they do all day?
What do they do all day?
I need to see the
product. They create great wealth. They tinker. Go watch. Okay, here's what it's all about. I mean, there's 10 videos on the Cadence study. Okay.
Good morning. Good morning. Good morning. All right. So starting off the day, we have support at 4165, 4150. Oh, let me get Thinkorswim up and running. That would be nice.
Needham did say that the odd timing of the Apple event makes them worry that Macs were weak in the quarter. Not just the press, Jim. No, it's the sell side too. I'm not looking for a good quarter. I'm not looking for a good quarter. Why should this be a good quarter? The phone came out for a long time. No one says.
All right.
I urge people, if they really want to get out, okay? I'll buy when they're done getting out. See, because it's like a really great company with 99% customer satisfaction.
All right. So tomorrow there is a Treasury refunding. That could be market moving more so than FOMC and Jay Powell, what he has to say. The reason is with the refunding, I forget the amount, but it's in the trillions of dollars that is needed to fund the government. And China's not buying bonds. So who's going to buy these bonds? Anyway, so if you got a TLT trade on, or maybe you're trading long the 10-year or whatever, I really need to pay attention tomorrow. Remind me if I don't start talking about it first thing tomorrow morning, but we'll talk about it during the day, so I'm sure you'll get tired of me talking about it. All right, so Apple had their event last night. What's Apple look like pre-market? Pinterest had earnings. They beat, think Amazon. Remember when Amazon reported on Friday or on Thursday night and Friday, they follow through? Not saying that's what's going to happen, but that's what I'm looking for. All right, the FANG stocks are off right now. FANG stocks are off. We've got, all right, the futures have pulled back from the early morning highs. Let's see, the morning high at, what was that? 830? 830 looks like just shy of 4,200. Maybe we hit 4,200. I don't know. Maybe check with Banter. I see 99.55, 41.99, 41.99. That was the 825 high. We finished yesterday with 2-to-1 up volume. Pretty decent day yesterday. As usual, we'll wait for first 15 minutes to see what's in play. Maybe take profits off the table. if you have profits to take. All right. What time is it? 9:21. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, Halloween, overcast. Looks like it's going to be a rainy day. Hopefully it dries up before the kitties go out tonight.
We have an opening bell here in 8 minutes. Let's get to our mad dash or angry dash.
Watching Pinterest on the screen, looking for Pinterest to follow through. Given what we see at the open, we'll consider whether or not to take a trade on Pinterest. I was thinking about a bull put credit spread where I would sell the close to the money, say the 22 put, buy the 21 put. We could also, well, that's probably what I'll do for now. I was going to think of something else here. Mention something else. Let's see. Microsoft is up $1.69. Google's up 16 cents. Netflix is flat. Nvidia is down on conversations about China again, among other things. Broadcom up $1.75. Apple's off $1.50. SoFi, a very muted response to decent earnings. SoFi is at $7. Let's see. Kaba. Merck is a bit higher. Chopping around 103. Merck. TLT. Looking to sell some covered calls on TLT. TLT is trading 84, the 20-year bond. Let's see what the 20-year is doing. 20-year yield, U.S. 20-year yield. Okay, 20-year yield is moving a bit higher. We had the 10-year was moving lower. Now it's moving higher again, back to 4.86. The 10-year has been hanging out near the highs. Okay, we really need the 10-year. If you're bullish equities, you want to see the 10-year drop off along with the 20 and the 30. Seems like everybody's focused on the 10-year, so we'll keep an eye on the 10-year. Oh, I need to get Thinkorswim running. All right, we got 5 minutes to go. Okay, let's see. Pinterest. Got a lot of small trades on Pinterest pre-market. Okay, Google. Looking for Google and Amazon to push a bit higher. All right, let's get ready for the opening bell. Good morning, everyone.
Billionaire hedge fund manager Stanley Druckenmiller taking aim at Janet Yellen during a discussion at last week's Robinhood Investors Conference. Druckenmiller argued that Yellen had failed to take advantage of the ultra-low interest rates era. He said, quote, I guess because political myopia or whatever was issuing 2 years at 15 basis points, but she could have issued 10 years at 70 basis points or 30 years at 180 basis points. Goes on to say, quote, it's the biggest blunder in the history of the Treasury. I have no idea why she hasn't been called.
All right, got 2 minutes to go for the closing, for the opening bell. Sorry.
Although, as Steve Leisman pointed out this morning, it'd be weird, I guess, to have gone long duration at a time when the Fed was still doing QE.
Well, yeah, I speak with people, not that in this treasury, but in previous, urged them to do this.
All right, futures been drifting lower into the opening bell. We got the 10-year moving higher.
I said it to Tim Geithner, who's a terrific guy, and he always explained to me that it's just much more expensive to do the long end than the short. The short is the cheapest, and I kept saying, yeah, but that's a very short-sighted view. It could be this, and then Secretary Mnuchin, very similar, said the same thing. And look, I think Druckenmiller's right to call, but they have to call everybody out. They've been doing this mistakenly, and the long end's been really fabulous to do it, and we've said it on air. But I know Steve Leisman said that would be an odd thing to do. It doesn't matter. It was just a good thing to do.
Do you think households were more rational refining into low rates?
It was so great. It was so great. I mean, I think that the chart that you put up about disposable income and how it's going down, the savings down. Well, one of the reasons why we're such a robust economy is because people did the irrational thing. I thought the government should have too, but the government didn't want to do it. And it didn't matter how much you told them that you thought that long rates were going to go up. They just didn't want to do it. It was just like in their DNA not to do it. How they picked the treasury
Richard
options.
Fisher was on Squawk Box defending Yellen to a certain extent, saying it's not complete. You're not taking the full context of the time and place into account.
Very true.
And that it would have been more expensive. It was unclear whether there would really be demand.
All right, we should open here shortly.
Should be called out. I think everybody should realize that. Remember, we had a lot of people say
All right, that's the opening bell. All right, let's give it a few minutes for the markets to settle down. First 15 minutes taking profits off the table. Looking for stocks with high relative volume. Pinterest, keep an eye on Pinterest. Pinterest.
Well, look, we're still oversold. Interest rates have been calm. We haven't had Apple's quarter yet to disappoint. We haven't had the Fed say at 2:30.
Yeah, very. This is the wrong Pinterest.
When did you stop beating the usual? And I just think we have a bit of a gauntlet this week. But as we work up the oversold, I think people say, geez, I wish I had made some sales. It's not a great market.
It's not a bad market.
It's not a great, not a bad. We need to see either
PINS, Pinterest. Okay, big gap up on Pinterest. S&P, we'll keep an eye on the S&P.
Everything's a trade. And I accept that. I mean, I think that if you go in today, Nvidia down 9, and you wait till it's down 15, you can buy it.
All right, 41.75 was resistance yesterday. 41.75 remains resistance.
David, you know I don't think that that's a market for individuals. That's a high risk market. Trade.
Okay. Yeah, I mean, I'm just trying to figure out where you are.
I just said I said that you should sell. You should lighten up into the big move. And I'm saying there's
Are you still?
as long as you don't have the Fed on your side or no buyers of the 10, 20, 30 year, I can't be that positive. I mean, look, I was looking at what China's been doing. You know, China's down from $1 trillion to $8.
All right, just scanning the market. TLT fading a bit. McDonald's, looking for the follow through at McDonald's.
Looks like they underestimated how much, they overestimated how much they need, but
Yeah, the financing number came out. It didn't scare the market.
SoFi looking for more bullish activity. That really hasn't moved much. TLT looking to sell some covered calls if we can manage to get above, say, 85 or higher.
China PMIs miss. Eurozone inflation 2-year low.
That's good. A lot of mixed stuff. I find that when you drill down on any single quarter, there's always one line item that's bad. And we could just go right down on everything. Honeywell, why is it 179? Well, the climate control business wasn't as good as the aerospace business. Well, why is Alphabet only at 41 cents? This Google Cloud business was 7.5 instead of 8.5. I mean, I can find something for Meta. Well, the last 3 days of Meta's quarter wasn't that good, but you know what? It turned out that Pinterest said it was okay. So maybe this is the stuff that we're stuck in. I know. We're stuck in this. We are. And I can give you the
Microsoft really coming down now.
Okay, so was it 100 2 weeks ago? Yes.
Banks are still holding, or
and then Lattice came out
they're showing some.
industrials week. I can come up with 100 negatives to combat any positive, including what I'm going to be saying right now about positives about infrastructure. Right now, the negative is wind because you're fighting the Fed and you're fighting the fact that there's no real buyers for the long end. That's what you're fighting.
Speaking of macro,
All right, so Bitcoin did dip a little bit more. We're down at 34.3. Nvidia gapping down. That might be a play today, watching Nvidia. Amazon continuation, looking good. Amazon looking for a break higher. We got a buy signal on the daily. All right, let's take a look at Amazon real quick. Amazon. Okay, Amazon continues higher.
showing an increase in the North Star ambulatory assessment. That's an assessment of motor function for people.
Amazon continues higher.
Compared to placebo, but it didn't get to the primary endpoint. They have a lot of different secondary endpoints they cite here as being
Amazon. Caterpillar gap down. JetBlue was off as well. Amazon clearing the 50-day yesterday. Can we get a follow through? Looking pretty good so far, Amazon. Okay, there was some chatter about Wynn Resorts. Not much to go on there. All right, let's see what is active so far today. Nike with a follow through. All right, Nike looking pretty good. Nike so far with the follow through. Okay, Verizon, McDonald's, VZ, Goldman Sachs. The bank's looking pretty good. Goldman Sachs coming off the lows here. Goldman Sachs. Goldman Sachs looks good. Goldman Sachs. Okay, sorry about that. I had to take a phone call. All right.
Well, you're going on someone's word that it's not political, and that would mean that the deal does close this week, and I think by the end of the week, we know what pants by hot 10. Thank you for my word.
Okay, a little bounce so far.
And I talked about last time, that we really, this is make or break on his reputation. If they get it done very shortly, I think means 2 weeks. I think they think it's make or break. Be done as soon as possible. For people at home, this is what matters. Broadcom will do a giant buyback if they don't get the deal. If they do get the deal, the price earnings multiple goes up. So why are we sweating the program? You can go buy Broadcom.
You know, Broadcom NXPI is the one, remember, of course, never got approved.
I know. It all comes back to that level, David.
Chicago PMI's out. Let's get it from Rick Santelli. Hey, Rick.
Hi, Carl. Indeed, October Chicago PMI 44.0, expecting 45.
PMI.
Near 44.1. This is the weakest level since July, but maybe more importantly, it's the 14th consecutive month, 1-4, under 50. And of course, 50 is that magic line between expansion and contraction. We see yields have moved higher from the 4.80% low that we had earlier today. Yesterday we settled around 489. So even though yields are down a bit on the long-dated treasury,
All right, watch for a bounce here.
much higher than they were earlier. And we see 2-year note yields are higher on the day, and 3-year note yields are vacillating between in and out of net change of positive versus negative. But maybe the real issue continues to be first day of a 2-day Fed meeting, not expected to do anything. But the long-dated.
All right, let's take a look at a few things. Here's Unilever with irregular volume. Unilever, defensive. Dave and Buster's, basing. This might be a good butterfly. Dave and Buster's, when do they report earnings? Play Dave and Buster's. All right, December 6th. Dave and Buster's missed expectations. All right, looking for a few here. HSBC. Yeah, not much there. Hammer yesterday. Spotify. Just waiting for the markets. Markets continue to fade the open. We had a pretty good day yesterday. Kinsale Capital. That one took a dive. Kinsale. Sarepta, SRPT, Sarepta. Big gap down on Sarepta. BP. Okay. AME. Bullish engulfing on Amatec, Allstate Insurance. Trending, insurance companies look pretty good. All right, let's take a look at Travelers. I got Allstate. Looking for follow through. Travelers, AIG, Cincinnati Financial. The insurance companies look pretty good. They look okay. Yesterday, we said we were going to keep an eye on the payment processors. Capital One, Visa, MasterCard, and some of those exposed to Bitcoin, like Block. Doesn't look that great, does it? Block. MasterCard looks okay, though. Mean reversion back to the 200-day. We're watching the S&P pulling back. S&P giving back a good bit of yesterday's gains. Okay. So we had a nice, what almost turned out to be a hammer, but we still have the 921.50 moving down into the right. So you know that you need to stay neutral to bearish at this point. Risk off. Let's look at IWM. IWM, we want to see IWM moving higher, not lower. At a minimum, IWM needs to base in this area. 159 to 163 in that area. All right, if you look at the weekly, you can see the range. All right, so we need a bounce. I also need to see junk bonds moving higher. Right now, the markets are moving lower. Not much to do unless you're bearish. Junk bonds look pretty good on the weekly time frame. That's supportive. Okay, junk is supportive. Risk on, risk off. Okay, IBB, biotechs, risky assets. IBB, risk off. Okay, let's look at the up-down volume. It's 1-to-1 right now. Blocks. Okay, we got 2 on the Q, 2 on SPY, and 1 IWM above 50,000 shares. Okay. QQQ, 2, SPY, 2, IWM, 1.
Athletics.com.
We're going to do a $300 million restructuring, really reduce the cost across the board, reinvest back in innovation and brand building. And then finally, we're going to delever, lower our debt.
Our NVIDIA with a move lower, down 4%. Okay, starting to see some short covering now. Thank you, money.
He'll do the same, I think, with BF Book, but it's not going to be done instantly. One of the things he laid out last night was it's not going to happen overnight, and finance is really the problem here. So anyone who's buying it now, it's a longer ride. Have faith. I think practice will turn around, but the time frame may not be what people want to buy it.
I've got 2 activists in there, right? Yeah, Gates and Leeds, and I mean, but he seems to be following a lot of what they play for.
Okay, so we were just talking about Allstate Insurance. That's trending.
The company is very profitable. It did a lot of things wrong, many things wrong, and he has to fix a lot of them. There's actually a case study how to run companies around. But
All right, so the stock's showing relative strength at the moment. Travelers, JP Morgan coming off the low. JP Morgan looks good.
One of the things, I remember when they moved from Wyoming, Pennsylvania to be closer to the mills in North Carolina. Now they moved to Denver, and I said, "Why do you guys move to Denver?" And they said, "Well, I don't know, North Face." So that's terrific. I mean, there you go.
United Health looks good. Merck trying to turn. Goldman, Verizon. Yesterday, Verizon, we were talking about this box. Looking for a breakout. Verizon, potential breakout.
There wasn't anything that wasn't destroyed. It so contoured them right before the big denim move. These guys really may have been the textbook of what not how to
Kind of a slow morning so far. FANG stocks mostly mixed. Tesla was briefly green. It's back to red. All right, so giving back what we saw yesterday. Pinterest had pretty decent earnings. Pinterest gapping up, holding. Remember what Amazon did. Amazon, okay, holding. Amgen had earnings as well. Amgen got a hammer on the 100-day moving average. The 200 days just a bit lower. Stochastics is set up. If this does find some volume, Amgen,
Lennon was just, one of the great mass murderers of our time. People don't talk about that. They just talk about the good side of Lennon.
We'll see you tonight, Jim. Bad Money, 6 p.m. We'll take a break here with down.
Stochastic is set up on Amgen. That had earnings. Let's just check earnings on Amgen. There's no hurry to do anything. We only have a few blocks. We just added one more SPY. Very few blocks tells you that institutions aren't active. If the institutions aren't buying, then you're going to see fewer block trades. You're going to see fewer dark pool trades, perhaps. Amgen beat estimates. Revenue growing 3.7%, not a big deal. They beat by 6.67%. Earnings growth 5.5%. A 6.7% earnings surprise. Reported earnings of $4.96 per share. So they beat by 30 cents, basically. 31 cents. Amgen. All right, so the way I usually play a gap down when you have decent earnings is wait for a base. You could wait 6-7 days. Who the hell knows how long this is going to take, but the longer a base is, the better. Like Google on the gap down with earnings, still basing. Okay, watching SPY here. It might be a nice little pickup here at SPY at the low on this pullback. All right, let's see what SPY has to say. Okay, so the FANG stocks, not much going on. And Amazon has a buy signal since, what's today? Tuesday. Had a buy signal since Friday. We're still, looking for a follow through. There was a pretty big trade on Amazon yesterday we talked about. Pretty big trade on Amazon yesterday. with 150,000 February 115 calls, Amazon. Okay, so Google still basing. All right, so Google will give you, look at the volume tapering off as it's basing. That's a pretty good tell. Okay, volume's tapering off after the gap down on earnings. It's not. It could still see the 200-day at 117. If it got there, I would look for a base there as well. Hopefully, it stays above 120 and below 130 for now. And bases gives us a confirmation. So what we're looking for is a day where volume picks up. So far it's not. It's just basing. Meta, some conversation about Meta. That's been on a buy signal since Monday. Meta. Broadcom. Okay. Momentum is bearish at the moment on all of these FANG stocks. SMCI Supermicro, that has earnings. Earnings tomorrow after market. Tesla trying to do something. Tesla's faded for the past couple of days. Tesla fading. Rather than throwing money at the market, best to just sit and wait for the cavalry, if they show up or not. Consumer confidence, 102.6 versus estimates of 100. Consumer confidence was, let's go take a look at consumer confidence. Consumer confidence came in at 102.6. All right. What? 75.6. All right. So okay, so that's good to know. 75.
But that doesn't change the historic comp on what we're looking at with regards to October. We see that interest rates have moved significantly off their low yields.
I don't see anything good on the New York FANG at the moment.
We see that the short end has remained much more firm. Sarah, back to you.
Okay, thank you very much, Rick Santelli.
All right, consumer confidence. We're waiting for an update. This had a pretty decent drop. August, September into October. Okay, what's Bitcoin doing? Bitcoin's off 0.8%, still consolidating in the upper part of last week's price action. Consolidating. Doesn't appear people selling after 2 weeks higher. Bitcoin starting off the week with consolidation. Pinterest looks like it's fading some more. I got the wrong symbol in there. No wonder this doesn't look right. Okay. Now that's better. Sorry about that. Pinterest up for $4.20. All right, let's take a look at Pinterest real quick. Pinterest. Okay. Big range on Pinterest. I wonder what a put credit spread looks like on Pinterest. Pinterest. Okay, the dollar back up to the highs. 10-year fading just a little bit from 4.85%. VIX is at 1960. Crude oil at 82.58. All right, so you got mixed signals, mostly neutral to bearish, really bearish to neutral, mostly bearish. The dollar, the 10-year. We got a treasury refunding tomorrow. So that indecision is keeping a lot of traders at bay, or should keep a lot of traders at bay. All right, Pinterest. Pinterest had good earnings. Just consolidating up here.
It does sort of confirm the trend of wage growth slowing, which is what the Fed has seen. I mean, we're way down from the peak levels where we were in, say, second quarter of 2022. So overall, that's good news. I think the Fed is very much set up tomorrow to pause and suggest that they could still raise rates if they need to, but I think in the market's mind, it ain't happening again.
Fed Fund futures, 0% chance of a cut or a hike tomorrow. We did get EU inflation down to 2.9. That's a 2-year low versus the prior 4.3. That was a little bit of a relief.
All right, Pinterest, the implied volatility coming out.
Their December core CPI number 2.7. They were at 2.9. So at least we're talking about two handles for the next month or so.
If we can get there, and we're still at 3.7 or so on core CPI, so it has to continue to come down. The Fed wants it at 2%, but we've seen a lot of progress. Where the Fed, I think, feels comfortable waiting. It's really what happens to the economy, and some of the best indications are coming from corporate America right now. I mean, you guys are talking
All right, a little bounce so far. Just shorts covering. Okay, so this is just shorts covering. Futures, we got the 5, 15, and 30 still on red signals. The 60 minutes still on a sell signal as well. Tick cumulative has been trending higher. All right, so that makes me want to look at NIMO. There's NIMO. Let me take a look at NIMO. Okay, NIMO is about to, well, it's early, but it's about to cross the zero line. It's at minus 40, minus 4.4. Pinterest. All right, so SPY, maybe trade on SPY. If this follows through, SPY.
This year they're looking for 0.6. If you strip out Walmart, down to 10. As they're looking for the consumer to make a lot more tougher decisions going into holidays.
Well, I think that the pressure on the low income, which is now held up for a few quarters now, the drop in excess savings that we've seen, the fact that rates have been rising for a while. On the other side, if there's demand for labor, which there's employment costing that continues to point to a somewhat tight labor market, then the consumer holds in there. And David, it's confusing because it does depend on where you sit and what your company is. Pinterest today did not echo some of the comments we heard from the other advertisers lately about caution in the Middle East. And Pinterest said, broader ad environment, we've seen some stabilization there.
Yeah.
So you're not getting a very clean, easy
SPY.
You're not different a bit than Meta, as you sort of referenced in there, even though this quarter was quite good.
Okay, let's take a look at SPY real quick through a different lens. Okay, SPY. Yesterday was a nice reversal. Okay, let's look at S&P. Still early. I wouldn't do anything just yet. I mean, if you're thinking about calls, looks like shorts continue to cover. Starting to get a green signal on the 5-minute, but not on the 15 and 30 for the futures. Tick cumulative is green, so things are looking a bit more bullish. But I'm assuming this is just shorts covering for now. All right, looks like a nice potential reversal here underway.
Very strong, but Q4 estimates are starting to come down. Just take a look at the setup for November here. Here's why we say November is the best month of the year. We see 1.7. We'll put up the first part here. 1.7% for November. April's up 1.5%. December up 1.4%. So you see the strongest month. November's not there, but it's 1.7%. Strongest month of the year. The 10-year yield has been trying to get over 5% and can't for the last week and a half, and that is the subject of a lot of discussion here.
All right, so SMCI, Super Micro. Love to see this move back up into this range and maybe do an iron condor or something like that, Frano. SPY continuation. All right, so SPY 0-day calls are moving higher. 417s. Okay, nice little reversal, shorts covering, turning into more bullish. S&P, spiders. Nice reversal. Now we get a high tick, tick cumulative. Okay, so we got a nice little bounce. S&P, we need to get above. Need to get above that 4175. We're between 4165, 4175.
So you mentioned estimates for Q4 coming down. How is it looking? How is it looking for 2024? Yeah, are people still putting off 12%,
up 12%, and there are a lot of people calling out. But Mark McCullough came out yesterday and said this 12%. I think it's in jeopardy. He thinks it should come down, and it's going to come down. So you'll see that. I'm sure in the next few weeks, the 2024 numbers. Q1 is already coming down slightly. I would estimate in the next couple of weeks we'll go down to about 10%. And that's
okay, NIMO just went across zero.
If the 10-year blows up, it goes to 5.5%. Everything changes. I'm assuming
Bullish.
Or stable yields right now, and not dramatically worsening geopolitical situation. If all that changes, then all these estimates are out the window.
well, the dollar is going up, and that could affect these estimates too. Dollar yen is now 151 after Bank of Japan kind of didn't go as hawkish. So that's going to be problematic too.
Yeah, it's really tough to parse the global situation right now. The bottom line, though, is the S&P is still up 7% for the year, 8% for the year. That's rather remarkable. People think we're down dramatically for the year. The feel is that we're down dramatically, and we're actually but it is.
All right, need to see more volume. Let's push this a bit higher. NIMO, TTM on SPY, or back above, SPY back above anchored VWAP to October 13th, reversal in 2022. All right, SPY's back above its anchored VWAP. Bitcoin, yeah, I like it. I like it, Scott. Come on, NIMO. Come on, SPY. Let's do this. SPY, technically on a buy signal on the daily. Ready, aim, fire. those of you who have the script. Let me just see what the 60 and the 30 look like. $15 minutes on a buy. Let's see, the 60. Okay, looking for more. Can we get more out of this?
High tick alert plus 800.
Another high tick. I'll get two high ticks or two low ticks or whatever. I get a high tick when it moves above plus 800 positions moving higher, and I'll get it if it reverses back down through that real quick. So I'll get two in case I don't hear the first one. It's not an additional signal. Let's see, 5 minute looks pretty good. 30 minute. Looking for a follow through. 15 minutes on a buy. 15 minutes on a buy signal. SPY, 15 minutes on a buy signal. Going once, going twice. SPY, looking good. Okay, can we get to 4175 S&P?
We continue to monitor the, we are actually going to talk about tech right now. It's down over 2% or 2.5% in October, on pace for a third straight month of losses. But, we're talking still what Nasdaq's up nicely on the year. Let's discuss what's ahead for the group as we head into the final 2 months of the year. And for that, we bring in Rosebud's Martin Crockett. He has a buy on Meta, Alphabet, Amazon's got a hold on Apple. Martin, I would assume your assessment so far of earnings season is a positive one, or would that be incorrect?
Overall, I think it's been a nice earnings season. We've learned some of the tech names, not all of them.
High tick alert plus 800.
Opportunity for revenue acceleration and margin expansion, which we think is an unusual feature of the internet group. And we've seen those themes be enhanced with the earnings report last night at Pinterest, which we also recommend, as well as Amazon. And we had a constructive read from Google and Meta, even though the market was a little bit in disagreement with this initially.
Yeah, although you could say obviously.
All right, so far, decent buy signal on SPY.
But obviously, Alphabet not. Microsoft somewhat muted response to what many thought was quite a good quarter. Amazon was up, but again, and Meta, as you point out, I guess people got.
We need more shorts to cover, more puts to monetize, and more calls at higher strikes.
Well, I think that, coming into this season, one thing that we had observed is that it did feel like there was a nervousness in this group. And I think part of it is concern around what's the trajectory longer term of the macro. And I think that's really what was happening with Meta. The immediate reaction was to the commentary about the war. Everyone knows advertisers pull back at wars, and this war is not going to be overly disruptive unless it expands surprisingly. And so really, I think what that's masking is people are just worried about the macro. And I think the way you protect yourself is you focus on quality and growth. And I think you see that with the stocks that we're recommending in this group.
AI and cloud obviously so important for Amazon or Alphabet or Meta or Microsoft. Not as much for Apple, which I think.
All right, a little fade now.
As we head into the number, what is holding you back from perhaps being more positive on that stuff?
Look, I mean, I've liked Apple.
SoFi, I'd like to see that above 8. That had pretty decent earnings yesterday. Not sure why it's not doing much. Lack of interest.
Most interesting when they're pursuing a disruptive opportunity. And I think that could be with Vision Pro, but that's still a ways out.
TLT.
We're finding the good fight on iPhone sales, and this is the most important, the most loved device of the modern economy. But I do think that they've got some easy comparison the December quarter to disruptions, but that's well understood in the estimates. And the stock's trading near kind of a high valuation historically relative to the S&P, and not a lot of argument for a big upside to estimates. So I don't know that you need to be overexposed to Apple right here, right now.
How much of the risk is China?
You know, China is an imponderable risk, right? I mean, if everything blows up in the worst possible scenario, Apple, of course, would suffer, but everything would suffer. You know, we hope that doesn't happen.
All right, TLT continues to ramp higher. Let's look at the US 20-year yield moving lower. So we need to stair step lower and get back down to what we saw earlier this morning, down near 5.15%. That's the case. TLT should continue. TLT pulling away from VWAP. Looks bullish.
A little bit trickier, a little bit, you know, less well understood. We do believe they have $7 billion of supply chain disruptions in the year ago that they can comp, that can help them grow. But you know, consumers in a little bit tougher position. China's emblematic of that, so that's why I'd be nervous. You know.
Okay, TLT looks good. Let's take a look at TLT.
Thanks again, as always. Appreciate it.
Bonds.
Soaring in the month of October. What investors are saying about the crypto from here?
10-year yield. All right, we need to lose the 21-day. If we can lose the 21-day, that would be a shot across the bow for bullish trades on the yield. That would potentially lead to lower prices on the yield and higher prices on TLT, the bond. Let's look at the 20-year bond. Okay, basing, still basing. Could make a case for a left shoulder, head, right shoulder, and a neckline right around 88.50. No follow through yet. TLT looking for a big day. Looking for TLT to go soon. What about some put spread? What about a put credit spread? Vertical put. Vertical put on. It's 2 to 1. 2 to 1. So selling the 83 and no, that's the opposite of what I want. I want a credit. I want to sell the 84 and buy the 82. Sell the 84. No, 83. It's not that great. No, that's the opposite of what I want. Why is it doing this? 83. Buy the 84. That makes sense. About 2 to 1. About 2 to 1 on that. Yeah, not worth it. TLT. Still basing up here. What is Merck doing? Merck. All right, just sitting here. Merck, looking for it to move up to 105, 105.50. I'll sell some cover calls if that happens. It's been week since Friday. They got a downgrade, price target downgrade. I forget the firm. All right, TLT. All right, S&P. All right, so the markets are just sleepwalking here. IWM getting a decent amount of trades, blocks at the bid, 410,000, 250,000, 104,000, 76,000. Let's take a look at IWM. IWM blocks.
recent run higher boosted crypto exposed names like MicroStrategy and Marathon Digital in October. But watch Coinbase, those shares pulling back for the month. In a fireside chat yesterday, legendary investor Stanley Druckenmiller commented on Bitcoin, saying, quote, I was surprised that Bitcoin got going, but it's clear that young people look at it as a store of value because it's a lot easier to do so with.
Okay, one more time. We'll look at Allstate. Allstate. Okay, potential trade on Allstate. Let's see if this works out. Let me just check the numbers first. Allstate. What is that? The sell the 125. It's trading 126.90. 126.90. Sell the 125. Buy the 120. Nah. Doesn't look that great.
Hey, Sarah. So Sam Bankman-Fried is back on the witness stand as we speak. Yesterday, he did seem aggravated at points, dodging questions. The judge scolded him at times for not answering questions directly. We'll see if we get some more of that today. The prosecution called Sam Bankman-Fried's credibility into question in their cross-examination. That really was key. They laid out inconsistencies, when the crypto founder was saying one thing in public and then something completely different behind closed doors. They used Sam Bankman-Fried's media.
Allstate looks pretty bullish. Let's take a look at SoFi. It's a pretty slow day. Pretty slow day, so you're not missing anything. Pretty slow day. Okay, we're trading 1-to-1 up-down volume. 1-to-1 up-down volume tells you to look for a doji day or a spinning top. Okay, so we need to get above 41.75. You can see this doji, right? Doji on the daily. We're in the upper half of today's range so far. Okay, RSI is rising, so that needs to continue. Stochastics is set up. It's ready to go. So yesterday I shared a chart with you that Brian Shannon was kind of the opposite of what I was charting, but with the same idea. Okay, so I was looking at from low to high. He was looking at the low compared to the upper trend line. Each time this is pulled back, it got stretched away from the upper trend line. Stretched away from the upper trend line on occasion number 2. And right now we're waiting for stochastics to fire. You can see it's about ready to fire. Once it does, it's potential for this to follow through. Right now we got a little bit of selling, but over the next few days looks potentially probable. Okay, so all right, IWM flat SPX. Okay, 41.75 is resistance, 41.65 support here. Okay, Allstate continues to look pretty good. It looks like a credit spread, or rather a debit spread on Allstate's about the best way to go. Calls. Vertical call. All right, Allstate still looking pretty good. Allstate and Travelers looking good. All right, Chewy. You got Chewy breaking out. Yeah, I saw that out of the corner of my eye somewhere. Oh, it was on this Chewy. Yeah, Chewy looks good. Chewy looks real good. Look at the volume too. Astro, look at the volume. All right, what's earnings for Chewy? I'm surprised it got down here into the teens. All right, maybe just a straight call. January. Let's see what the calls look like for Chewy out in January. Oh no, that's I put January in the wrong spot. There's no options for January, JAN. Okay, so December, people buy pets. All right, so I like the January Chewy. The Chewy, the 20, just out of the money. Look at Chewy's volume. All right, that looks really good. I like this one. Astro, good find. Good find. Let's see if we can get a follow through. You just got a dip. You just got a dip on Chewy. If you're interested, Chewy.
Good morning to you. The Israeli Defense Forces say that they are continuing those ground operations and combined military operations in Gaza today. They claim they hit a Hamas outpost in the north of the Gaza Strip today. They say that they killed Hamas fighters as well as destroying anti-tank missile launch outposts and confiscated a number of weapons. Clearly, the fighting continuing in a quite intense rate in Gaza. There are reports of
Chewy. Yeah, that looks really good. Coming out of a base.
Increasingly fearful, hearing some strikes getting closer, they say, to those hospitals, and the activity, military activity on the ground, really seeming to ramp up. Here where we are, we're in Eilat, which is the sort of a coastal resort town in the south of Israel. You see the mountains of Jordan behind me. To the south here, directly south, is Yemen. And earlier today, we heard sirens, warning sirens here in this city. This is a place where some 65,000 evacuees are staying. Evacuees from those neighborhoods alongside Gaza, which were hit so badly on October 7th. The sirens sounded. There were reports of an unidentified object in the air. The IDF later saying that in fact they shot down surface-to-surface ballistic missile and two cruise missiles fired by the Houthi rebels, Iranian-backed Houthis in Yemen. The Houthis have since taken credit for that. They said that they sent a barrage of missiles and drones in this direction because of the war, Israel's war against Hamas, and they said that there is more to come. Clearly concerning when you talk about the possibility or the risk of this escalating and expanding beyond these borders.
Kelly, thank you. Kelly Corbier, as you saw in Eilat, Israel. The Fed is kicking off another two-day meeting today, and according to the responses of CNBC's latest Fed survey,
all right, so Chewy looking pretty interesting. Like what you found here.
Yeah, or next week or the week after that, David. You're right. Response to the CDC Fed survey not
All right, no follow through yet.
this week, but no disclosure
Chewy.
at all. But what's interesting here
S&P, a little fade back below 4165. So it looks like it's going to be a doji day.
That's the average for how long the Fed will be on hold. And 57% of the respondents say that first cut doesn't come until September 2024. You'll remember this number, that date was as early as early next year. The 31 respondents divided on the outlook.
All right, Pinterest. All right, we're pulling away from VWAP, Pinterest.
Now they're seeing about 75 basis points of cut by December 2024. It had been as much as 125 basis points of cut. That's gone away. Diane Swank of KPMG writing in response to the survey. The Fed is likely to be stuck in a hawkish holding pattern as it weighs.
All right, Pinterest, IB continues to crush. It was much higher. It was about 70%. It's down to 47%. Historical volatility is typically about 77% on this one. Pinterest. SPY still fading. Okay, so stocks that were in play earlier. JetBlue with earnings. JetBlue just sinking to $3.40. Wow. Wow, let me take a look at the airlines real quick. All right, a little fade. VIX moving back up. Airlines. Wow, that looks terrible. Terrible. Allegiant, Alaska, American. Airlines are just getting killed. JetBlue. Wow. Airline. Wow, look at Spirit. Wow.
However, the fact that before Steve's segment, we had war reporting from the battlefront shows you that the world is a little bit different this time. And at 19 times.
Wow. JetBlue reported this morning.
Very often, but this may be a year where the consumer's confident, which is holding in impressively so, given all of this geopolitics. But there are starting to see some subtle effects.
Yeah. Tick cumulative looking good.
That's our bottom line. And again, it's uncomfortable because, look, we've loved the market.
SPY looking for a higher low now. SPY looking for a higher low. Chewy.
Geopolitics where it is, it's just not an attractive time. Mark, your view on this?
I think we agree as well that obviously that there's going to be no rate increase this week, but we are a little more concerned about the acceleration in economic data that we've seen in the last few months, in fact, with GDP growth, close to 5% in the third quarter. Consumption still
Pinterest consolidating at the highs.
Inflation showing some firming.
Nice volume.
Market showing some reacceleration in payroll employment. All of that, in our view, will force the Fed to need to raise a little more. So we don't think the Fed is quite done there. It's not going to raise rates this week, we think, but in December, I think the chances of another rate hike are quite elevated, we think.
But the rates have moved up a lot already. I mean, the market has done a lot of that for the Fed, which is what I think has changed the most. Yes, data. We've seen a big jump in long-term rates.
Absolutely, absolutely. With the 45 days.
All right, yesterday, Amazon. Okay, Google's still consolidating. We got a lot of companies reporting this week. Google's still basing.
They were already planning on hiking 25 basis points at the September meeting. And, given the strength in the data, they should have probably increased rates a little more than this 25 basis point hike that they were planning for. And then the question is, how much does the 10-year yield increase offset that?
When you think about the strength in the economy, though, there are a lot of talk this week about the drawdown of excess savings.
All right, Sarepta, SRPT. That one gap down. Sarepta gap down. ANET. Big gap up. ANET. Arista Networks.
Middle of next year, when the employment market is likely to begin showing its first signs of weakness.
Julian, I just want to come back to the 19 multiple because I can't help but think that it's reflective really of what are 7 or 8 stocks that represent 30% of the S&P, most of which have higher multiples than 19, not all. And how you think about the composition.
All right, ANET.
Given that incredible overweighting, not to mention the impact it has on the multiple. Well, it's incredibly challenging. We saw these kinds of dynamics, obviously, at the end of the 90s and early 2000s, and you had a further correction in stocks. And part of our near-term caution here is the fact that if you look at it, the Russell 2000...
Okay, looking for a higher high. SPY, looking for a higher high. Arista Networks. Pretty chart. RSI back through 50. Stochastics fired. ANET. RSI rising. Best case, a flag trade from. Coin. All right. Looking for a bounce in Bitcoin as well. Caterpillar got clobbered. The whole China slowdown thing. Caterpillar. I do like this Chewy, though. Thank you, Astro. Jane, his wife. His boy, Elroy. His dog, Astro. Nice volume. Really like what I'm seeing here. Stochastics rising, MACD, bullish. You got this big base along in here. So if you're a new member or a new trader, what I always look for is where's distribution? Okay, distribution is phase 3. That's the top of this chart. We go through phase 4. Phase 4 is the markdown phase. The volume picks up, price stays below the 921 50-day. In this case, it stayed below the 21-day since it dropped below in the 3rd week of July. Never managed to get back above the 21-day. So the significance at the moment after markdown is that Chewy is in a base. That's accumulation. That's phase 1. Look at the volume, the buying here. Let's look at the weekly. It looks a little bit more clear on the weekly. Now, this is probably a week or two away from changing trend. What I'm looking for is price to get above the 10 EMA, but starting to get there very quickly. So we don't have the weekly yet, but the daily looks pretty good. So if it gets above the 50-day, that'd be great. Volume, keep an eye on the volume. Chewy looks pretty good here. Yeah. Yeah, ANT, I was looking at it yesterday as well. I forget where it showed up. I think it showed up on the I forget where it showed up. It showed up somewhere in a screen or something. Let's see, Dow Jones, S&P, NYSE. Is it on the NASDAQ? Oh, it was on the NASDAQ 100. Yeah, it was top 5 on the NASDAQ 100. Yeah, ANT was the top 5. Speaking of top 5, let's go take a look. There goes Apple. Apple trying to go green. Broad. All right, we're seeing a lot of FANG stocks. FANG stocks. AVGO. Okay, Snowflake pushing higher. Let's see. Microsoft is green. Microsoft green now. Okay. NVIDIA. What's Amazon?
The growth market has all the things to do with where you're coming from. This is pretty mature, not mature, but they're still growing market. But we have, relatively speaking, other markets are younger.
Market.
When it comes to the growth in the U.S., Marcelo, is Shein taking share, and who are they taking share from?
I think Shein as a company, even though we're pretty large in size, we're just getting started. If you look at the size of the retail market and the fashion market, you're talking, it's a market that's...
Okay, looking for Amazon to follow through.
And we're taking share. I think what traditional retail would be a best way to look at it, because once you have a chance to go into your app and have the variety of products you can choose, the lower prices, we're getting faster to deliver goods to our customers, it becomes an experience that you can hardly replicate in a traditional retailer that you go to one of their stores. I've experienced myself, as you know, I have 5 daughters, right? And I've seen them how they go into the app.
SoFi, seeing a big jump in SoFi.
And a lot of them are just basically moving to a large percentage of what they buy directly from the app. So I think that share is coming from there.
And value too, I guess.
SoFi, the dark pool activity. Sarepta.
That was still growing in a very healthy, very robust way. So value for money is still one of them.
SoFi.
Affordability, accessibility, availability.
Still growing.
That's something to value, right?
Still pretty slow though. There's only about 16 to 18 blocks so far, and that's mixed with SPY, Q, and IWM. SPY, we're seeing some at the offer trades as we push higher. 415.62. 415.62. All right, so SoFi, inside day for now. Volume was above average yesterday. Decent earnings on SoFi, yet we pulled back. SoFi, let me just check earnings. SoFi beat estimates, expectations. Revenue grew 15.73% year over year. We had student loans restarted, payments restarted. So that's impacting, consumer spend. All right, Nike. See some people selling some Nike. Nike following through, looking for a push higher. Nike.
So I want to understand the business model of it, because I mean there are many who simply believe they're just doing it more cheaply because they're using cheaper products. So to speak, I mean, well, yeah, that's what they think.
Lulu, DocuSign. Let's see. Nike looks good. Nike still looks good.
To respond to fashion trends so quickly that they're just more efficient than everybody else.
Yeah, so they do this made to order. It's not like fast fashion where the Zars of the world, have a bunch of designs that come out and then they have it all made. They don't have an inventory. That's the thing that it's made to order fashion. So people they have this special algorithm that Jim has and the technology that they have. And then they are able to see what's working and then get that produced from their factories in China the places their secret sauce. And then it's just quickly
Desires, and then they can respond to them in real time.
And that's what's changed the game. I do have just some news away from Shein, just they sent out an investor letter that I got my hands on, which says that they are net profitable this year and showing record revenue for the first 3 quarters of this year.
We'll hear more in the next hour. Meantime, check out the move in Pinterest today, surging double digits, almost 20% after strong results and guidance there. Revenue up 11. That's going to be a 3-month high on Pins. Bill Reddy will join us to break down those numbers in the next hour.
I'm looking for Farmer Jim. I'm looking for the S&P to continue what we're seeing here. Okay, looking at this lower. This is set up. Okay, SPY continuation. There we go. Okay, looking pretty good. Okay, I see a couple of potential. All right, DocuSign, Twilio. DocuSign, the 41 call for 1124. DocuSign. All right, Twilio, win. Twilio looking pretty good.
As we close out the hour, I want to get a few more names on the move this morning, spanning chips, autos, and the airlines. Phil LeBeau, Christina Parks-Nevelos are going to break down the action. Phil, let's begin with you.
And Carl, let's start with JetBlue having a terrible day. Worst day since.
You think? What's JetBlue? Is it like, I don't mean to laugh. I mean, This stock, I don't know if you've traded JetBlue before, but I've traded it in the past, and this just doesn't do well. I can go back 20 years, and JetBlue did make it up to 27 back in 2015, but for the longest time in 2008, 9, 10, all the way through 2013, it managed to stay between 350 and 750, and now it's back to the bottom of this range. You might be saying to yourself, yeah, this might be a good place to take a trade. Well, if you don't mind just sitting here and waiting for the stock to do something in an environment that's not looking that bullish for airlines, you could probably sit there for years before it does anything. That's hands off on that one. Yeah, I would think so. Yeah.
Continue to fall today after management also issued weak Q4 guidance and warned of increasing risk to auto demand.
Yeah, he's a bozo. Oh, that's cool. Let's look at Wynn Resorts. Wynn saw potential trade on Wynn. Flat. I do like Twilio, though. Twilio looks like it's going to turn. Let's look at the 60-minute Hinkenashe on Twilio. Okay, trying to turn the corner. Honeywell. Okay, looking at Honeywell. Honeywell looks good. Paticus, that looks pretty good. I like Honeywell. That's a good one. Let's see what earnings look like on Honeywell. Beat expectations last week. Beat with revenue growth at 2.92%. Honeywell, of course, serves the customers in the aerospace products and services, control, sensing, and security technologies for buildings, homes, and industry. Basically a conglomerate. Turbocharges, automotive products, and chemicals. Honeywell does it all. Revenue was in line, basically. Okay, Nike, a little pullback there, a little profit taking. All right, Honeywell. All right, Simon Properties seeing some activity. Simon says. Simon Properties. Wolf Speed. Repligen, RGEN. Big gap up. Repligen. Or what time is it? It's almost 11 o'clock. All right, so SPY is trying to get back up to the highs. S&P 500, SPX needs to get above 41.75. 41.75 right here.
Came out about 6 a.m. this morning. Eurozone GDP comes in negative 0.1%. Yeah. On a month over month, year over year, up 0.1%. So far cry from about 4%, almost 5%.
All right, 41.75. We get above 41.75. Looking for a test of 4,200.
It's France GDP up 0.1%. Italy unchanged. Canada just came out on 0.0 GDP. China's numbers, by the way, also slipped back into contraction too. Yeah, China actually came out. Their numbers were a little bit better overnight, I thought. That I read. Yeah, China's PMI went from 50.6 to 50.8, so a little better there in China. Yeah, borderline contraction. But still, part of the problems that we're getting into with Caterpillar, when we talk about that in a moment, is weakness in China, weakness in Europe, over strength.
Lulu. What's the Lulu doing? Lulu.
Ben is going to talk about Japan and the Bank of Japan in a moment, so I'll let him cover that. But what we have here is the data we just got out. U.S. employment.
Lulu looking pretty interesting. Lulu.
Private sector compensation up 1.1% month over month, or quarter over quarter, year over year, up 4.3%. A little bit of miss on the year over year numbers. Prior it was 4.5, but up 1.1%. Basically, wages, salaries, benefits all combined into one, rising slightly. So I guess we got the dollar kind of feminine.
Lulu looks like it's poised to bounce here.
Pretty soft. Japan's not big. The yen is down big.
Okay, volume tapered off.
I've got the top.
The difference is that this is 3 nanometers, so it means it's faster, it's more efficient, while still being the same size. So it's one of the most advanced. I mean, it is the most advanced chip that are now being offered in.
All right, volume tapering off on the pullback.
So that was
Lulu
to me as a positive by this
tapered off as we pulled back to the 50-day. Volume tapered off. That's exactly what we want to see. Momentum. Just keep an eye on it. Put it on your watch list.
Reducing its price target on Apple to 195 from 220 with a buy rating following the quick event they called it, which focused on the Mac line of products and these M3 chips, as well as earnings that are out later this week. The firm is lowering their estimates more so in the
International
fears of link
cycle,
as well as competitive threats in China.
flavors and fragrances. Big base. All right, so 41.75 again is an issue. Yeah, international flavors and fragrances. Revenue fell 11.43%. Not much going on here. All right, I'm going to take a couple of minute break. I'll be right back. I'm not going anywhere. I just need to take 2 minutes. I'll be right back.
Right, as the story continues to progress between negotiations with the U.S. and China, NVIDIA has caught someone in the crossfire. So, like you said, they may be canceling due to these U.S. curbs. This is per the Wall Street Journal reports we got. The new export controls may be pushing NVIDIA to be canceling billions of dollars in their orders. So they did say the company has already finished its orders for these advanced AI chips to China for the year, and was pushing to deliver some orders for 2024 ahead of these new rules, which were set to come into effect mid-November. Now, however, last week the U.S. did send a letter to NVIDIA stating the new export restrictions were instead effective immediately. So it will be really interesting actually to see how NVIDIA responds to this. I feel like there's some fine print in this.
Okay, we're at just below 41.75.
If NVIDIA didn't already know. Still, though, red as perhaps
Tagged it several times. Would be significant if we could get through 41.75.
And the way that right now a lot of factors are happening that are somewhat out of NVIDIA's control. So that's not exactly what you want to see, although NVIDIA still still really impressive on the year. It doesn't seem like this pullback as of late is even denting what has been a really, really banner year for NVIDIA shareholders.
All right. Thank you for all of that. Jenny Horn, great to see you. Get some insights on the news shaping the markets. Let's talk all about what's going on here with the Fed meeting. Good morning to you. Thank you for being with us. Tell me about your thoughts on any surprises ahead. Everybody really thinks that the Fed will do nothing, right? I mean, that's sort of the bet.
SoFi grinding higher. SoFi.
All right, we're going to give Thomas Martin a moment to just check his camera and such. In the meantime, just giving you an update here on the markets. I was just checking to look at the sectors and communications services.
All right, looking for S&P to get above 4175. So that's the focus at the moment. Stocks that we were paying attention to this morning that were in play. Amgen still sitting on the 100 period, no follow through yet. JetBlue, bad. On the earnings side, starting to show a hammer down here. Not really interested, probably just shorts covering.
Right. Well, the Fed has definitely gone into pause mode, and I think they want to stay there for as long as they can. They realize that the effect of rates that they've already put in place is at a good place. It's at a time when it really should start to be taking effect. So even though we've seen rates rise a little bit more than probably the Fed expected, say on the 10-year, that there's still an opportunity for those rates to come back down again if the economy weakens. And I think they really want to get some more data points before they do anything else.
I mean, this really could be the end of the rate hike cycle, don't you think?
It could be, although the data that's been coming in lately has been very, very strong. Well, I say very, very strong. Today certainly looked like a strong day, and the GDP report, which of course is history, was also very strong. But you know, participants keep on worrying.
All right, so that was Amgen, JetBlue, Caterpillar. What's Caterpillar doing? Caterpillar. All right, Hammer starting to build. As with any gap down on earnings, I tend to wait. I would wait on Caterpillar. Might miss an opportunity. I doubt it, though. Give it a few days. Maybe you have a better setup. All right, let me just check one more time. Chewy. Wow, Chewy missed by 300%. Missed their revenue by 14. Missed their expectations by 300%, while revenue grew 14.26. Reported a loss of 2 cents per share. Consensus estimate was a loss of 3 cents per share. All right, so this one, you know, Chewy might work. Turning the corner. What's PetSmart look like? Is it Pets? PetMed. What's okay, looking for a push through this 4175 area. Okay.
With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With no monthly service fees or account limits, unlimited ATM fee refunds for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Okay, Pinterest.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m. Eastern. Schwab Network.
Okay. ARM Holdings pushing a bit higher. ARM headed back towards 50. ARM, bargain hunters.
Welcome to Schwab Network. Daily live exclusive content tailored to today's investors. Broadcasting 24/7 from our studios in Chicago.
Okay, Bitcoin just sitting here consolidating.
Up-to-the-minute market insights. Example trades and stock-specific analysis featuring the smartest minds in the business. No politics, no noise. Analysis ahead of the biggest events for your company. From bell to bell and beyond. Watch live and on demand. SchwabNetwork.com and on all your favorite streaming services. Available anytime, anywhere. Schwab Network. Empower every investor and trader every market day. It's time to look forward. Find the next track. From every click to every tip.
Amtech, AME. All right, let's keep an eye on. We're trying to get through 41.75. If we can manage to get through 41.75, that would potentially set us up for a test of 4,200. If we can manage to put together some calls at a higher price.
At this point last year, we were actually very similar. We're actually near the 52-week lows and making new 52-week lows, and we rebounded back in early November, came back down to revisit, and that was that point where we found the bottom and the market started to rally. Now, we're certainly under different market conditions and environment. There's a lot of fears that this market is going to roll over and revisit back to those levels. But, we'll have to wait and see what the Fed policy is going to be. Certainly right now, it seems that the Fed is going to be pausing and possibly indicating that they're not going to hike no more. The markets are actually starting to look and price in the possibility of rate cuts. They were projected to be towards the end of 2024. We're seeing that pricing effect starting in the first quarter and second quarter of next year. So it's really going to be dependent on what Jerome Powell in the game has to say on Wednesday. If they have some indications that they're going to pause and then slowly start working towards the cuts, that's going to actually be risk on news for the markets, and we should start to rally back.
All right, so we'll watch for that. In the meantime, why is CrowdStrike on your radar today?
Yeah, so that's a great question. When we look at a lot of the tech names that have performed exceptionally well this year, we've seen a lot of these stocks pull back. A lot of them have actually pulled back underneath the 200-day moving average. And, we look at the cybersecurity sector, they have not only exploded, but they have remained
What is ST Larder doing? Let's see, ST Larder. Oh, man, that's at the lows. Li Auto. Range bound, Li Auto. GPRE. GPRE. Green Plains. That must be oil and gas. EWJ. Japan. Looks like I could get back to the 50. EWJ. Just looking at Japan's Japan ETF. Back to the 21-day, 200-day, 50-day, probably 60. Not much to do that. Just seeing a lot of volume. Pinterest, Sarepta, Sam Adams. Oops, wrong symbol. SAM. Okay, what I saw Bud earlier. Bud. Anheuser-Busch. Bud. Actually. Okay, so 41.75 continues to be an issue. All right, so we're making a note of it. 2 days in a row, we can't seem to get above 41.75. There's a lot of option volume there. Let's go take a look what the updated volume looks like. Okay. So here is 41.50, 41.75. It's not as bad, not as much as you would anticipate. 41.50 is actually a larger strike, puts and calls. So maybe we get through 41.75. If we did, 4,200 seems the next likely area. Okay, we got 41.80, 41.75. There's options in this area. You can see 41.75, 41.50. You got 146 million in puts. Calls, 75 million inputs. 41.75. It's pretty much even. 53 million and 50 puts and calls respectively. So if we can get above 41.75, that would be huge. 41.75. Yeah, the dollar does need to come down. Dollar SPY is just sitting here, moving sideways.
Recent weakness that we're seeing, holding above this 170 level, but I think even more significant, maybe 166. So this is still very much feeding into that bullish narrative that Charles just laid out.
Look, and he does. He feels bullish on the group overall and thinks that this market has some room to the upside. CrowdStrike is it, right, Charles?
Absolutely, and you can see that their peer companies are holding up as well, with maybe the exception of Cloudflare, which is reporting this week. And that's going to be important as well, because if Cloudflare reports well, that could also be a catalyst for these stocks to move higher.
All right, so Microsoft, grinding higher, Microsoft. Not much to see here. Broadcom, higher highs, higher lows. Need a higher low here on Broadcom. Meta, New York FANG index, currently on a little small sell signal, but making higher lows. Okay, Snowflake hanging in there, moving higher. AMD. Apple. NVIDIA. Super micro looking pretty good.
Bouncing around, but with the recent weakness in semiconductors, especially seeing the leaders like Nvidia and AMD falling over, Micron has held up relatively well. They just came off of their 200-day moving average.
Yeah, that's spot gamma.
That's the price that I'm focused on.
And yes.
Now, I'm not saying this is going to happen, but if it actually fails to hold 64 and breaks down, I actually think they're going to rush down to $60. And that's going to be that deciding moment.
S&P needs to get above 41.75. SMCI looking pretty good. SMCI, super micro, pulling away from VWAP. Okay, so it's starting to fade back towards VWAP. Watch the volume. There's a little profit taking there. Super micro. Tesla managing a bounce. And it's starting to fade now. All right, I don't feel it. Got to get above 41.75. Super micro. Earnings tomorrow after market.
Conviction on what define trend one way or the other. As of recent, it has been stuck and it's been about a $10 range or so I got it from 60 to 72. I think Charles pointed out from 60 to 72.
Okay, so we're grinding. Tick cumulative is green, so that's an interesting development over the last couple of days. Tick cumulative has turned green and is trending. The significance there being institutions are buying more on the uptick than they're selling on the downtick on a cumulative basis. Okay, let's go take a look at the number of stocks trading above their 50-day. Remember, this got washed out again. Number of stocks trading above their 50-day. Wash out again. Okay, day 2. So this is improving. Remember, last time we took longs off of this level here, when we got down to 10%, it was actually only 6.8% of stocks were above their 50-day. So more than 94% were below. 93% were below the 50-day. So when this turned over here, we got a nice weekly run-up. So that's what I'm looking for now. So if you're thinking long, we should push through 41.75, but we need to see more calls build. You got CCI is about to trigger here. Once it gets above minus 100, 200-day, stocks above the 200-day got down to 25%. It's at 30% now, starting to move. So that's telling you that stocks are getting bought, and many of them are pushing back above the 50-day. Let's take a look at the 1500. Mid caps, large caps, and small caps. That's still trending lower. This needs to get above the 0 line, this histogram, and push above the 2 horizontal line at 2. We're coming 2 days outside of the lower Bollinger Band. We're looking for that to push back up into the 20-period moving average. All right, so mean reversion there. Let's look at the NYSE. Okay, we got rejected again. So no follow through yet. New highs, new lows. All right, we're making higher lows. This is a 30-minute chart, making higher lows. Okay, you can see this trend reversal or trend break on the 30-minute time frame. Okay. Let's look at the number of stocks on point and figure buy signals. That should tell us a little bit of information too. All right, so that's turned up. Need that to continue. What about VIX VXV? VIX VXV. And we're looking for a green signal here. We got a green signal. Whenever you get a green signal on VIX, looking for higher highs and higher lows. This is 60-minute time frame S&P in the top panel. Look at VIX VXV. We want this to be in the white area. Okay, that's neutral. High of the day was 0.97. The high of the day on Friday was, I think, 101, something like that. In the green zone above this one level, that's bullish, and we got that bounce. Still working it out whether or not we follow through. Let's look at the volatility VIX of VIX. The speed, okay, that's dropping off. So as this is dropping, that's bullish. Okay, you can see the last time it dropped off, we formed a bottom and started to rise. Dropped right here. That was in the last leg we had higher. This started to drop. We had a nice rally. All right, looks pretty good so far. Okay, the dollar is still a thorn in our side. Dollar, US dollar, still a pain in the butt. The dollar is still a pain. Okay, it's consolidating. It's been consolidating since the last week of September. This is week number 6, rather. Week number 6. 1, 2, 3, 4, 5. Starting week 6. Okay, SPY keeps showing signs that it might want to go. Watch Super Micro. S&P needs to get above 41.75. VIX is dropping off, so that might help. So is the 10-year. All right, so 10-year is starting to drop as well. US 10-year yield is dropping off a bit more. US 20-year, if you're trading TLT, you want this to continue lower and TLT to trade higher. TLT pulling away from VWAP. I want to sell covered calls on TLT. All right, it's almost at 85. All right, TLT looking really, really smart. Let's look at TLT daily. Let's look at the daily. All right, so we got a ways to go on a buy signal for TLT daily. Let's look at the 60-minute. 60 minutes most likely on a buy already. It's been on a buy. 60-minute TLT. Let's look at the 4-hour chart. Not yet. 4-hour needs to get above 86 to be on a buy. The hourly is already on a buy, but it needs to continue this move higher. It's pushing through this resistance that we saw on October 26th, Thursday. Next level would be 85.50 or so. You can definitely see a rounding bottom or a base on TLT. So if you're in TLT, I think Timmy, I think you're in TLT, right? And a number of you might be in TLT. Looking for a bounce.
Still holding below the key area established around 26. So until we take that out right now, I think, again, it's a stock that still remains under pressure. Taking a look here longer term, going all the way back to, we're talking about February, March of 2021. This is again, longer term trend that's laying out to the downside. This little look that we were just looking at here, which is part of that bigger picture. Again, RSI might be signaling relative strength has been a bit overdone to the downside, but price is giving us no indication as of yet that's happening here. You can see some of the weakness that's playing out and the, again, potential to form.
This stream is sponsored by To The Tick.
Let's keep an eye on it, but no rejection as of yet, Nicole.
Okay, thank you for that. Charles, will we get the final comment?
All right, so watching that TLT, a little bit of selling right here.
It's certainly a high-risk play. But this is something very similar to that I saw in McDonald's recently, where we were on a very, very steep decline over the last few months, and they started bottoming out and reversing. And the RSI indicated the same thing, that there was divergence and some demand coming in. So this is certainly one to watch. Again, I don't disagree
disagree with that. This stock has been melting.
Okay, we're not making it through this area. Not surprising. Not making it through this area. I don't think anybody's surprised. We did run into resistance yesterday at 41.75. So a move above 41.75 would be significant. US dollar at the high.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a week. My dad was charging $500. He didn't want to do that. I'm proud of the price he was charging. My dad instilled in me, always put people before. Be proud of offering a good product at fair price. I think he'd be extremely proud of me.
There's no place like the New York Stock Exchange. We got you covered, the biggest stocks, the biggest trends, all the market news. The watch list with me, Hope Reading, 2 p.m. Eastern. I'm loving it. A fresh take on the hottest trends in the market.
All right, Tesla trying to turn, just dipped into the red. Tesla. Be nice to see a red dog reversal, but inside day for now, Tesla hanging out at 191. Yesterday at the low, and today we're at 197.32, trying to turn the corner.
Fast market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Yeah, we are seeing the share down about 5.4%. Now, they actually did have some pretty good earnings when they reported for this particular quarter. They did beat on the top line and bottom line here. Adjusted earnings per share came in at $5.52 versus the estimate of $4.77. And we continue to see their ability to utilize their pricing power in order to try to push top line growth. But, Nicole, you are correct. We are starting to see some softening.
All right, seeing some.
Especially when it comes to some of these industrial goods. Look at the Asia Pacific machine sales; those are actually down 14% on a year-over-year basis. In Latin America, we actually saw those retail sales down around 5% on a year-over-year basis. I think the story is very key here when we're talking about Caterpillar. When we came out of the pandemic, there was a huge surge when it came to their products, when it comes to not only farming equipment but also industrial equipment. And a lot of their consumers or their customers drew down their inventory. So there's this huge backlog as you were talking about. And now that backlog is starting to ease up a little bit as the supply chains are coming back online. And now you're seeing their consumers are really starting to hold off on making new orders. So we're kind of seeing this ebb and flow when it comes to supply and demand. And that's what's being reflected in these earnings. Unfortunately, we are seeing it down in the session here today. Hopefully, we may be able to catch a bid as this is a key area of support for the stock over the last year.
Okay, thank you for that. I appreciate that. Look, big name today. A different story with an up arrow, and that's Arista Networks. Tell me a little bit about this and the AI theme too.
Yeah, we're seeing these shares up around 12% at this point in time. Now, this is actually a little bit of a different story when it comes to supply and demand. We actually did see the supply chain starting to ease over the last 6 months when it comes to the networking side of their business, and that's why we are now seeing and realizing the revenue potential for this company. So they did beat both on the top and bottom line. They did provide guidance that smashed the street's expectations. They do not see any type of softening when it comes to enterprise spend, and they're able to expand their software side of their business by utilizing and leveraging AI, as well as expanding their cloud offering for AI applications as well. So this is a really good report. We've seen some mixed reports when it comes to some of these network providers, especially the equipment providers here within the networking space. But once again, we're starting to see the supply chain easing. They're now able to.
All right, so that's
projects that have been on back for the last year and a half, and that's what's really driving the shares to the upside today. A bright spot in the tech space as we've seen a mixed.
So SoFi reported a loss of 3 cents, but it was estimated to lose 7 cents. So they beat by 4 cents. Company beat expectations by 40%, while revenue grew 15.73%. That's SoFi. Looking for SoFi to get some sort of traction. It's been hanging out down here. SoFi. Wonder what a butterfly looks like on SoFi. Butterfly.
So let's talk about what this executive order says and what it doesn't say. So first of all, it says that U.S. is the most powerful AI country in the world, and we want to keep it that way. We will support the industry, but we will also check on the industry. What it also says is that we want equality, we want privacy, we don't want disinformation, we don't want bias. So they laid out their priorities. Now let's talk about what they didn't say. They didn't go into a bidding war on who can be tougher on AI compared to Europe, for instance. That's extremely good for everyone. They also didn't say how this regulation is going to be implemented, but they did say that they're going to leave it for the local agencies to deal with it, which are going to know better anyway. And now the last thing that they didn't say is how are we addressing existential threat and global coordination. But Vice President Harris today is in the UK talking about these things. Right. So generally for the industry, very good initiative.
Yeah, she's been meeting with foreign and industry leaders in London, to your point, and actually announcing a $200 million AI investment. And this is coming from private foundations and AI protections for consumers.
All right, S&P 4,200 seems like not probable at the moment. I'm looking at iron condors. Let's see. The Doji Day.
The experts of AI, this process is going to be made simpler. They're also saying that we're going to check on companies that have the most powerful AI models, but that's what these companies were, quite frankly, asking anyway, so they're okay.
What companies, in your opinion, have the most powerful AI models?
All right, can we blast higher? Feels like we're going to push higher, doesn't it? It does. Bitcoin's still sitting here going nowhere. NVIDIA, after a big move lower, NVIDIA grinding higher. Hammer showing up on NVIDIA's daily chart. Some people will try to play that.
other companies that you think are really doing exceptionally well?
We have NVIDIA right now, and I checked the stock this morning. It is inching upwards. I think this executive order is going to influence that as well. We have Google, we have Facebook, of course, which has developed their own models. So these are the big players.
You know, it sets the standard for testing, and this is one of the things that they're going for. I mentioned bread testing, and they're using laws from 1950, then we had the coronavirus pandemic, and things have to be.
What's Nike doing? I'd like to see Nike follow through. Coinbase is up $2. Coinbase is hanging out. Could be that Coinbase is seeing money coming in anticipation of a move higher in Bitcoin. So if you think about it, Coinbase will be the beneficiary, one of the beneficiaries of one of those spot Bitcoin ETFs getting approved. TLT is starting to turn. TLT dropped off a little bit there. Now starting to bounce at 84.50. Coinbase, though, many people are starting to realize that you don't have to have $35,000 to invest in one Bitcoin. You can buy increments, small increments, and many people are opening Coinbase accounts. People that I've talked to, realizing they can buy $100 increments, for example, and have a Bitcoin position. I'm not into altcoins, ETHE. The only other one I'd be interested in is Ethereum. That's looking pretty bullish. ETHE is looking pretty bullish.
We're doing is we're using AI to negotiate supplier deals for very large enterprises like Walmart and Merce. Now, the procurement teams have been cut down so thin that they can barely negotiate the strategic deals. We're negotiating everything else that people were not dealing with anyway. And this is what the promise of AI should be. It should bring in superhuman capabilities, but not replace people. And this is what we're doing.
Yeah, it's great to see you. Thank you so much. Martin Brand, co-founder.
All right, so we're just jockeying around between 4165 and 4175. We have a doji. If you look at the daily, S&P daily, yeah, it should be a doji, I would imagine. S&P. Yeah, so we got a doji spinning top 4165, 4175, just in a tight range.
Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support secure your financial. That means about for my community and for every community.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Then watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Then watch the market with the Schwab Network. At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. download the Swap Network app and join in on the latest market trends.
Oh boy, S&P. We got to get above this 4175. We're just chopping around. What time is it? 11:45? Okay. What do I want to do here? I want to check out. Let me just check something here. Let me look at Fastgrass, Chewy. Chewy. Earnings in a month. Projected to grow.
They actually spun up here their truck brokerage business. This was actually in late 2022, and I think this is one of the reasons why the stock is actually higher. If you look at it on a year-to-date basis, it's up about 140%, which is pretty remarkable, outpacing some of their peers, which include Saia, Old Dominion Freight Lines. But also, if you look at the transports have been down significantly since July. And it looks like just on a year-to-date basis, the transports, looking at the Dow, ETF is essentially flat. So we've actually seen a complete reverse of the transport, but that hasn't really been the case for XPO Logistics, which seems to have been outpacing the overall market as well as the transports in general. But I think if you look at the report, aside from the demands in trucking and, of course, the last mile delivery and less than truckload delivery, the report was actually really good considering they spun off their truck brokerage business. They reported 88 cents in adjusted earnings, beating the estimates of 64 cents by 24 cents. Now, those numbers were down because of the spinoff, but if you look at their sales, which included the spinoff, organically speaking, they actually had a growth of about 1.8%. But if you delve into their operating earnings, they actually improved it by 6% on sales, which were, again, less than 2%. So what we actually see is quite a bit of efficiency gains because of the spinoff. And I think this is why the stock has been rewarded this year, as well as the fact that we know that last mile delivery has been concentrated in terms of market share. It's becoming more or less competitive as more and more larger companies like XPO are gaining market share. And I think this is also part and parcel of the reasons why we're seeing some analyst upgrades. For instance, UBS moved their target from 83 to 104. They maintain a buy, as well as BMO Capital increasing their respective target.
All right, what's Amazon doing? Amazon. Yeah, Amazon not doing much today. All right, Chewy pushing hard. Chewy having a pretty good day.
Post-earnings, it did break out of a trading range on the high end. If you go back and look early October, it was at $80. So I'm going to use the trading range analogy. You're either in a trend or a trading range, and so we're still in trading range. So we're going to trade that way. But on the downside, if you look at the bottom of that level, it's around $65 or so going back about 5 months. So what we're going to do is structure the credit combo, an iron condor. We're going to slightly skew it so we have more flexibility to the upside. So we're going to go through December, about 46 days to expiry, and we're going to sell an 85.90 call spread. Now, that's above that trading range, but also quite a bit above the current price by about $8. And below the current price, we're going to sell a 70.65 put spread. And that gives us, again, about $7 to the downside, or about 10%. So altogether, you can sell us for about $2 a share in credit, or $200 a contract. So the whole objective in this trade is, ideally, we'd like to see the stock remain below the break-even levels of 87 on the upside and 68 on the downside. And that gives us about 13% flexibility in case the stock does make that move higher, or about 10% to the downside. So we really just want the stock to stay within these ranges of those short strikes, which ideally is 85 and 70. So looking at the stock, looking at market conditions, we may end up seeing just that happen.
George Sillis, thank you for today's Disruptor, and always we appreciate it. Thank you. Coming up next, our panel is ready to look at the payment space, names like Global Payments up over 1% after its quarterly report. Today, it's not PayPal or Block leading those movers. So we'll dive into the earnings report of GPN and more.
dad was a hard worker. He used to do side jobs, installing elevators, charging something $100 a year.
All right, Chewy having a pretty decent day. Looks like institutions buying, pulling away from VWAP. It has shown a flip to making a profit in 2023, 2024, rising a bit, then 2025. So I'm going to post this here, Chewy.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Swap Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Chewy, Cocoa Pop. All right, so S&P, we're just chopping around between 41.65 and 41.75. We'd like to see options building at higher strikes and for price to get above. Until then, we're just in a doji pattern. 1.9 and growing, 1.9 on the NYSE, 1.36 on the NASDAQ. NASDAQ is basically 1-to-1, 1.36, whereas the NYSE is just shy of 2-to-1. Tick cumulative is rising. That's a good sign.
Yeah, certainly what you want to see, right? We had an acceleration of revenue growth in the third quarter from the second up to 9% from 7%. We had they've added some synergies for the acquisition they made earlier this year, $10 million more for that. They guided the EPS slightly higher, so kind of exactly what you like to see. Margin trends improving, and I think the stock is at a great entry point here. It's sort of defying the trends that the stock price that we've seen. Again, the accelerating growth, great secular tailwinds, still decent consumer spending. Stock trading at 13 times earnings. It's that's fairly cheap.
Yeah, Moshi Patrick, your thoughts?
I think it's more about visibility and durability, especially under a scenario of an economic downturn. The company has a two-sided platform, one servicing merchants. Half of the volumes there is generated from non-discretionary purchases. That's a big deal. And then if you look at the issuer solutions business, I would say that 85% of that business is recurring. So I think that's really going to be the name of the game the next 6-12 months, especially if we're headed towards some sort of economic downturn. And that visibility.
I wanted to ask you, Moshi Patrick, I'll start with you. I mean, you have the outperform rating here on global payments, and this stock.
Okay, so we got a lot of earnings out tonight. After the close tonight, some of the big ones, AMD. AMD's reporting tonight. It's in a descending triangle pattern. That tends to be bearish. Be nice to see AMD beat and raise. I don't see that happening. Would like to hear the CEO talk about AI, their new AI chips, plural, I guess. How they're positioning there.
This stream is sponsored by TickStrike.
Global specifically has a set of software solutions that it cross-sells to its merchants. So it's not dependent only on that.
Caesar's reporting. Caesar's reporting as well. AMD is a big one. AMD.
Sure. Well, I think all these names have kind of gotten tainted maybe by the same brushstroke here, which is that fintech at large had a phenomenal run right during the pandemic and kind of pushed the volumes forward by several years, and now they're paying for it with a bit lighter growth. And I agree, yeah, the outlook is for some slowing in the economy and consumer spending. But these names, and we have buys as well on Fiserv and Visa, MasterCard. I think that the long term here is they just have a terrific secular tailwind, right? We have a lot of still migration from cash and checks over to digital payments, greater merchant acceptance across the landscape, including of lower dollar amounts. We can charge 50 cents or a dollar at this point, where we couldn't do increased use of cards for convenience, safety, to take advantage of rewards programs. So I think that's a long number of growth ahead, and that's why we like the payment space broadly.
All right. Well, I'm out of time. Thumbs up, thumbs down on Block, gentlemen. We'll have Square on Thursday. Block. Anybody like this one or not so much?
We've had a neutral rating on that stock probably for some time, Alan. And the biggest issue here is that we've seen a significant moderation in growth for the merchants business. Some of it is competitive kind of related, and some of it is execution related. And even Cash App is not giving you that growth that you've seen in the past. And finally, the company just does not have any gap earnings.
Let's leave it right there. Merchant Catcher, Redbud Securities, Stephen Digger, Argus Research. Thank you both very, very much. Appreciate it. That's going to do it for us here on Trading 360. I'm Nick Lady. Thanks for being with me every single day, 11 a.m. to 2 p.m. I'll see you at 2 p.m. for the watch list. Continue right here. Fast Market is next.
I remember when I first started. I would watch the client. They're not nervous. Financially, I'm like in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market. Weekdays at noon on the Schwab Network. Cut the cord on the way you get market news. It's Market on Close. The biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
All right, Chewy continuation. There goes the S&P. All right, we're going to break through 41.75. It looks like we tapped it 1, 2, looks like three times. S&P trying to push through, break on through to the other side. S&P All right, 41.75.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her. The client won't care how much we know until they know how much you care. Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great show for you today, including discussions and option strategy in AMD, which has pulled back about 6% so far this month into their earnings, and First Solar, which has fallen 15% this month into their quarterly report after the closing bell. And like Foley will break down consumer sentiment data on Wayfair, which has dumped.
All right, it's 12 o'clock. 12 o'clock. All right, let me shift gears here and put on halftime report. See what these guys are talking about.
25, maybe 30% of this.
All right, AMD, talking AMD earnings.
When I say this market, understand something. The market for AI chips could be literally $150 billion if you listen to what Intel says, what Qualcomm says, not just AMD's opinion. So I think that they have a shot at this. Tonight's a very big moment. They're going to talk about the launch, which happens this quarter. There are 2 types of chips for AI. It's very important. I'll finish with this. 2 types of chips for AI. Training. NVIDIA has 90% of the market for training. That's how they teach these systems how to operate. The other market, arguably the more important market longer term, is inference. AMD's architecture is specifically geared toward capturing meaningful share in inference. Inference is like when you go on a large language model, you post a query, that's how it responds on an ongoing basis. So I think AMD is walking through the door of becoming a serious AI player. The stock is down from 158 here in the mid-90s. I have a small position. We'll see what happens if I'm able to add to it. But I wanted to make sure I was in before they came out and said anything that could meaningfully move the stock.
Yeah, I mean, it's been dicey lately a bit for the SMH and for the chips.
Okay.
You know, NVIDIA is barely above $400. It's the most loved, you could argue, of all of the names, even though I know it's not the most loved for you.
Mm-hmm.
That's where Broadcom comes in, some of the others, obviously. But Jonathan Krinsky today says in a note, come at the king, you best not miss. Okay, he's talking about NVIDIA breaking support and suggests at least 10% more downside is ahead. Now, I know because it's not yours, you may not have a specific opinion on NVIDIA, but the space itself can't afford, I'm saying, to have an AMD miss today and an NVIDIA break down another 10%.
Well,
Because a lot of other names are going to go down with it today.
of course, and that's where your opportunity is going to be. One thing that we've heard from a lot of technology companies is that the PC market is actually bottoming. We heard that from IBM last week. And I do think that we're also hearing wafer fab equipment, the end market is bottoming. We've heard from Lam Research. They actually increased their guidance twice so far. Stock is still down a lot from a year ago. So I do think you're going to be able to pick your spots. I think Broadcom is getting wrapped up in the whole VMware thing. Let that pass. If it doesn't go through, they're going to buy back a ton of stock. If it does go through, 55% of their revenues is going to be recurring. So I think there are opportunities. But you asked at the top of the show if we think that there's a rally into the end of the year. I absolutely do. I actually think the sentiment is really washed out right here. Whether you're looking at the S&P oscillator, whether you're looking at the fear and greed,
I like Stephanie.
look at Josh's RSI stuff.
She's so consistent.
Really pointing to very
Stephanie is so consistent.
sentiment, and that's number one.
She didn't take any shit from anybody. I like that. I like Steph.
We're basically done. You're in the 9th inning, and we're not going into extra innings because I know you were going to ask me that. Peak rates, I do think that we are seeing peak rates. Look at
look at the bond market, right? Look at GDP and PCE and ECI today, and it's kind of like in a trading range right now. It's not exploding higher. So I think you're starting to see a peak in rates as well. You add it all up, earnings are coming in better than expected. Yeah, 2.5%, 3% isn't something to get so excited about, but it's certainly better than negative. And that's what people were expecting heading into the quarter.
So, Jimmy, I mean, it's going to depend a lot on rates in terms of late year rally. You got the Fed meeting beginning today, nothing really expected. There's your market picture, 10 years at 487, as we said. Consumer confidence remains strong, 102.6 versus 100, the estimate. Middle East oil, yes, it's a wild card, but as World Bank suggests, you get a deeper escalation of the war over there, you could get oil to 157. Steph's got some moves we'll talk about in a minute. The size of that.
Yeah, and let's just start where you ended on oil. You could go to 150, and it's the same discussion that we were having a year and a half ago when Russia invaded Ukraine, and a lot of really smart oil analysts were saying, we're going to 200. Not we may go to 200, we're going to 200. That turned out not to be the case. So if it worsens, that's bad for stocks, it being the Middle East. Let's, for a second here, assume that it stabilizes at some point soon. I think the bigger point here, and Steph was really making this, is that this U.S. economy is a lot stronger than has been or is being given credit to it. And the upshot of that is the cyclical sectors of the market have just stunk for a long period of time. Scott, a lot of times we're on specific names. And I think that is exactly the right word to use for everybody listening. It is a question of patience, all right? It's, in my opinion, the biggest virtue in the stock market. And I think they're soon going to be paid off because of what Steph just said and what I've been saying all along, which is that these cyclical companies continue to outperform, out-earn what their share prices are reflecting, and it's showing up in their balance sheets. Now, just to sum this up, what I'm looking for this week is the labor market report. Because to your point, Scott, about interest rates, yes, interest rates are what matters right now, and the flow of fund into bonds. So you're looking for that Friday report to show ameliorating average hourly earnings wage growth and uptick in labor force participation rate. If you get that, it's going to back the Fed off even more. That's what I'm looking for. Steph, in terms of
back the Fed off.
I want to get through some of these before we bring in our headline guest today. You trimmed Chevron, you added to SLB. Can you tell me why you did those two things? And Chevron has not traded well recently, as you know.
No, it hasn't, and it was a terrible quarter. And I'm always looking for good quarters where stocks sell off. This was a terrible quarter, and the stock sold off, appropriately so. And that is because they missed earnings and they missed free cash flow, and they actually are buying back less stock than they actually guided to, and they guided for less buybacks as well. The whole reason I owned this is because they were buying back stock, and they were actually increasing the dividend while they were increasing CapEx. And now all of a sudden you do 3 deals and you're short on cash flow. So to me, I much prefer Schlumberger, which guided to about mid-20s in margins, EBIT margins, and EBITDA growth in general. And they have pricing power and technology, and I think that there's much more upside. And if in fact oil prices do go higher, this is much more levered to the underlying commodity. So you get more juice if it goes higher. If it goes lower, it's going to also have a lot of juice, but I think oil prices stay about this level, and they're printing money.
Energy worst sector month to date in what's been a bad month. I mean, energy's down, 6.5% almost on the month. So you're going to, no one wants a spike to the degree of $150. That's going to have broad implications on a lot of stuff. It means that the Middle East is going real bad, and that you get a spike, and that has implications in and of itself. Let's bring in our headliner now. Just ranked #1 in both portfolio strategy and quantitative research this year by Institutional Investor, inducted into their All-America Hall of Fame list. He is Dubravko Lakos. He's the Chief Global Equity Strategist at J.P. Morgan. Congratulations.
Thank you.
Good to have you back.
Thanks for having me.
All right, so by virtue of these
Dubravko Lakos. That's a pretty cool name.
You heard Jim suggest that the economy is doing much better than people think it is. You're one of the doubters, in some respects, about where the economy is going. So let's match this up.
Yeah, absolutely. I am one of the doubters. I've been a doubter even the last time I was here in the set when the market was higher. So for us, macro is really what the big headline the markets are facing. Higher for longer, cost of capital being elevated is something that we've been talking about since February. Liquidity is getting sucked out of the system as well, which I think is generally a pretty big and important headwind. Obviously, there's geopolitics that we can talk about, but that's also an additional tail risk that's very hard to sort of handicap. Fundamentals, to your point, I agree. I think I see them slowing. They're just not collapsing. And the word that I would use on the fundamental side is we're seeing increasing bifurcation on the fundamental side.
Alrighty.
The crux of your argument is built around the idea that the
Amazon. Need a bounce in Amazon. All right, we're still looking. Tick cumulative is kind of sneaking up. Tick cumulative is sneaking up.
Because of the unprecedented injection that we got during COVID, and because of a relatively healthy starting point for things like balance sheet. Jimmy, I want you to respond, and then I want Steph to also, because you guys have a more sanguine view on where we are relative to Dubravko and some of his colleagues over at JPM.
Okay, Dubravko, always good to see you. Thank you. Look, for the last year and a half, I think it was great. The economy's done a lot better than expected. And let's just chalk that up to the lag effects being a lot more lag than any of us expected. All right, let's just say I give you that. We can disagree about the path going forward, but these companies that during this extremely long lag time have out-earned, and cleaned up their balance sheet, doesn't that actually perversely extend the lag further from the point of view if they have less debt to refinance, right? I mean, that's what we're worried about, at least at the corporate side, is they're going to have to refinance at these much higher rates, except now there's a lot less debt because they've paid down a lot with all the extra cash flow. Is that right?
Yeah, I think that's broadly right, but I think that's just one part of the picture. I think for the S&P 500, for the large cap complex, balance sheets are in a pretty good spot. Rates going higher is a headwind, but just a gradual headwind. The problem is, I think, as you move down the cap spectrum, you look at mid cap, small cap, the entire private sector. There's a more significant portion of that that's variable, that's more sensitive, if you will. Balance sheet is more sensitive to cost of capital, and everything that's happened so far during this fall, an increasing headwind from cost of capital, has happened under a relatively healthy top line demand type scenario, where pricing power has been strong and where a lot of corporates have been basically growing not organically but just through price.
Dubravko, forgive me. Why aren't companies laying off people?
I think that's the lag effect. I think that's a risk that we're facing in 2024. I'll give you one statistic. S&P 500, if I'm not mistaken, which is right, the Fortune's balance sheet employs only, I believe, 12, 13 million people. If you look at mid-cap, small-cap, private sector, you're looking closer to 60, 70 million. And that's the area that's more vulnerable to the macro.
That's sort of bear market already, though. Like what if a lot of things go through and priced in? The Russell is not the S&P.
I think things are definitely getting priced in, but to me, that's a worrying sign. To me, that's a sign that the market is telling you things are slowing down. We're hanging on to the Magnificent 7, Magnificent 11. All the returns this year are coming from basically 7 stocks. So that's telling us. So I think, yeah, we better hope that the NVIDIAs of the world keep just really rolling in very, very strong numbers. The second that goes, what do you hang on?
Has the consumer and the strength in the consumer surprised you? Because it's actually, they've been resilient.
All right, so 4175 is formidable. We can't seem to get through this. It's not as big as you would imagine, the way we keep bouncing and hitting our head on that level. All right, so fading, 4175. NVIDIA is still off 10 bucks. Apple is off 70 cents. Trying to get to green on the day. Apple, Snowflake. Snowflake is green, 60 cents. Not much going on today. Let's take one more look at the New York FANG index. New York's FANG index. Okay, so it would be nice to see the day end with a very long wick underneath price and a hammer, a close in the upper half of the daily range. That would require more buying on the FANG stocks. Right now, all we see is, once again, only Tesla, Snowflake, green for now. And they're up 50 cents, 60 cents, basically.
That's when we're basically saying 12% earnings growth for next year, which is the expectation, and a multiple of 18. I just think very hard to get excited about.
That's why we have such a bifurcated view, Josh, about where the market is going from here.
Okay, so we have to get through this 41.75. We're not going anywhere, and stocks probably won't either unless we see a bounce. Nothing yet.
That's the greatest issue that we have to get an answer to before we can have a real comprehensive view about where stocks go from here.
In other words, can the deceleration in growth, is there enough time for this lower income consumer to hang on until the deceleration in growth stops and we're into a new cycle? And you sound like the answer is no, and I'm inclined to agree with you. But here's the get out of jail free card that might work out this time. If we do get down to 3% inflation, and then 2.8, and then 2.5, and that tremendous pressure on the lower income.
Come on, SPY. Let's do this. All right, so they're going to pull it back down. All right. Rejected at 41.75. Right back down through 41.65, so that's not nice. 41.50 is the next level. 41.50 is the next level. We have 41.50 down here.
That's like I know it's maybe not the most highly likely scenario, but it is a likely scenario, and that might force you to change your mind. I don't know if and when.
Yeah, so, I mean, it's certainly plausible. I mean, all of these things that we talk about, that we forecast, it has a big fat stand there around it. It's very hard to start saying things with conviction. We're in unique times. If I had to pick a side, you know the side that I stand on, putting different sort of probabilities together. If you get some form of significant, let's say, productivity boom in this economy, and maybe AI can drive it, or maybe not. But if you can
okay, do we have an intermediate level? Let's go take a look real quick.
But Jimmy and Edgar Denny, people who are more positive about the market, do think you're going to get that, and it's going to offset some of the negatives that are predicted to occur. Let me ask you this.
41.
The price target at the end of this year is roughly where we are now. So you're looking
41.75. 41.60. 41.70. 41.60 seems to be a big area too. 41.60. All right, let me put 41.60 on here. 41. That's pretty close by. 41.60.
So I think the market and risky assets in the recent weeks, even maybe recent month or two or three, have been largely trading off of two key risk factors. What's happening with rates on the back end, and obviously the situation in geopolitics, Middle East, oil that you discussed earlier. Fed may be done very well, but the back end of the curve, everything we've seen the last 2 months, 3 months keeps hiking for the Fed. And it's largely, I would say, for supply reasons, meaning the discount rate keeps getting increased for corporates, for the consumer, without necessarily
41.65.
So maybe that is done, but if the 10-year, the 30-year goes back above 5 to 5,
ATGL. There's an IPO. ATGL.
that I think creates a very, very tricky backdrop. Well, of course, but what's the likelihood of that actually happening? Well, I think a lot of it is supply. A lot of it is driven by the amount of debt supply that's coming online to finance the deficit.
Well, we'll learn more on Wednesday.
We'll learn more on Wednesday.
There was no big shock yesterday in the preliminary announcement, if you want to call it that.
Fair. $5.5 trillion worth of balance sheets from the big five central banks have come off in the last 6 quarters. Central bankers are not talking about reversing QT anytime soon. So again, that's an additional headwind. You have China, the Japan factor, which is also a marginal headwind. So let's hope that yields sort of stabilize here. But if they don't, again, that's something we have to keep working.
What do you think earnings are going to be for next year? You said 12% is too high. So where do you think they come in?
All right, S&P.
I don't say we have a high conviction because there's just so many things that can happen between now and then. I would say 230 with a downside risk.
Let me ask you this. I want to go back to rates for a second before we move off that. There's, the scenario in which Mr. Diamond has said is it's a rather hyperbolic, prediction. Not even necessarily a prediction. It's just a what if. What if rates are done going? You have to change your view if that's the case.
So first of all, I think a lot of people were disagreeing with this view of higher rates, but it turns out it's been spot on. So if rates are done, let's say,
Oh, it's been right, but I'm saying 6 or 7%.
no, but that's like this scenario we're saying on the upper end, sort of. But I'm just saying, if let's say rates are done, and let's say pause here, I do think that in the very, very short term, we easily could get a tactical short squeeze, short cover. Would I chase it? I would not chase it. Would I fade it? I would fade it and perhaps re-emphasize the short side of the trade. So I think you're now, given that the market is corrected, we're back at February levels. We're sort of at our price target. This moment, I don't have very high conviction that we necessarily have to keep going lower. But as I think about 2024, I just don't like the picture.
Let me ask you about mega cap then, since we really haven't focused that much on it. You cited the fact that it's been a very small group of stocks, which everybody at this point knows about. Is there any reason to believe that trade's gonna turn south? Now it's had a rough 3 months. I'll give you that.
But the minute that those stocks are deemed to be cheap enough, which started to happen later, last week,
all had good earnings.
why wouldn't money continue to go there?
No, it's possible that money could go into that.
It's probable, not possible, but probable.
I think earnings need to be very solid.
But they were, weren't they?
I think we can. I mean, you can talk about Microsoft versus a Google, Apple, which is showing again. I'm saying very consensus things. Softness in top line that continues to decelerate. I think numbers have to keep coming in strong because it's a very, very, very crowded trade. Everybody's hiding there, and concentration in the market is at the highest point in 50, 60 years. So yes, could things become even more positive? They could, but what could happen also is more money goes into NVIDIA or into the Magnificent Seven, and more money comes out of the other 490 stocks.
Okay, is Bitcoin going to bounce or what? It's just chopping around and consolidating in the upper part of last week's candle. All right, so how many times we're going to test this 4175? It's not a big area. You would think it was 4200 the way we keep bouncing again. Chewy's about to break out here. Chewy about to go. Chewy is about to go. Chewy, Cocoa Pop.
Defensive healthcare, maybe even some pockets of staples that are coming out. Why? Because they're going to hit hard as the back end has moved higher. If the back end keeps moving even higher, I think you have to start pricing in a higher chance of prices and recession, in which case you want to buy a more defensive exposure. If rates stabilize or move lower, as perhaps another scenario suggested, bond proxies catch a bid. So I would be favoring higher quality, more recession-proof type areas. Another thing that comes to mind is dividend aristocrats, for instance, that have also been disfavored very much so over the course of this year.
That was fun. I appreciate you being here.
Thanks
The Hall of Famer. Congratulations again. That's Dubravka Lekos, JP Morgan's Chief Global Equity Strategist,
Joining us here at Post 9. We'll talk to you soon. We're getting some more news out of the Sam Bankman-Fried trial, a few blocks from where we are now. Kate Rooney live outside the courthouse. Kate?
Hey, Scott. So Sam Bankman-Fried has wrapped up his testimony. The defense has officially rested its case. The indicted crypto founder is off the stand. The jury was actually...
Chewy looking for the breakout.
So they're going to have a charging...
Watch Chewy here. Looks like it's trying to take out the high of the day. High of the day is over here. 1950.
Questioning his cozy relationship with the Bahamian prime minister. They asked if he has proposed at any point paying off the Bahamas debt, more than $11 billion worth of national debt. He responded that he didn't remember discussing that. He was asked about the prime minister visiting Miami.
Sam Bankman-Fried says he doesn't remember offering to pay off Bahamas' $11 billion national debt. Maybe he was joking. Looking back on it, it's probably not the smartest thing to say, but
from the defense attorneys. They tried to clarify what was talked about yesterday. They revisited some of the articles that they mentioned. Bankman-Fried estimated he gave around 60 interviews right after the collapse of that crypto exchange. He said he doesn't recall every statement that he made to journalists. As for the regulators comment that was mentioned yesterday, it was an internal message with the journalist. He said that he was frustrated with regulators and felt like some of the work that he had done might have actually encouraged bad regulation. Tried to clarify it there. On Alameda's $65 billion line of credit, Bank of the Greek said that was the maximum they could take out, but he said it was never nearly that amount. It was closer to $2 billion, according to his testimony. And then finally, he was questioned on private jet use. That was talked about this morning. He explained that he thought it was a valid business expense as a CEO. He talked about some travel that he did from the Bahamas to D.C. Prosecutors will begin their rebuttal. We expect that to happen next. But again, they are having this charging conference, and the jury's going to head home, Scott. Bring it up. Any updates, though? Back to you.
Yep, no, you will. Kate, thanks so much. Kate Rooney outside the courthouse, Lower Manhattan. Up next, our chart of the day. One industrial stock under some pressure today on a weak China outlook. Committee member Kevin Simpson, he told us last week he'd add to his position on a pullback. Well, he's getting it. So is he doing it? He'll tell us next.
We keep banging up again. There goes Chewy. Chewy's trying to go. Chewy's trying to go. You know what I was looking at the other day? I keep forgetting to look at MSTR, MicroStrategy. Basing here. Looks like it wants to go. Looks like it's going to go. I just can imagine MSTR, Frano. I believe you're in this, right? Knee. Chewy. All right, so S&P, we keep banging against this level. Maybe we take it out. Doesn't seem like there's a whole lot here.
That's after earnings. Company issuing an underwhelming sales outlook for the fourth quarter. China is a big story here. Said it expects continued weakness in demand from China. China manufacturing PMIs you might have seen below 50. Worst month since June of 22 for Cat. Kevin Simpson joins us now. So I appreciate you coming back on. So you bought more of the stock on Friday, right? What you told us. You said if it goes down again, you're going to buy more. What's the update?
Yeah, the real thesis was to hold off and wait for earnings because we knew if they didn't blow it out of the water on their forecast, their margins, we'd see the stock come down. I think it's a little bit of an overreaction. We have a trade teed up, Scott, to add to the position today. I never try to pick a bottom, but our thesis is if we can let some of the sellers get out of the way, we will be adding to the position here. And it's a lot different when I look through the numbers than what we saw with UPS. Because if you remember last week, UPS margins were down from 13% to 8%, and that caused us to remove the position. I mean, that's just too unhealthy for the short term. The numbers here certainly are down slightly. Yes, there's headwinds in China. The recession isn't great for an industrial for sure. But looking longer term, what we want to make sure we own are companies that are not dependent upon capital markets. This company can generate enough cash flow to get through an economic slowdown, no doubt. And we still think the infrastructure bill will play out in a multi-year phase for Caterpillar. So we won't have a full position at the end of the day. There's definitely headwinds, but I'm adding to it today, and we'll continue to do so on pullbacks.
I just don't want to gloss over. I mean, you say, not dependent on capital markets, but is dependent on emerging markets. The China lack of recovery, lackluster, probably a better way to say it. That's a real problem, though, isn't it?
Yeah, but I think that's been expected, and that's kind of been priced into the stock. If we look back just the past 2 weeks, which is what got us interested in it, there was a lot of pullbacks after that Chinese CPI. Their backlogs are down. So if you look at headlines, you're going to see a lot of reports saying that their backlog is down a lot. But I looked at it a little bit more closely. It's really down like 3%. The number's big, but you're talking about a company that's such market. You're talking about declines of $2 billion year over year, and that's a big number. But it's $2 billion on 60 to 65 billion. The other challenge is inflation. Because some of these numbers, because the top and line for the quarter looked amazing, but some of that's price appreciation, and you can't raise prices to perpetuity. So yes, this is a challenged environment over the short term. We're looking
Netflix on the move. Netflix starting to move now. Apple turning. All right, so looks like we got some buyers coming in. Okay.
For sure, these are even further removed from that. And as we look out over the next 2 to 3 years,
Netflix.
we're going to build out this position, and I'm not scared by the numbers.
Tesla turning.
You sold Cat about 18 months ago, I think, something like that.
Broadcom, AVGO.
As well, probably on this news.
NVIDIA. All right, NVIDIA.
I mean, it's interesting. It's one or the other. You don't need to own both in your portfolio. I happen to like the ad cycle. They're sold out in terms of equipment for 2023. Farmer income is actually off the charts. Inflation is coming down. So I prefer Deere. It's also down more.
Caterpillar.
So it's underperformed, but it's also a lot.
Okay, Caterpillar, the way I would play this, if you're interested in Caterpillar, I wouldn't be in any kind of hurry. I would wait for a base to form. That way you've got to stop underneath the base, look for a break above the base. It's all about the base.
So you, Jimmy?
Well, this is a case for me, Cat or Deere, where I'm looking at companies that in the current earnings, they're out earning, and their multiples are very cheap. I don't know if Kevin's still online with us, but I'd love to know what Cat's doing with this balance sheet. I'm not the expert on Cat, but again, all these cash flows are coming in. They've got to do something with it. Are they increasing their dividend? Are they paying down debt? Are they buying back shares? Kevin's still there?
Yeah, and historically, this is a company that's increased its dividend at a clip of about 5 to 8% per year for the past 5 years. They have been committed to paying down debt. They're probably in less of a rush to do so because of where their financing is. It's interesting because we do own John Deere. Like Stephanie, we had sold out of Cat also maybe over a year and a half ago. It's just recently that when you're looking at these things coming down, and it goes back, Jimmy, to your thesis of looking at.
Okay, Microsoft's starting to get going here. Maybe that can follow through too. All right, so let's take a look at the New York FANG Index one more time. Okay, so I want to see a wick develop on the bottom of this candle, continue, and close hopefully above yesterday's close. That would be awesome. That'll require all of these 10 stocks, these New York FANG stocks, need all 10 of these, or at least the majority of these. Look for the majority of these to push higher. That would have a positive impact on this chart. Wick is developing. RSI is so-so. MACD is trying to turn. Stochastics is trying to trigger like it did over here. When it triggered last time, we had a nice rally for 2.5 weeks.
favor their financial interests at the expense of the saber will close these loopholes. Well, 40 countries are forming an alliance against paying ransom to cyber criminals. The White House official said the group is working toward eliminating the hackers' funding. The International Counter Ransomware Initiative comes as cyber attacks ramp up around the world. Nearly half of the attacks happen in the U.S., with 2 high-profile companies, MGM Resorts and Clorox, hit last month. And just in time for Halloween, the Massachusetts Witch Hunt Justice Project is looking to persuade the state to reckon with its early history. The group is asking for an apology and to clear the names of all those accused, indicted, or arrested for witchcraft in the 1600s. Scott, back over to you.
All right, thank you, Courtney Reagan. Coming up, our calls of the day, including a big upgrade for a stock both Steph and Jim own. We will detail that when we come back with the Dow down just about 9 points. S&P's a fractional winner. We'll see you in 2 minutes.
All right. We got to get above 41.75. We're just chopping around, moving a bit lower again. Tomorrow we've got a Treasury refunding or Treasury funding. There's many that expect that that's going to be more of an event than Powell speaking. Treasury refunding tomorrow. The issue at hand is that there's so much money that they're spending. All right, we've got a nice little bounce going here. Nice little bounce. There's so much money that needs to be, so much spending that needs to be funded that the government needs to sell more bonds, I guess. Who's going to buy them? China's not buying them. Japan's not buying them. So that's going to be an issue. Okay, and that's a big thing that's going to happen tomorrow. I think it's in the morning. All right. Tick cumulative fast signal just turned back down. Okay, we want to see this move higher. All right, so it was 2-to-1 up buying. Now it's 1.5, 1.6 on the NYSE. We need to see more buying. More buying here. All right. Tonight we've got AMD earnings at 4:15. 4:15. We got AMD earnings. All right, Tesla going here. Tesla looks like it might actually get something going here. Tesla.
Well, I find that kind of easy, and what I like about this analyst is that he's looking long term and not short term. I mean, short term.
Intraday, all the FANG stocks look like they're getting bought off the low.
Guess what? That's going to get worked out. That's what aerospace do, and they're very good engineers at Boeing. When you look past that, there's a ton of free cash flow coming. Look, in summary on this has been one big step back over the last 2 months. The stock going from 240 to 180.
Apple.
I think it sets up for 2 steps forward. I think 270.
Apple pop in here.
For the target, I think it will exceed that in a number of months.
There goes Nvidia. Nvidia is starting to catch a bid. Netflix catching a bid.
That's 10 years worth of visibility. I mean, so if you're thinking about the long game, that's what you have to think about. And as they produce and deliver these aircraft, free cash flow, certainly Jim's point, will be increasing. They have a $10 billion free cash flow guide by 2025. And if they can deliver on increasing this production, they'll be easily surpassing that.
So the other call we wanted to do was Disney. It gets reiterated outperform. The price target gets cut to 100 from 110. Now, Josh, I know you don't own it, but you do have strong opinions about it. I'm wondering if there's a point in this stock, it's about $80, where you say the
Yeah, Target. What's Target doing?
Well, this is one in particular. I walked into that, but this is one in particular that you've had some strong opinions about. But you know, look, the stock is down from a 52-week high of 118 to 81.
I really want to like Disney enough to buy the stock because I really like when an amazing company is at a point in its life cycle where everyone has given up on it. I think we're close. I just think I'm going to get the stock low 70s. It's probably not that big of a deal if I miss it, honestly, because I don't even think the upside is so great. I just want the satisfaction of buying it when it's truly washed out. The problem with Disney is that the news keeps getting worse, and the answers, you have melting iceberg businesses, and the longer that goes on for, the eventual valuation, if you're going to sell something, just goes lower and lower and lower. ESPN is going to be a problem. It's going to continue to be a problem. I don't know what the strategic answer is, but when you look at this report, the analyst makes the case ESPN could have negative operating income within just a few years. Why? NBA contract comes up. They're going to have to pay an ungodly amount of money. Keep in mind who they'll be bidding against, like Apple. Good luck. Have fun with that. They have this lingering problem with some of these businesses like ABC and ESPN, and I don't think reorganizing it is the solution. So I'm watching it. I'm waiting. I think Nelson Peltz coming back, obviously, is a positive development. I also don't think he has the answer to what should be done. So it's a tough stock. I think there's a chance to make money here. I just think you wait.
Jimmy.
Strong opinions from a man known for strong opinions.
No, that was political. No, it's all good. All good. That was well said. And one of the phrasings that you use, I'd like to key on, melting iceberg, okay? That, ice cube, rather. That is what was said about the newspaper industry in the 1990s with the advent of the internet. Guess what? That was right back then. However, to the point that Josh, you're making and others have made about ESPN, the demise of linear, I don't think that Disney is going down the path that the newspapers went down. I think they will monetize ESPN in the same way that they're moving to streaming right now. The Hulu transaction is going to be done by the end of the year. Good. Let's get that done with. I don't know how they'll pay a lot of money. I know, so going right there. Maybe they'll sell the Indian streaming businesses. Maybe they'll sell ABC. Maybe they'll take out debt. I don't know. But the value on what they're buying, $9 to $12 billion is what we're talking about. It's worth a heck of a lot more than that. It is not the linear business. It's wrong to call it a melting ice cube. It's being transformed into a different substance, namely streaming. And it will have value the way the newspapers could not create value when the internet gutted them.
Yeah, but they have a lot of debt. They should be using their cash flow to pay down that debt. That's what they really should do.
They have a lot of debt. You're absolutely
That's why
right.
Steph gave up on it.
Yeah.
One of the reasons you gave up on it.
I understand. You are factually correct. I can't dispute that.
All right, S&P trying to push a bit higher. Trying to give out 41.75. Briefly popped above it. Took out some stops, most likely. 417 SPY looks possible.
What I'm saying to you, and I get your point, it's very well made. Okay, my point is that the
Well, you do dismiss his point, though.
I'm not dismissing it. I'm disagreeing with it. That's a big difference. Okay, what you're saying is the ice cube's going to melt.
Streaming profits from Hulu will never offset. This is a company that had a golden goose. They had 100 million cable subscribers paying $10 a month to ESPN, whether they watched 1 minute of sports or 0 minutes.
ESPN Plus is
It was 100 million cable subs. It's 70. It's going to 50. Everybody knows it. They're going to launch their own over-the-top streaming ESPN standalone thing. I wish them well. I don't know where the pricing will be. I don't know how many subs there will be for that app. But once they shoot that shot, everyone on Wall Street collectively is going to go, okay,
Now what? I don't know the answer.
And that's what makes it so tough. I don't know the answer either, but what I am saying, and I don't know if you get into the low 70s or not. I think you're going to get into it. You're talking about it enough. But what I am saying is this idea that ESPN is a zero. That the analyst said
zero.
Okay. Right. That the analyst said that there might be negative operating income from ESPN. I think that's too draconian. I think that's the analyst community doing what the analyst community does, following a trend. And not and saying this is going to be like Gannett in 1995. I just disagree with it.
Will the price they pay for sports rights go up or down within the next 3 years?
Let's not do the 20 questions. I'm going to agree with what you say.
Well, no, that's the question. Okay, so declining subs, higher price for sports. That's double
Why are you
negative.
thinking about that? Why are you even
You know what I'm short. You know what I'm short.
Are you kidding me?
All right, I'm done with this guy. Up next, Michael Santoli joins us with his midday word. Halftime, we'll be right back. Thank goodness.
All right.
Saw Treasury yields surge to multi-year highs. Major averages are set to close out their third straight losing month in a row, with the S&P 500 down about 2.7%.
Looking for spiders to continue higher.
Look at the four major indices, which continue to chop around the flat level. Benchmark S&P 500 up nearly 0.2%. Dow Jones Industrial Average barely positive there. NASDAQ lagging here today. Some of those big cap tech names struggling in today's session, down slightly. And the Russell 2000 small caps up about 0.9%, leading to the upside, but still down over 7% so far in October. Help me break down this market action. Let's bring it
AMC.
Kevin. Pretty choppy session. Fed meeting starting today.
AMC, nice move on AMC. Wow.
You know, I guess it kind of equates to what we're seeing in the equity market right now. It's just choppy.
I think the most important data that we got overnight was the GDP data, the Eurozone GDP data.
Coming in light.
Disinflation going on in the Eurozone.
Yeah.
And how about this? That was the highly reported number, right? Negative 0.1% for quarter-over-quarter GDP. How about France? Up 0.1%. Italy unchanged 0. Canada unchanged 0. So what's going on?
That's after a 4 handle in our GDP.
Yeah. What is going on with the divergence here in the GDP numbers? So what does that say for what we're doing, what Jerome Powell's doing versus what these other countries are doing? Because it looks like
S&P trying to push through this 4175. All right, AMD, we got earnings tonight. Don't forget AMD. If you're trading AMD, it's near the highs of the day.
Tomorrow is going to be an absolute data dump of information. And the one that might be the most important is one we rarely talk about. And that is the Treasury refunding announcement. So that's going to be,
See, now they're talking about it. Treasury refunding.
what the market's going to do and react to that number.
Focus on here. And again, I think price activity is kind of a reflection of
Come on, S&P, let's go. LETSG, let's run this into evening session. It looks like we're going to go. S&P about to go.
Mike Santoli, our senior markets commentator, is here. You know, the conversation we had at the top of the show with Rothko and, the counter view to some people who are more bullish, just to me is the quintessential argument, Mike, of where the puck is today versus where some.
All right, the dollar rolling over. VIX is dropping off. Crude oil, 82 a barrel. Over the last 3 or 4 days, crude oil's dropped from 86 down to 82. Oh, here we go. Here we go.
Even though it's in the macro data. So I do agree that's where the front lines of the debate lies. Stuff that's cyclical looks cheap if the earnings are coming through, really cheap. If they're not coming through, it's a disaster. I would have told you 2 weeks ago. Whirlpool, dirt cheap. VF Corp, Look at that, low expectations, and then the numbers get cut and they go down. And so it's tough to generalize around whether, in fact, parts of the market have discounted earnings away. I do think there's a lot of opportunity, and the market is attempting in these quiet times for the bond market to differentiate. You know, outside of NVIDIA, semis are up today. I mean, I know that's, you know, a big exception. And you're seeing the banks outperform tech in the last 5 days. So the
Let's go. LATSGO, let's go already. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Halloween, October 31st, Tuesday, 12:50 p.m., 12:50.
Committee member Jenny Harrington owns it. She's going to phone in with a trade update. We'll tell you about it next.
SPY, S&P. If we can look at the volume. Look at the volume here. Your volume's picking up. Volume on the live screen picking up. S&P. If you took 416s or 417s, if we pop through this area, I would just hold on to some of these. Could follow through. Looking good. Volume picking up above 41.75. All right, if we start to push higher, a lot of these puts at the money puts, in the money puts are going to monetize and push this higher. We need to see more calls too, but for now we got a fuel source to push prices higher. Okay, NASDAQ, is that right? Oh, NASDAQ volume is picking up. Okay. NASDAQ was 1-to-1 earlier. Now it's 2-to-1, 1.9. 1.9 to 1. All right, tick units is still rising. Watch your FANG stocks. Those are all rising. Okay. Tesla's up $1.50. It moved about 90 cents from noticing the squeeze starting to pop. 198 ran up to 199. It's 199.06 right now. Tesla. Netflix is still grinding higher. NVIDIA trying to get something going here. Back above 400. 402. 403. Apple trying to go green on the day. Amazon turning.
There they are, down near 13% today. The company withdrawing next year's guidance. They're going to do a $300 million restructuring. Jenny Harrington joins us now to discuss because she owns.
All right, back below 41.75.
We are going to show a 5-year chart, Jenny, because it's down 80% in 5 years. What do you do today with this?
Well, let's remember that as we look at it over 5 years, we only added this a couple months ago, and we added it around $19, with the idea being that it was down so significantly, and the reason it was down so significantly was because their earnings had already come in. They'd already come in from their pandemic high. The stock had gotten trashed. So where do you go today is you kind of go through, the stages of grief. First, you want to throw up in the trash. You want to quit your job. Then you get into self-soothing, look at the rest of the portfolio, see what you've actually done right, settle yourself down. And then you get serious and look at the investment thesis, which for me is always two-pronged because it's an investment income-oriented strategy. So first I look at the income side of the investment thesis. That's ruined. They cut their dividend by 70%. Then I look at the capital appreciation side of the investment thesis, and that's mostly intact. It wasn't really that terrible a quarter. It was just the guidance and the dividend where we had a problem. So earnings were fine. They came in at 63 cents. That's where they were expected. Revenues were $3 billion. And I look at that and I say, okay, even if earnings get hit another 30% from here, so that, by the way, they were supposed to be 210 for this year, for next year. Let's say they come in at $1.50. They come in at $1.50, which is terrible, right? The stock's still trading at $2. The original investment thesis was predicated on a turnaround at Vans. That's still totally intact. And what they're doing now is saying, hey, we're going to take money from the dividend and we're going to aggressively attack this turnaround at Vans faster and with more money than we had expected.
I'm sorry to cut you off because I'm running out of time. The problem with all of this is that it's not going to happen. This is Kramer talking this morning. It's not going to happen overnight, and it's going to be a long-term thing.
Okay, Unilever. Let me just look at Unilever one more time.
Like an original thesis of investment thesis that you thought you had has quickly fallen apart.
Not really. I think in some ways it's sped up, and that's unfortunate for me because they took the dividend income away. Like that part fell apart. But what they're doing with that money is they're trying to turn around Vans faster.
Right, but it's not
Very quiet.
It's not going to happen faster.
But
That's
it was
the whole
never
point.
going to
It's not
happen.
going to
It was
happen
never going to
faster.
happen overnight anyway. You know I'm always super long term. So you have a new CEO, Bracken Darrell. He's clearly kitchen sinking it. He's resetting the base to give himself upside from here. I think it's going to happen faster, but it stinks for right now, and it's really disappointing.
Yeah, I'm sorry that I got to cut you short, Jenny. We'll talk about it more when I see you in person. But thanks for calling in. Tough stock to look at, and I know you're feeling the pain on that, but I appreciate your point of view, and I know our viewers do too. Final trades are next.
VFC Corp, parent to Vans Brands, VFC. That's trading near 15. Wow. S&P trying to follow through. Maybe we get something going here. Volume's picking up. All right, starting to push here. All right. S&P is breaking above 41.75. S&P breaking above 4,200. Next, 41.75. Next level is 4,200 if this continues. Fortinet, seeing some above average volume on Fortinet. Let me go take a look at Fortinet, FTNT. All right, so 175 times normal volume. Sony, S-O-N-Y, Sony Group, seeing high relative volume. Play, Dave & Buster's, seeing some high volume. CYRX. Okay. Fortinet, FTNT. Okay, ArcelorMittal, MT. And excuse me, DS. Nerd Wallet, NRDS. Check out it, Nerd Wallet.
The one that got away, take a look at Arista Networks, ANET. What a report. This is another AI play. I sold it at 185, so you're free to watch this thing go right to 250 without me. All right, Steph.
GE Healthcare, really good quarter, actually, and they saw operating margins expand, which is exactly what we wanted to see. Stock's up 4%, but down 27% from its highs. I think it's a buy.
Why we got Cleveland Cliffs up there, Farmer Jim?
Because they raised prices, third time in a month that they've raised prices. You got prices going up, volumes are going up with the end of the UAW strike.
Shorts covering on Nerd Wallet. That one's flying here. Look at Nerd Wallet in RDS.
Thank you very much, Scott. Welcome to the exchange, everybody. I'm Dominic Chu in for Kelly Evans today, and here is what's ahead on the show. Just over 24 hours until the Fed's decision on interest rates this time around. So will the committee hold steady in back-to-back meetings for the first time since early last year? We'll look ahead to tomorrow and what it means for stocks and bonds. Plus, mortgage rates remain near historic highs, at least for this cycle. But one stock is riding that wave to become the nation's #1 servicer, closing in on $1 trillion portfolio of balances. The CEO of Mr. Cooper Group joins us coming up on the show. And in the spirit of Halloween, we're looking at the scariest hypothetical bear cases in technology. Think Alphabet, Amazon, Netflix, and even Meta platforms. The scenarios would trick investors and treat the bears.
EPR. EPR looks pretty good. CWH EPR 18 times normal. EPR looks interesting. EPR looks like it wants to do something. Entertainment Property Trust. I wonder what they do. Seems obvious, but let me just check exactly what they do. Earnings. EPR. They beat.
Missing revenue expectations, but reporting a smaller than expected quarterly loss. Now, on the other side of things, you've got a sharp drop, about 16%.
Revenue growth 17%. EPR Properties is a specialty real estate investment trust that develops, owns, and leases and finances properties in select market segments related to entertainment, education, and recreation. EPR. They beat on October 25th. Earnings growth 20%. Revenue growth 17%. Revenue surprise 20.5%. Revenue growing 17.33%. Earnings year over year. That's EPR currently on the screen. EPR. It's a REIT, so they pay most of their dividends to shareholders. Was it 90% or whatever? S&P. Continuation. Volume picking up.
Steve Wiesman has the results of CNBC's latest Fed survey. Hi, Steve.
Yeah, Don, it's like the Fed has taken the #2 spot among concerns. The size of the debt, the growth rate, and the cost of servicing have now become significant concerns among participants in the CNBC All-America Fed survey. But there are differences over what to do about them. Let's go through the data here. 87% very or somewhat concerned over the size of the debt. 100% are worried about the speed with which the deficit is actually growing. And 90%, of course, concerned about the cost of servicing that debt. Moving on, the federal government should cut spending. 42% say that's how they should deal with it. 7% say just raise tax revenue.
All right, so we got a nice push here. SPY is going. S&P going.
The Philadelphia Trust Company writes in through the survey, a 10-year treasury near 5% is realistic and provides investors and savers an opportunity to receive a good return. However, consumer borrowing costs have been increasing in tandem. Those higher rates make the huge federal deficit even more worrisome, reflecting the view of a lot of our participants. But there is an offset when it comes to the Fed and rate hikes. Take a look here. 65% say that a 5% 10 yield sustained for a while should make rate hikes less likely. 23% say it has no effect, and 13% say, hey, it could make Fed rate hikes more likely. What is responsible for these high yields? I was gratified by this, that it is kind of a third, a third, a third. A third say strong economic growth, a third say increased debt issuance, and a third say it's the higher for longer strategy. That's been what my reporting has revealed until the survey came along. The survey found no hike expected tomorrow or even in the foreseeable future. The next move, a rate cut. But that doesn't happen, Dom, until September 2024. So don't hold your breath, sir.
All right, Steve, what's curious about the Fed data that you've collected, the survey data, is that in the past we've talked about how much people have been talking about the possibility of a recession. What is it like this time around? Is one coming anytime soon, according to the survey?
Well, you'll remember, Dom, another news outlet that made a big deal of the fact that the recession probability had fallen below 50% in their survey. It fell below 50% in our survey several months ago, and it's remained right there, 49%. Almost no. Remember, it was elevated up 55, even 60%. That's come back down. We actually asked two questions. What is the probability of a recession? What's the probability of a soft landing? It's 42% for a soft landing, 49% for a recession in the next 12 months.
All right, Steve Leisman with the latest Fed survey results. Thank you very much. The Fed widely expected to see points out to pause again tomorrow, leaving rates unchanged for the second consecutive meeting. Will this be enough, though, to halt the surge in bond yields, especially on the longer end, and spark a year-end rally for the stock market? So here with us to discuss are Tom Lee, co-founder of Fundstrat Global Advisors, also a CNBC contributor, also Michael Schumacher, global head of macro strategy at Wells Fargo Securities. Gentlemen, thank you both for being here so much. Michael, I'll start with you with the bigger picture. We got all ends of the funnel covered at this point here. Big picture-wise, Steve laid out the economic case. Is there a compelling reason why bond yields should stay where they are, the 10-year around 5% or so for longer?
Steve hit the nail on the head. He talked about concerns about the deficit, concerns about Treasury supply. They're very evident. And oh, by the way, tomorrow morning at 8:30, tune in. The U.S. Treasury is going to announce supply increases. People are worried about this, Tom. In the last 3 months since the previous announcement, client after client has talked about this. It's not only investors, it's issuers, it's retail investors. Most of your viewers, I would guess, are concerned that doesn't go with them.
Has it been, Michael, though, absorbed relatively well in this early stage?
All right.
Investors on the bond side of things, you feel this idea that Treasury will be selling more debt.
They get the concept, big deficit, more issuance, but the speed with which Treasury has ramped up issuance is a bit scary. And I think also when you look at the headline numbers, the deficit's 8% of GDP. That's the sort of number we typically see in a crisis, in a war, in COVID, something like that. We're not in those types of situations now. People are concerned, and it's kind of going in the back of their minds thinking, hey, maybe the deficit goes up even further. There's even more supply than we expect. That's much worse. So that comfort zone is just not there yet.
There is a comfort zone for the stock market, generally speaking, there has been this year. If you look at your comments in the past, you've been right. Things have been generally more bullish. But what about the last few weeks? Do you think that we're set up for a year-end stock rally?
All right. Can we go now? Can we get through this area? Let's go. Go, 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 go.
Stabilizing would be
Go, go.
I think, for a year-end rally because we're getting through the tax loss selling. I think the data is going to start to lean soft on the jobs, which I think is good because it takes some of the pressure off the Fed having to do higher for longer. And in fact, it could pressure yields lower. And I think sentiment is so negative now that we are in a situation where bad news probably is good news for equity. So I think the setup is good, but this is a really critical week.
What about this notion that we have interest rates maybe stabilizing, and this overall story in the market's about a certain subsection of stocks, the Magnificent Seven, whatever you want to call them, being the engine behind the market? Is the fall in yields or hypothetical fall in yields that much more of a buoyant part of the stories in the stock market because of those Magnificent Seven?
All right, here we go. All right, go, go. Go, 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 go. Let's do this.
Really powered the equity returns this year. They kind of took it on the gut.
Is that Tom Lee?
But they're still very good secular stories. And if interest rates stabilize or they start to fall, as we know that.
Yeah, that is Tom Lee.
So I think it is.
Sounds sick or something, like he's got a cold or whatever.
But they are highly sensitive to what rates are doing.
I like Tom Lee. People bust his chops all the time. I think he's a good guy.
We've talked a little bit about the strength of the U.S. dollar, specifically
Seems like somebody you could have a beer with and not be pretentious and actually listen to your BS. So, yeah, I like him. All right, S&P. We got through 4175. 4200 is next. Okay, 4200 is the next level.
Or is it going to be a headwind for everybody that's not the U.S.?
Yeah, the currency story's been really interesting.
4200.
I think the dollar rally is just about played out, but
Oh, damn. Don't come back now. All right, so they are going to bring this back.
Sort of an unusual, somewhat confusing statement out of the Bank of Japan last night. Sort of raised the cap on yields, but not exactly. The yen is weakened. Maybe the authorities intervene, maybe they don't. So I'd probably set that one aside. But if you think about other currencies against the euro, Canadian dollar, pound sterling, etc., the dollar's recent strength has been propelled by the U.S. economic data being comparatively better than data overseas, not great, but better. And we think that's about played out. So probably that last push for the dollar is about done. Unless the Fed really sounds I think the dollar is probably going to sort of hang in to perhaps weaken over the next month or two.
How big of an impact, Michael, is the economic?
All right, we're pulling back in a little bit, so take some profits off. Ultimately, it'd be nice to see us get up here to 4,200. We're above 4175, so that's we're moving in the right direction if we can manage to close up here. Okay, let's go take a look. What's working? Okay, NASDAQ, Verve. Big move on Verve. Notice these candles, the wicks on the top of these candles. We want to see stocks that are holding the highs in the upper half. Tree looks really good. Lending Tree. Lending Tree turning the corner. What's going on with Lending Tree? Shorts covering?
Tomorrow, December, yes, pause, give it some time to play out, but you can't completely discount the Fed having to come back again.
Tom, there's been a lot talked about with regard to the participation of other stocks outside of the top 10 or 20 market cap ones in the S&P 500. It's been a pretty big divergence starting in the spring of this year. Is it still
Lending Tree? Look at the volume here.
just buy index funds?
It's probably going to get rejected at the 50 day, but something to watch. Something to watch.
Is there hope for stock pickers out there? Do we think that value-oriented sectors can participate in the year end?
I mean, that's definitely weighing on investors' minds, but there haven't been inflows into equities this year, so I'm not surprised that the large cap names are the ones leading. If interest rates stabilize and we're getting into a decent seasonal period and stocks start to show some resilience, and if economic data this week in particular comes in a little soft, I think you're going to see inflows into equities, and that would be the equal weight stocks beginning to get a bit as well.
And Tom, before we let you go, a quick last word to you. Is the American consumer in a good enough position to power the holiday shopping season?
Well, they've been resilient so far. So I'd say it's been a mistake to write off the consumer. So, but that's important too.
70% of the U.S. economy. Tom Lee, Michael Schumacher, thank you, gentlemen, both for being here. We appreciate it.
Thank you, Don.
All right. Well, while higher rates continue to hinder things like mortgage demand and consumer spending, they might actually provide a silver lining for our next guest. Shares of home loan servicer Mr. Cooper Group are up 40% this year, even with mortgage rates trending toward.
That's who bought out. That's who bought out my loan from Wells Fargo.
Jay, thank you very much for being here. I don't know, Jay, if you heard some of the conversation that we just had with Michael Schumacher and with Tom Lee, but the economic concerns and interest rates have been front and center for so many folks out there. Is the home industry in a good position right now with interest rates for 30-year fixed rate loans hovering around 8%?
Well, first of all, thanks for having me, Dom. And I think, look, it's with our balanced business model, there's really two segments. There's the origination segment and servicing segment. And with rates where they're at today, that 8% level, the origination market is very slow. And our view is it's going to continue to be slow because we think interest rates are going to be higher for longer, despite the most recent communication there. And, if you think about most customers still have interest rates in that 3 to 4 range. So rates would have to move significantly for it really to be meaningful to the origination business. For us, with our balanced business model, we have a giant servicing portfolio of $937 billion in servicing, and that is killing it. We've made significant profits this year in that segment. I think that's one of the leading indicators of our performance because customers are just staying in their homes longer because they like their interest rates, and that leads to a stronger earnings growth for us. Leads higher cash flow and higher profit in that business.
We're just showing viewers right now some of the stats around Mr. Cooper kind of at a glance. The $937 billion in unpaid principal balance.
Thanks. Another large print on Amazon.
Because you basically collect a fee on
Another large print on Amazon.
Take us through what exactly is the driver behind how big you've gotten, and what exactly is the path forward to getting that $1 trillion mark and beyond.
Well, it's really exciting.
800K.
We've grown this year considerably. We've acquired over $160 billion in new UPB, and we just announced a new subservicing client of over $80 billion. So we think we will cross that $1 trillion threshold in the first quarter of next year. And really, there's a couple factors that, from a macro standpoint, that are impacting that. One is, if you look at the banking sector, given some of the potential new capital requirements, we think that's going to lead banks to be sellers of more.
All right, looks like SPY wants to go. All right, SPY, SP 4200.
And then you also look at the independent mortgage bankers, and just given the low level of originations and therefore the low level of profitability, they are sellers of servicing as well. And we've been, the beneficiary of that. We're a huge acquirer of servicing. We think that's going to continue. Candidly, we think for the next 2, 3, even 4 years, you're going to see more servicing come to market and more UPB gets.
Okay, the dollar is hanging out at 106.68. It's 20 cents off the high.
What's interesting about the story overall?
Crude oil dropping below 82. Crude.
Is one that people maybe don't know as much about. It is a place, a platform, e-commerce and data and analytics driven, where people can transact on homes, buy, sell data, auction type data, that sort of thing. Is there anything within that business that you're seeing that indicates a direction overall for where the housing market could be going, given where interest rates are, especially for that 30-year fixed rate home loan?
Well, you're right, Dom. I mean, I view it almost as a fintech play. It's really an exchange. It's a marketplace for buyers and sellers, to acquire servicing. And the short answer is no. We're not seeing a significant amount of activity there because the housing market, as you know, the housing supply is low.
All right, so S&P. Like to see us get some traction here. What's Chewy doing? Chewy, Cocoa Pup. Chewy consolidating. VWAP is down there. The dark blue line, that's VWAP. It's been upward sloping most of the day. Chewy looks good.
We think that will come, and we think we have one of the best marketplaces out there. So there will be buyer and sellers that will transact, but right now there's not a significant level of activity.
Jay, one last word quick to you before we let you go. Do you lower mortgage rates if we hit 5% 30 years?
All right, so it looks like we're going to keep going, folks. Looks like we'll keep going.
Kickstart the U.S. housing market?
That gives you an opportunity to exit some positions into strength.
Slightly, right? Again, we have a balanced business model, so we're very, very focused on our servicing business. We think that's going to continue to grow. We see massive opportunity there. But even with that level of movement in rates, I don't think you're going to see, a real significant takeoff in the origination market. It will increase. You'll see some level of activity there beyond what you're seeing today. But again, given where rates are for most consumers, it's not going to be what we saw. Certainly not what we saw in 2020 or 21.
All right, Jay Bray with the Mr. Cooper Group. Thank you very much. Come and see us soon.
Absolutely. Thanks for having me.
All right. Well, coming up on the show, we're hitting the deck with the CEO of Trex. We've got all kinds of housing stories in play. We'll get his read on the consumer, the latest home improvement trends, with shares on track to snap an 8.
So once again, tomorrow is a Treasury bond refunding. Okay. There's a refunding tomorrow. the Fed's got, and Congress with their spending has a conundrum. How do we finance the spending that's being proposed into year end and next year? China isn't buying our bonds. Japan isn't buying our bonds. I'm not sure who else would be. So it's something to be concerned about. TLT, that'll create supply, by the way. TLT, where are we? TLT. All right, that looks okay. I'd like to see the bonds continue to move higher. TLT, I'd like to see this moving higher. Okay, if we can manage to get above 85, say 86, once this starts to turn, probably going to take a few weeks. I would be selling like December or January covered calls. You can get $2, $3, $4 for just out of the money calls. That brings your cost basis down. You know, I've done that a couple of times with TLT. Since Ackman covered his short last Monday, sending financial media geniuses into a tizzy trying to figure out what's going on with bonds. Now they're saying, oh, it doesn't mean he's right. No, but his short really worked out really well. So you can say whatever you want. I'm looking for bonds to catch a bid. Maybe it does, maybe it doesn't. In the meantime, if you're buying bonds down here, consider selling some covered calls. Relatively safe strategy. We're trading at 84, so I'd probably sell the 85. If we get to 85, I'd probably sell the 86. December, the 85 for January is going for $3.15. So that automatically brings your cost basis down below this current low at 82.42. That would bring your, if you bought right this minute, did a buy right, that would bring your cost basis down to 81.40. 81.40. And it's trading at 84. So what happens if we start to move higher? Well, if you sell the December, then you could roll out to January, still pretty close by, and look for prices to move higher. So TLT, looking forward to looking for support here. Just knowing tomorrow's a refunding, Treasury refunding tomorrow, so that could have a big impact. Not to mention, maybe it's counteracted by Jay Powell. I don't know. We'll see.
So what's behind the boost? The company citing operational efficiencies and, of course, a resilient consumer demand picture. For more on what this could
SPY's trying to push higher.
State of home improvement. Let's bring in Trex CEO Brian.
Coinbase trying to push. Coinbase is at the high of the day, turning the corner on recent price action. Okay, it's sideways. So we're looking for Coinbase to get above 90 ultimately.
Then there's full PVC. Take us through what exactly is the demand picture for Trex on a composite basis when it comes to home builders and home improvers.
Thanks. Great to be back on the show this afternoon again. We operate in a segment of the repair and remodel segment that really focuses on outdoor living. And that portion of repair and remodel has held up quite well over the past 6 months. We've seen a mid-single-digit increase in our sell-through volume during the second quarter as well as the third quarter, and that's flowing through to the strong sales numbers that we've been able to show. And we're expecting that to continue well into the fourth quarter.
Now, you also mentioned in your report that a lot of this was driven by unit volume growth, not necessarily just price hikes as well, that people are actually consuming and using more of your decking products. What exactly does that say?
Okay, I'd take some profits off SPY. We might pause here, like we did yesterday, and pull back into the highs of the range. B and C pivots should dominate this time of day. If you don't know what I'm talking about, you're a new member. We're looking for this pattern during the day. You get that A pivot at the high, and then B and C. Okay, so you can see it pretty clearly. You can see it pretty clearly on Chewy. All right, so that looks like an A pivot up here. Looks like we might be producing a B pivot. Let's go to the 15-minute. All right, so here's A up here. Pulling back B. It's still very bullish. The volume on the selling isn't that high. And the daily looks pretty good. So if you've been paying attention to Chewy, Chewy on the daily. All right, so it's turning the corner. Nice volume on the daily. I'm talking home improvement right now. 30-year fixed. Talking about home improvement. Let's look at Home Depot. Home Depot. Nice reversal on Home Depot, reversing.
All right, so there's the product pitch, and I get it. You're the CEO of Trex. I'm going to give you the last word on a more open-ended question here on your end. Do you feel as though the interest rate environment as it stands today can lead to longer-term performance for your company, or what happens if interest rates do hypothetically go lower from here?
I think there's going to be an adjustment period for the economy here. We went over a fairly quick period of time from mortgage rates anywhere from 3 to 4%, now up to 7 to 8%. It's going to take time for the consumer to get back to what we consider the new normal. And let's assume that that falls out somewhere between 5 and 6% over the next couple of years. We will adjust along with that. It'll go back to the comments I made before, that there's a lot of wood decks out there. We'll be able to replace those with Trex decking. And we operate in a segment that is much more resilient than new home building, specifically related to outdoor living.
All right. We enjoy our deck. We sprung for the full PVC, but we made a very calculated decision on that front. We looked at Trex, we looked at competitors, we looked at wood, and we decided to go outside of wood. Brian Fairbanks at Trex, thank you very much. We'll see you soon.
All right, FOMC tomorrow, so that should be interesting as well.
October on a relatively positive note, but still on track for its third straight month of losses for the first time in over a year. Coming up on the show, we'll look at some of the scariest bear cases in that industry. The exchange is back after this.
I hope everyone's having a good day. It's always good. Good to be here, giving you the play-by-play till 4 p.m. Usually till 4 p.m. Okay. Joe Fami looking at Fami looking at Meta, huh? Okay. Amazon looks good.
This stream is sponsored by TickStrike. TickStrike allows you to actually hear order flow of futures, forex, and stock instruments. Get a free trial at tickstrike.com.
James Hardy.
Welcome back to the exchange. Markets right now are just about at session highs. You can see here the Dow Industrial is up about 40.
Okay, we're sort of pushing higher now. All right, so this is your opportunity to take some things off into strength if you're day trading or you have a short-term swing. Lows looking good too. HD, low, same pattern.
$3.8 billion proposed takeover of budget airline Spirit. Also, check out shares as you see there of Viet Corporation.
Oh, Spirit's getting taken over, huh? Oh. They fly into Myrtle Beach.
Earnings missed expectations. Their revenues came in slightly better, but it withdrew its previous full-year earnings and revenue guidance.
I remember I forget what they call them, the person that checks you in. I had a carry-on bag, and this lady said that it didn't fit in the little device to see if it will fit in the overhead bin, and it clearly fit in there. I got so angry with them, I canceled my flight and wound up flying a different carrier. Wrote a letter to the company about the incident, took a picture of my bag, picture of my ticket, picture of the lady that gave me the hard time. I don't know what happened to her, but they refunded my whole ticket, and they paid for the ticket that for the alternate flight back home. It was pretty interesting. I don't usually get pissed off, but when something clearly fits in the little box, you know, person must have been having a bad day. That's the last time I flew. I haven't flown in a while. Actually, that was before COVID. Damn, I haven't been on an airplane in a while.
Studios and actors returned to the negotiating table today. The SAG-AFTRA union and the studios worked independently Monday to prepare for today's talks. The negotiating committee said the parties are still far apart on key issues. Actors have been striking for more than 100 days, continuing even after the Writers Guild ended its strike back in September. Dominic, back to you.
All right, thank you very much, Tyler Matheson. Coming up on the show, retail REIT Brixmor is on pace for its best week since June after raising its guidance and hiking its dividend payment. We'll ask the CEO how he's navigating today's macroeconomic environment. That's coming up next.
And now, CNBC Trend Tracker.
Home Depot. Growth rate 15%. Interesting. All right, what time is it? 1:33 on the East Coast. Let's see. What is Lowe's? Very similar. Yeah, Lowe's. Okay, so we continue to grind higher. 417.13. We're making higher highs and higher lows. VIX is dropping off, but trying to bounce. Yeah.
By continued strong lease demand from its tenants, which include companies like retailers TJX Group and Kroger as well. Joining me now for an exclusive interview is Jim Taylor, the CEO of Brixmor. Jim, thank you so much for being here.
I just don't understand.
Thanks for having me. All right, so let's talk about the state of real estate in America. It's obviously a huge concern, especially on the commercial side of things, given interest rates. Your results paint a pretty good picture. So are things for retail as good as your results would indicate?
You know, we are focused on the open air segment of retail. You mentioned mall at the outset, and I should perhaps differentiate. So our centers, as you alluded to, are generally grocery anchored and consist of not only grocers, but value and off-price apparel users, everyday uses such as quick service restaurants, coffee, etc. And the consumer remains strong. Traffic at our centers continues to hold much of the bump that we got during COVID, and tenants are profitable. They've found that the store is a great way to connect with the customer in a place that's convenient for the customer. So business remains very good. One of the things I talked about on the call, our earnings call today, is that you're really not seeing any new supply because there's been no ground up development in our asset class. So when you couple that with strong retailer demand, a good consumer, business is very good.
Now,
All right.
I was down in South Florida just a couple of weeks ago, where there are many
S&P, just looking for stochastics to fire.
Some people call them strip malls.
Stochastic on S&P 500. I think we have a pretty good shot for at least a little bit more upside.
Or some kind of a Home Depot or something Costco, and then you have all these other stores, Starbucks, Applebee's, that kind of thing around it with retail presence. Is that the right mix? Is that the future of retail? Because that seems to do a lot better than some of the indoor shopping malls that we think of traditionally in our own minds.
I think it's a pretty compelling formula because you're bringing the retailer close to where the consumer lives in a format that's convenient and frankly that's efficient for the retailer. And the breadth of uses
50%.
those open air centers is as broad.
Okay, this looks good.
Not only do you have grocery and some of the larger format retailers that you mentioned, but also you've got the off price, you've got specialty grocery, you've got restaurants. In fact, you have many restaurants that are leaving urban centers to come out to the suburbs close to where people live to up the quality of the experience and reward the customer for the time spent. So it really is a very compelling model, and I think that underlies the success that we've been seeing and the success that the sector more broadly has been seeing.
Jim, we're showing viewers right now a graphic, some of your core tenants out there. I mentioned Kroger before. Publix is in there, Trader Joe's, Whole Foods, Ulta Beauty, Ross Stores, Shake Shack, Starbucks, Chipotle. These are brand names that a lot of folks understand and know about. Can you give us some insight about which of those tenants, what types of tenants are showing some of the most interest in opening up space or leasing space within those open air type formats?
You know, it's a great question, and the answer really is it's as broad as we've seen in some time. So not only do you have demand from grocers and specialty.
All right,
but
so
demand from each and every one of those segments, not only the retailers that you mentioned, but many more, again, who find that the store is a profitable channel with which to connect with the consumer, to set the brand standard, to really serve the consumer. And we're seeing great success across a wide variety of categories.
And Jim, one last question before we let you go. Your footprint is relatively varied. Are there any hot spots in particular right now for this outdoor retail type concept?
You know, we're really seeing strong demand across the country. Obviously, in certain markets through the Sun Belt, Florida, Texas, some degree California, the coastal Carolinas, we're seeing good, strong demand reflected in part of some of the demographic shifts that we've been seeing more broadly. With that said, though, the demand is pretty broad-based across all the markets that we're in. And it's really a great time for us to capitalize on that, bring in better tenants at better rents, and execute our value-added strategy.
All right, Jim Taylor, CEO at Brixmor, thank you very much. We hope you'll come back soon and tell us more.
Will do. Thank you for having me.
All right, thanks very much. Coming up on the show, on this All Hallows Eve, we're taking a look at Bernstein's spookiest bear cases in technology right now. We'll lay out those names and tech check coming up after the break. The Exchange will be right back.
looking good, S&P. Looking good. All right, so on the move, on the road again. Do, 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 do. Do, 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 do. Do, 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 do. All right, so S&P futures are above 4,200. Grover, you were looking at 4,205, I think, 4,202, something like that. Grover, you got your futures. Or was it you? Or was it you, Cayman?
Welcome back. It's been a scary story for October for technology. The NASDAQ heading for a more than 3% decline this month, the biggest drop of the 3
All right, nice follow through. Good job.
Now for today's tech check for a look at which names could be running scared on this All Hallows Eve. D.
Yeah, Don, we got the idea from a Bernstein TMT note this morning. They looked at the spookiest bear cases in tech. These are plausible but low probability downside scenarios. For example, a Meta. What if Mark Zuckerberg decides that he wants to go after the metaverse again and spends tons of money and forgets the year of efficiency? Or what if Amazon cloud growth never bottoms and Google Cloud takes more shares? These are scenarios that investors may want to consider. We also threw in a few of our own. For big tech, for example, Dom, we know that this year has been all about the generative AI hype cycle, but what if that hype cycle never materializes? They can't monetize it. That would be a scary scenario for investors, or let's say it was overregulated. We know that the Biden administration is putting some safeguards in place. The other one that we want to look at is Apple, because it is reporting that it has some outsized influence on markets as a $2.6 trillion company. One scenario we considered is coming out from the Google antitrust case. We now know that Google pays billions and billions of dollars to Apple to be the default search engine on Safari, and it makes up 35% of gross income. So if that goes away, that could be a nightmare scenario. And one that is certainly getting a lot of attention these days is the China risk for Apple, right? From the banning of government officials using iPhones to the crackdown on Huawei to the crackdown on Foxconn, a major supplier, to Huawei's return. These are all scenarios and kind of fun to look at for Halloween.
Deirdre, if you take a look at one of the tech scenarios that is playing out more broadly, that is the scariness that's happening with certain semiconductor stocks out there. Just how important, or what companies on the semiconductor side should investors be looking at more broadly for the health of the overall business, as opposed to idiosyncratic fundamental stories?
Yeah, I mean, the semi space is a little scary right now, and that relates to sort of this artificial intelligence scenario. If companies fail to monetize and they're not buying as many of those chips, which it's not just NVIDIA. NVIDIA's stock price would certainly crash if the promise wasn't there, but other companies that have been putting huge amounts of investments, not just chip makers, but the big tech companies as well, like Google and Amazon, working on more powerful chips as potentially alternatives to the NVIDIA GPUs. That's another scenario to consider. And also, maybe just as a broad one, the promise of this economic and this digital transformation, if that doesn't happen the way it turns out, that could have ramifications across the big tech companies that make up so much of the market.
All right, Deirdre Bosa, happy trick-or-treating on this All Hallows Eve. Thank you very much. All right, a quick news alert right now on Tesla. A California jury has decided that Tesla's autopilot system did not cause a deadly 2019 crash. The case was filed by two.
Okay, that could mean we could see Tesla rally on that news.
It was defective when they sold that Model 3 car. The crash killed the car's owner and seriously injured two passengers when it veered off a highway in East Los Angeles. Tesla continues to test the system as well as its more advanced full self-driving system, despite continued regulatory.
Okay, it's still in a descending pattern. Looks like maybe that news Tesla.
Break down some of the key names reporting and set to report coming up, including healthcare names. Humana on deck tomorrow. There's also a lot of movement in that space today. Sarepta down more than 35% on poor trial results for its muscular disorder drug. That move dragging partner firm Catalent down by roughly 17%. Amgen also in the red despite beating earnings estimates. Investors left wanting more on its obesity drug as well. Additionally, check out shares of Pfizer, lower and facing questions regarding its own weight loss drug development, lower by 41% for the year so far. Now, by the way, Jim Cramer just sat down with CEO Albert Bourla. You can watch the full interview tonight, 6 p.m. on Mad Money, but here's a bit of a preview.
We're not happy with the way that the stock price is performing this year, and we try to understand the reasons, and they are coming down to two things. One was that there is a lot of uncertainty about the COVID projected revenues, and then there was a lot of concerns. If we take the worst case scenario, then your cost base is very high. That's why 2 weeks ago we tried to address both. We announced several agreements that we have done, but now pretty much are giving very high certainty for someone to be able to model the COVID revenues for the years to come.
All right, ARM Holdings on the move here. Watching ARM Holdings. This has been in a descending pattern. We noticed that it's managing to hold on to this. ARM Holdings, there we go. All right, so it's managing to hold on to this level. Now it's holding 47. I have shares at around $50 and I believe 10 cents. I sold some covered calls at 3 and change, and I just rolled up for a credit of $1.20. So total, it's bringing my cost basis down more than $4 from 50 level. So I'm down below 46. It's below that trend line down there. So I'm looking for this to reverse. Hasn't reversed yet, but I'm okay. I'm okay for now. I'll continue to monitor ARM Holdings, looking for a pop. Energy, XLU, utilities. What's Intel doing? Intel trying to push higher. Cassava moving higher. Sava. All right, Cassava Sciences. That looks like it's going to push a bit higher. Cassava. All right, S&P continues to move higher. We got above the key level we were looking for yesterday, 41.75. So that gave us a shot. This is cash. This is not futures, obviously. But we got above 41.75. Yesterday was difficult. We thought maybe today we could. We got the follow through. Now 4,200's on deck. Okay, and one thing to consider is the S&P 500. Okay, so here we are. Very nice looking price action here. Lower trend line. Each of these boxes lines up with stochastics. Okay, stochastics trigger 1, stochastic trigger 2. In each case, we bounced for over 2 weeks. Looks like that's what we're going to do now. Potentially could see a test of the 200-day. There goes the S&P.
Weak natural gas prices and still grow its EBITDA. EBITDA has been very strong, and the acquisition of Magellan is expected to contribute to that. More importantly, they've actually continued to grow that EBITDA through exploration and so E&P spending. And as they've done that, Magellan should actually help regenerate more free cash flow. So all of that adds up to a very good outlook for the company.
All right, Gina says buy on One Oak. Next up, we got Yum Brands. Those shares seeing a bit of relief after a more than 12% slide since July. Steeple.
Yeah, I haven't looked at Yum Brands in a while.
Demand is showing signs of slowing there, but noting that Yum's scale and lower debt risk makes it well positioned amongst its competitors in quick service restaurants. Yum Brands, Taco Bell, KFC, and others. Buy or sell?
So we like this one as well. We own this, and quite frankly, look, when the going gets tough, the tough eat cheap, and that is what Yum Brands represents. And if you look at sort of what has happened, yes, there is definitely some weakening in consumer demand. However, Yum Brands are rolling out new products. Pizza Hut is has rolled out melts, and they've also launched some value packages at Taco Bell, which had actually been growing their same-store sales. And despite everything that's happened over the last couple of years, they've managed to maintain an impressive operating margin. 33%. That says something about the management of the overall company. And we think that that's going to be kind of a big and important, good point for the company.
All right, so that's 2 buys now, Yum Brands and ONEOK. And finally, we're going to key on Humana, clawing back those steep June losses. Analysts at Mizuho noting that utilization seems elevated, but it's unclear if there's pent-up demand or this is a new normal overall. They say that consumer downturn and competition in Medicare Advantage pose the largest downside risk for the insurer. Gina, you don't maybe share some of those same concerns, especially when it comes to that so-called Medicare Part C.
Well, look, I that's actually been a big component of their growth. And so I can see how you might be concerned that this can slow down, that this is something that would affect all of the insurers at the same time. This is a company that's also managed to buy back stock and grow its EBITDA that way. So, we actually see this as a company that has done well despite an entire sector that is getting beat up. And quite frankly, it's reasonably cheap relative to where it could go. So we still are holding on to this stock. We think it still has room to run.
Gina, one last thing before we let you go. Is this a market right now with the current price and trading action that makes you feel a little bit more uncomfortable or more settled in?
Look, we think that there's a lot of unpriced risk in this market. So, if you look at the risks across the board, you just aren't seeing them. Most economists have thrown in the towel on their recession bets and are just basically facing a slowdown. But that slowdown is probably still coming. So we think that you probably need to remain defensive. And despite that sort of general assumption that we're going to remain defensive, we actually think that there's some downside risk to that.
All right, a little bit more cautious, says Gina Sanchez at Lido Advisors. Thank you very much, Gina. We appreciate it. We'll see you soon. All right. Well, that does it for the exchange today. Coming up on Power Lunch, can't get the Fed out of our head. Gearing up for special coverage of tomorrow's big Fed interest rate decision. We'll have live coverage from Washington, D.C. beginning at 1 p.m. Eastern Time right here on this show tomorrow. Now, after the break, Courtney and Tyler will break down what to expect for that big Fed interest rate meeting. They're getting ready for the show right now, as you can see there, with the Tyler King. Courtney right next to him. We'll see you tomorrow here on The Exchange.
All right. Nice job. Nice job for the Bulls. Bulls, nice job. Okay, MSOS, advisor shares, pure, was that cannabis, whatever? MSOS. You guys are funny. Yeah, SoFi looks good.
much, everybody. Alongside Courtney Reagan, I'm Tyler Matheson. Coming up, 24 hours until the Fed decision on interest rates. Markets expecting no change. But would that just be another pause or a sign that the Fed is maybe done for this rate hiking cycle? Plus, hitting the brakes on the demand for electric vehicles. Signs of a slowdown, leading one analyst to ask whether a global EV meltdown is coming. We'll dig into that one, Court.
But first, let's get a quick check on the markets here. With a couple hours left to go in trade, the Dow would be higher were it not for Caterpillar, taking about 80 points off of the Dow. Results for the third quarter were better than expected, but concerns about the order backlog, that's what's weighing on the stock. Shares of Sarepta getting crushed after a setback for its Duchenne muscular dystrophy drug failed to meet the main goal of a phase 3 trial.
All right, we start with the Fed as we're less than 24 hours away from the big decision on interest rates. Widely expected, of course, that the Fed will keep rates unchanged as the economy is still under pressure and there is turmoil, of course, overseas. Let's discuss the stew with Gus Fauché, chief economist at PNC. Gus, welcome. Good to have you with us. You know, if we went back a year ago, many analysts, I don't know about you, probably we're not going into a recession now or soon, but maybe second half of 23. But now most people are saying 24 if we have a recession at all. Where are you on this recession, no recession in 24?
I think the most likely outcome is
All right, Tesla, nice little push on that news. Tesla.
than we were expecting, that household spending is held up better than we were expecting. But we do continue to feel the drag from higher interest rates. I think we'll feel more of that over the next 6-9 months or so. And so given the inversion in the yield curve, given the fact that we have not felt the full impact yet of Fed tightening, I do think that we will see that mild recession starting sometime around the middle of next year.
So does that suggest to you, does the fact that you and many others see sort of the same thing, and that many people attribute the probability of a recession to what the Fed has done and as the higher rates ripple through the economy, does that suggest to you that maybe the Fed is done?
It certainly does suggest that the Fed is done. I would not be surprised at all if that we do not see the Fed tighten again. Between the
Tesla, nice rep pair on Tesla. Is that going to keep going? Looks like it might keep going on that news. Tesla.
And I think all of that together will suggest that inflation is slowing towards 2%, that the economy is softening, and that means
Tesla.
that the Fed does not need to raise rates again.
That's sort of what I was wondering.
Yeah, Tesla's going.
That up. Obviously, we're still well higher than the intended target. Do we need a recession to get inflation closer to 2%? If the Fed is done, if they don't do anything else, how's it going to get lower?
Just a softer labor market, but not an outright contraction. I think there's still about a 40% probability that we get a soft landing where economic growth slows substantially, but we don't get an outright contraction in the economy. That would still mean a higher unemployment rate getting up to around 4% or so. And that could cool off inflationary pressures enough to bring inflation down to 2% without a recession. That being said, I think the more likely outcome is, given all of the tightening that we've experienced, does lead to that mild recession sometime next year.
Since the last meeting, of course, the war between Israel and Hamas has occurred. Does that add to the likelihood that the Fed stays put and pauses, or maybe is done?
In the near term, yes. I think that obviously there's more uncertainty out there, and that is a reason for the Fed to pause. However, if we do see a wider conflict in the Middle East, if energy prices move higher, and in particular, if we start to see energy inflation bleed into core inflation, that is
all right, Tesla with that.
Then I think the Fed may need to raise again in response to that. So the key question is what happens to energy prices because of the Middle East? What happens to core inflation because of the Middle East? And if we do start to see additional inflationary pressures, then the Fed may need to raise rates again, and that just increases the likelihood that we get a recession.
All right, interesting forecast. Gus Fauché of PNC, we thank you very much. Have a good day.
Thank you.
Well, turning back to the markets, which are now higher after some early losses, the Dow and S&P both trying for a second straight day of gains. So how should investors position ahead of tomorrow's Fed decision that we were just talking about? Nimrit Kang is Chief Investment Officer and Senior Portfolio Manager at Northstar Asset Management. She's also a new face to CNBC. Welcome, Nimrit. It's great to have you here. So you just heard our discussion with Gus. I guess I'll have you sort of pick up on what you think the Fed will do and then how you would be positioning investors from there.
Yeah. Thanks for having me, Kelly. No, so we are with the market that Fed is in wait and see place here, having put through 500 basis points of interest increases over the last 18, 19 months or so. In terms of how we're positioned, the only thing we feel very confident and certain about is that we expect higher degree of uncertainty and volatility in the market. So with that, we're very focused on risk. And in that framework, if you think about it, we're looking at bonds that we can get at 5 to 6% yield, secured by contractual obligations by the U.S. government. That sounds pretty good to us right here, Kelly. So we are, where it makes sense, where our clients are underweight their fixed income, we are building out fixed income ladders for them and getting them that 5 to 6% income while maintaining flexibility for them as well.
It is really interesting, obviously, with what's going on right now because we haven't seen interest rates this high in many, many years, more than 15 years or so, I believe. And so now you are looking to fixed income products, particularly for a subset of investors, perhaps, that are more cautious or less risk averse when you're looking at equities versus bonds. I mean, I find it very interesting here when you're talking about the wealth transfer. Why is that something important to consider when you're looking at bond investing versus equity investing in this environment that we haven't seen in quite some time?
Yeah, no, absolutely. One of the key things we see here with the interest rates going up to the 5% range and this new monetary cycle that we are in, for years, retirees and other savers have not been able to get any interest on their securities. All of a sudden, there's interest coming. I just recently read the U.S. government is paying somewhere close to $600 billion in interest. That's going to go all the way up to $1 trillion. That's going to someone, and that's going to the savers. And when we think about the demographics for our country with the number of retirees coming on board, 1 in 6 Americans is over the age of 65. This cohort is going to grow by 35% by 2030. Those rich people do need that income. So from that perspective, we think it is actually a very good tailwind. The other thing I would say, Kelly, we still very much believe that sticking to long-term strategic asset allocation is the way to go. Again, depends on the time horizon for various investors. But time and time again, what we've learned, from the market is staying invested is the best way to have those long-term returns. But when we think about staying invested in the market, we want to own those high-quality stocks for companies with balance sheets that are strong, that have good cash flows, that are not dependent on the financial markets for their financing needs. So within that, we see plenty of ideas as well.
So as Courtney's been pointing out, the idea here is that we haven't seen this kind of interest
All right.
in 15 years.
Tesla on the move.
And over the past couple of years, you have been benefited by staying very short in your maturities. If you were buying treasuries, for example, you still are. But are we getting close to that point where maybe you want to lock in some longer term duration as well, on the theory that maybe the Fed is getting close to being done?
Right. Tyler, when we take that viewpoint, we don't know what the future holds. But what we do know, right, we are getting higher yield now than we were before. What we want to do is diversify our duration as well, duration exposure as well. Longer term, I mean, you know this, you have speakers here all the time that talk about the deficits, all kinds of uncertainty that we're dealing with, increased social, political polarization. The pressure, we think, is still upwards on the interest rates. So we just want to diversify across the duration out there.
Let's talk about a couple of the stocks that you like. I'm going to say I'm the target of one of them, Stryker, which is the replacement knees and hips.
All right. Tesla continues to ramp.
And you also say Home Depot is kind of a demographic.
All right, looks good.
For the baby boomers who are going to stay.
S&P at the highs. 4,200. It's not too far away now. 4,180. 4,190. Okay, doing well.
People might be getting older, but they still want to live very active lifestyles.
We do, yes, yes. That God, you're right.
Yeah, so with that, we like companies like Stryker, leader in knee and hip replacements. We continue to see very favorable long-term demand trends for companies like that. We like Danaher, for example. It's a lead, again, a company that provides tools and diagnostics for drug development and discovery. And yes, there's been short-term overhang related to the COVID-19 pandemic inventory overhang.
Okay, tick cumulative still green. It's 2-1 on the Nasdaq. 2-1. Okay, we continue trending. All right, so high of the day, SPY looks good. Okay, Tesla. Can we keep going, Tesla?
Yeah, absolutely. They do talk about renovation and the age of homes really that drives it more so than other things in the housing market. Nimrod, I guess I am curious, you're talking about these ideas for long-term, more patient investors that have a little bit more risk appetite, 5 to 10 years. If your horizon is less than 5 to 10 years, are you saying no to equities altogether?
No, we don't want to say no to equities. I've been one of the big things is we don't know. The future is uncertain, and it's interesting. One of the reasons the study after study shows it's best to stick with your strategic asset allocation and stay invested because the worst days in the market are followed by the best. And we don't want to miss out on those best days because that's where the return comes from. But I think it's getting to that right asset allocation that's really important and understanding what your short-term liquidity needs are and then positioning with respect to that.
And then I guess just if we can wrap it up, today is a better day as was yesterday. Certainly if you're bullish in the markets, but it's come off a relatively rough month. It seems as if a lot of sentiment is negative or at the very least concerned. I'm hearing that from you and from Gus, who was the guest that joined us right before. Do you agree with that sentiment, or are you just cautious or negative, uncertain about what's to come?
Yeah. It's more related to high degree of uncertainty, right? High degree of uncertainty, more volatility. Coming into this year, most investors were cautious. The market went up and then has given up a lot of those gains as we're heading here into the final close of the year. So it's difficult to kind of know on the short-term basis. Yes, there's plenty of things to be worried about. I think a lot of that sentiment is baked into the equity prices. And that's where we think that you can actually pick up these great opportunities that have come up, that valuations have derated quite a bit and positioned for long-term returns quite well.
All right, VIX trying to turn. S&P is at the highs. Looking really good.
But obviously we think it has room to run over the next 5 to 10 years. Nimrod Kang, it's great to have you on CNBC. Thank you for joining us today.
Thank you.
Let's get the traders' take on what to expect from the Fed tomorrow and how the markets may react. Rick Santelli joining us live from the CBOE.
Yes, Courtney, indeed. As you look at a chart that started a week ago Monday, that was a key day. First of all, we could debate as to intraday violation of 5%.
Okay, let's look at the S&P. S&P 500, and let's look at a Hinkin-Ashi 60-minute. All right, definitely looking bullish. Okay, can we follow through?
Really didn't do as much as many thought they would. They basically tweaked on the reference with regard to 1% 10-year. But look at this chart. The dollar is at the strongest, yen at the weakest in 33 years, going back to 1990. But tomorrow is the big day. The Fed probably doesn't do anything, but there's a lot to talk about. Dave Viso, how you doing? All right. Quickly, in front of tomorrow's Fed decision, first of all, do you think they're going to do anything with rates?
No, they're going to keep rates. They're going to keep them where they are.
Okay.
Right.
Now, you saw what GDP was last week, right?
Yeah.
Almost 5%.
Yeah.
Okay, do you think we're in a 5% economy looking at through the windshield versus the rearview mirror?
My pocketbook really doesn't say we are. We're much higher than that.
Do you think if the Fed truly believed we have that kind of horsepower, would they be doing something tomorrow?
Yeah, you'd think so, right? You'd think so. But they're always behind the curve. So we'll see what ends up happening.
Now, when you think about the dynamics of interest rates and 5%, we haven't closed above it, but there's been significant talk that there's a lot of movement out of equities into fixed income, the opposite of the
That's what they kind of tell you. They go with that as a convenient excuse. I don't necessarily know if I buy it though.
And why wouldn't you buy it? You think rates can go higher?
I do. I absolutely think rates can go higher. I think they can go much higher. I mean, just because they might come down a little bit in the short term, in the longevity, I think we're in a bull market.
And the market somewhat agrees with you. Since we had that violation of 5% on the 23rd, the range has been basically 479 to 499. We're in a very tight range. All right, real quickly, my last
Cassava looking good.
debate going on. Breckenridge is going to be on Squawk Box tomorrow. There's a plug. Talking about the Janet Yellen and Treasury. There's a great opportunity. Here's some more long-term debt. Your thoughts?
Yeah, well, everybody and their mother refinanced rates when they were at 3% mortgages. They all got through. Everybody would have it. Except the Fed. They didn't do
Now,
anything.
the argument is that the primary dealers were nervous about liquidity and long maturities. I can understand that. But that's a question, in my opinion, of price. Okay? You give a concession, they'll show up your final
If they buy the offer or above the offer, they're going to get
Do you
filled.
remember in August when 10-year hit their all-time low, 0.5%, 50 basis points closed. Mortgage rates were still hovering at 2%. They could have issued a 2% 10-year, well above it, and they would look back and think, what today?
Exactly. Oh, they look like heroes. But again, they're always behind the curve.
Well, thank you very much, Dave. Happy Halloween. And Tyler and Courtney, back to you.
Let me ask you a question, Rick. Three years ago, should the Treasury have issued a 50 or 100-year bond at interest rates that would today look incredibly low?
You know what? As much as I would like to say yes to that, I would say no to that because 50 and 100 year didn't have any deep liquidity pool. So liquidity would have been an issue. But making liquidity an issue for doing more 10s and 30s doesn't make sense to me. As Winston Churchill used to say, what we're really arguing about is price. They could have made a price concession and done longer maturities. But 50s and 100s just might have been a bridge too far.
Rick Santelli. Good answer. Thank you, sir. We'll have special coverage of the Fed decision live from Washington tomorrow, starting at 1 p.m., hitting the decision at 2 p.m., and we'll right through Fed Chair Powell's press conference. That starts promptly at 2:30. Lots to talk about, a lot happening tomorrow. Very busy week. But first, the strikes are in the rearview mirror out in Autoland, but there are still roadblocks ahead for the automakers. Coming up, we will hear from an analyst who's examining the possibility of a global EV meltdown. Not just a slowdown, a meltdown. Stay with us.
Yeah, didn't GM just shift from EVs to hydrogen vehicles? Didn't they just pivot? They did pivot, right? Okay, Cassava looks good. Cassava. Nah, that's a garish color. Let me change the color here. Cyan. No, that's too garish too. Hope everyone's having a good day. I'm certainly having a good day. I hope, what is it, Tuesday? All right, this looks good. All right. All right, so we're starting to fade a bit more. S&P is starting to fade a bit more. All right, Chewy. All right, here's Chewy on the hourly chart. Chewy, nice follow through. 60-minute broke above 19. This is following through. This is mentioned by Astro Bandit earlier. I like what I'm seeing on Chewy. Turning the corner, volume picking up. Okay. There's talk about Kasaba potentially seeing some secondary or an offering, which makes sense.
But our next guest says there's more to fear. He warns of a potential global EV meltdown as manufacturers increasingly report slowing electric car demand. Joining us now is Emmanuel Rosner, Deutsche Bank auto analyst. A meltdown, not just a slowdown here, Emmanuel. Why, and why are you so down on these EVs?
Yeah, thanks for having me. I think the slowdown is in the EV adoption. So essentially, people are adopting EVs slower than expected. The meltdown is in corporates, companies, and investor expectations. Essentially, companies have planned massive investment on the premise of much faster adoption of EVs. This is not playing out, and now we're hearing from corporates that they're pulling back or canceling altogether these investments. Just last week, Ford basically said they're not going to spend $12 billion out of the $50 billion they were going to spend in EVs. GM has pushed out a second EV factory by about a year. They're pushing out some new models, and they're going to be launched later on. So it's essentially a real meltdown of expectations, which has resulted in a meltdown of stock prices.
What could change that picture? I would think way higher gas prices might change that picture, for one thing. More affordable EVs might change that picture for number two. Am I on the right track there?
You're definitely on the right track. Affordability, I think, is the name of the game. And this is what's crucially lacking from EVs right now. EVs are more expensive than their counterpart on the combustion engine side. And the early adopters basically didn't care and bought them. But now the average buyer is essentially saying, why would I pay 10, 15, 20, 25% more for the privilege of driving an EV? And so there's a lack of affordable EVs. And that's something that, unfortunately, we feel will take some time to be corrected. The very reason why GM is saying, hey, we're going to take a pause, slow things down, and then maybe issue these new models later on is so that they can essentially try to work on lowering these.
All right, I'm going to make a sandwich or something. I'll be right back. Give me 5 minutes.
Probably another couple of years. Even Tesla, frankly, and you know we're long-term bullish on Tesla, but even Tesla is essentially struggling with affordability. They're lowering prices consistently, and they're really not going to have a more affordable model for another couple of years, probably at the earliest in 2025.
They've really lowered the price on that. They've really lowered the price on the Model X, which was a high-price model. They've taken that way down.
Yeah, Emmanuel, I guess I'm just wondering, you're talking about price, and certainly that is a factor. It makes a lot of sense. But what about the infrastructure? I mean, I am a non-EV owner, and I have to admit it makes me nervous to have a car that I know that I need to find a place to charge, which might be harder to find than a traditional gas station. Is that still a worry, or am I in minority?
No, absolutely. It's still a real concern. I think that a big piece of driving EV adoption is going to be able to essentially address some of these concerns. Tesla has done a really good job at it. Obviously, the network of Tesla charger is very, very dense, and so you don't have to worry about it as much. It's even integrated as part of your drive and in your GPS where you should stop and recharge. But for just about every other EV, the network hasn't been as dense, and range remains a real, real concern. In the end, what it boils down to, though, is will people sort of like take that step, make that bet when it also costs more money? And so all of it needs to be addressed. I think affordability is probably going to be the biggest lever.
If I am interested in investing in the automobile sector broadly defined, am I wiser investing in a company that is sort of powertrain agnostic? In other words, that makes the seats, the side panels, the gear shift knob, than the OEMs, the manufacturers?
Absolutely, and that really is, our thesis here. It is incredibly difficult to make a bet now on the powertrain mix because it's really heading in the wrong direction, and it could be extremely costly. If you can identify some names that are powertrain agnostic, but that have good secular growth from an adoption curve for their technology, then you could really have some incredibly strong revenue and earnings growth, almost regardless of the powertrain mix. One of the names we often speak about is Mobileye. Mobileye is essentially a pure play on autonomous driving. They don't really care whether that technology goes into an EV, whether it goes on a combustion engine. It's all about will cars become more autonomous. This is a good example of what could work almost regardless of powertrain.
Emmanuel Rosner, Deutsche Bank, thank you very much for joining us.
Thank you.
Well, coming up, return of the Mac. Apple unveiling a host of new products at its, quote, Scary Fast event. We'll bring the highlights for you and the key announcements to come, plus hitting turbulence. JetBlue shares falling to a 12-year low after forecasting a wider than expected loss for the current quarter. We'll trade it in Free-Stock Lunch. That's ahead in the show. Power Lunch is back in 2. Welcome back to Power Lunch. As we get ready for tomorrow's Fed meeting, let's turn our attention to one of the most rate-sensitive areas of the economy, housing, of course, for the latest impact from rising rates and home sales. Let's bring in Diana Olick. Hi, Diana.
Hey, Courtney. Now, the housing market has certainly cooled dramatically this fall. Some say it's frozen before winter, but one part of it is still hot, and that is home prices. Take a look. Prices in August nationally were 2.6% higher than August of last year. That's according to the S&P Case-Shiller Index. That's up from the 1% increase in July. It's also about 6% higher than when prices bottomed at the start of this year. Interesting, though, the cities seeing the biggest gains are not the pandemic hotspots. Quite the opposite. Chicago, New York, and Detroit led the pack. Meanwhile,
Okay, I'm here with you. I'm just eating lunch. Keep an eye on this fade. We need to stay above 41.75.
Take a look at where mortgage rates have gone in that time. I don't know if we have that chart. I guess not. But we started June at 6.85% and then climbed pretty steadily. Now hovering just below 8%. That's a pretty big difference, obviously, on a monthly payment. The reason prices have held is because supply is so low and there's still demand out there. The slowdown in sales, though, is causing a slight uptick in supply, still nowhere near normal levels. Courtney.
You know, Diana, we also have this lawsuit involving, what is it, the housing authority? Can you tell us what you know about that?
Yeah, actually, it's just broken some of the stocks, especially Zillow, taking a big hit on this. A Kansas City jury found the National Association of Realtors, as well as two brokerages, Keller Williams and Home Services of America, a Berkshire Hathaway company, found them guilty of colluding to inflate or maintain high commissions through their clear cooperation rule. Now, we've gotten a comment on this from the NAR, which says NAR rules prioritize consumers, support market-driven pricing, and promote business compensation. They say this matter is not close to being
NOMEX gasoline November futures settle at $2.22 a gallon. NOMEX diesel November futures settle at $2.99 a gallon.
Brokerages all working together. The lawsuits did claim that the NAR rules violated antitrust laws and inflated fees paid to buyer's agents by requiring a listing agent to compensate a buyer's agent for listing a property on the MLS. Anybody who's been out there trying to buy or sell a home knows that these fees are very confusing, and we never know, from brokerage to brokerage, what the fees are going to be between the buyer's agent, the seller's agent. So this is a lawsuit that did obviously go against the realtors, but they said they will appeal it, as have the other parties in the matter. But again, it's tanking the stocks.
Very interesting, Diana. Thank you very much for that report and the color there on that lawsuit. That makes some sense for what's going on in the housing market right now, or the stocks at least.
Well, let's continue our conversation about housing. Our next guest says while home prices have remained stable and in some areas, as Diana reported, risen, market challenges continue, as Diana also reported. Let's bring in Daniel Hale, chief economist at Realtor.com. Daniel, why don't I start by getting your reaction to that lawsuit that Diana was just reporting on? Do you have any thoughts there?
I think there are a lot of legal issues at stake. As an economist, I can say that we know that affordability challenges are important for consumers right now. So I think making sure that consumers are informed and in the market with good representation, I think is really important to making what is for many the biggest decision of their lives, the biggest financial decision of their lives. So I think it's important that consumers are informed and work with professionals. Now, as far as the pricing and the legal implications of that pricing, I'm going to leave that to the lawyers to talk about.
Well, the transparency, it seems to me, it's been an opaque process of who pays who, who's really paying for it. I don't need to get into this deeply because I'm not really skilled enough to talk it through. But there is a lot of opacity, shall I say, to use a SAT word. In that thing. But let's talk about the market dynamics a little bit more. It would seem what Diana said would be true, that in the existing home market, prices have remained relatively stable despite rising interest rates. And the reason is because supply is so low. And so that means you would have low supply and demand, which is stable or rising. So that means people are willing to pay more for those low supply homes, right?
Yeah, so that's consistent with our data. We do see that the number of homes on the market has declined, the third month of decrease in our September data. And if you look at where we are compared to 4 years ago, before the pandemic, there are more than 40% fewer homes on the market today. So put another way, for every 5 homes that would have been on the market 4 years ago, today's buyers are seeing just 3. And so even if there aren't as many buyers as there were in that pre-pandemic period, and we know that there likely are not, given what's happening with home sales and at long-term lows, we can see that the market is relatively competitive and pricing really hasn't budged a ton. Those Case-Shiller numbers that Diana reported on, as she mentioned, are 3-month averages with the most recent data coming into August. Pricing has softened a bit according to our numbers. The median listing price is up just 0.4% in September. So a little bit more softening, but a surprising amount of resilience given how much costs have gone up and how challenging it is for buyers in this market today.
I was just going to say that, Danielle. There were some stats that were sent out here by our data team. The 30-year fixed rate mortgage as of March 11, 2022 is 4.29%. And as of this week, it's 7.88%. But the prices of homes are not coming down to equalize for that. I mean, why is that? Is that simply because the inventory is so tight and that's making the price so resilient?
Yeah, right now, limited inventory is one of the biggest drivers. I think, when mortgage rates first started going up, you also had home prices that were already high. And so you had a lot of existing homeowners that could sell and maybe make a move using a lot of the equity that they built up in their homes. So that was an early driver as rates started to rise. But now we know that a lot of existing homeowners are choosing instead to stay put. They are not putting their homes on the market. We continue to see the number of new listings on the market come down from a year ago. And this is on top of the low levels that we've seen, the lowest levels that we've seen essentially ever in our data. So existing homeowners are choosing not to list their homes for sale. That's driving the number of homes on the market down low. And it's raising the importance of new construction and newly built homes in the market. Our analysis at Realtor.com shows that the number of new homes on the market is roughly about 30% of the market compared to about 15% historically. So when people are out there shopping, they have a lot more new options to choose from than they have historically. And at the same time, builders are willing to buy down mortgage rates to help home buyers, find homes that meet their budget. So that could be a really good option for home shoppers who are out there right now if they're in an area where new construction exists. Builders have been a little bit more flexible, and we see that reflected in the sales data. As existing home sales have declined, new home sales have actually fared somewhat better.
And that was an interesting point I was going to ask you about with the builders actually sort of offering some relief to some of the homeowners making new home sales or new homes, I guess, a little more attractive than existing. I guess beyond that, have we seen continued migration to lower cost areas of the country as we remain sort of a hybrid remote work dynamic in a lot of environments? Are people just saying it is just too expensive to do this? One way to lower the cost, let's move entirely to another lower cost area of the country.
Yeah, the data suggests that some home shoppers and even renters have that option and are able to pursue affordability by relocating. Realtor.com does a study called our Cross Market Demand Report, and it shows that we still have an outsized share of home shoppers that are looking for homes somewhere other than where they live, and they're predominantly looking for warmer weather and affordability. So no surprise that the South is doing well. We also see a lot of interest in the Midwest, and pricing trends kind of conform to that. We know that the biggest price run-up in recent months have been in Midwestern markets where there's a lot of affordability. We see similar trends in the rental market. So overall, nationwide rent has slowed in parts of the Midwest and more affordable parts in the Northeast. We continue to see rents go up. So buyers and renters alike are looking for affordability and trying to move if they can to find it.
Interesting stuff, Danielle Hell. Thank you very much. I'm from the Midwest. Midwest is best. Just saying.
Nice there. We're moving this good.
It is.
All right, let's get over to Christina Partsinevelos for a CNBC News update. Christina.
Thank you, Tyler. Israeli military officials claim the strike on a refugee camp in Gaza was targeting a senior Hamas commander. An army spokesperson told CNN in an interview that Israel was behind the attack on the Jabalia refugee camp today. A local hospital claimed dozens were killed in the blast, but NBC News still has not independently confirmed those numbers just yet. The Jabalia refugee camp is the largest of Gaza's 8 refugee camps. White House officials say Americans trapped inside of Gaza still have not been able to get out, but more than 60 trucks carrying aid were allowed through Egypt's border crossing today. The White House says those trucks contain water and food, but still no fuel, as Israel warns Hamas could take it to military use. A federal judge dismissed Brett Favre's defamation lawsuit against a fellow retired NFL player today. The judge ruled Shannon Sharp used unconstitutional and protected speech when he criticized Favre's connection to a welfare misspend case in Mississippi during a sports broadcast. Favre sued Sharp in February and called his statements about the controversially false. Tyler, back over to you.
All right, Christina, thanks very much. Christina Partsinevelos. Ahead on Power Lunch, shares of Caterpillar sinking on weaker than expected sales outlook. We will trade it in 3-stock lunch. Power Lunch will be right back.
Levels. They've got earnings coming up. I always thought that the Inflation Reduction Act, this was a big bonus for a lot of the solar names, a lot of the green energy type names moving forward, but they've come down pretty severely from highs that we saw, months ago.
Yeah, very much so. I mean, if you look at the stock, I mean, in the last year it's down 4%. It was actually a really good performer first half of the year, and since, of course, July, we've seen compression in multiples and prices really across the board in the semiconductor space, the solar space. We could throw in Tesla as well in the EV space, trading lower. But yeah, I think if you consider the Inflation Reduction Act, that was a mid 2022 phenomenon. There are still some fall through or positive catalysts associated with that in terms of tax credits and subsidies for the solar industry as well as the EV industry. But I think now the market is looking again forward, considering the stock is down quite a bit, about 22 or so percent in the last 6 months. Now, if you look at the earnings per share for the upcoming quarter, they're expecting a pretty tremendous increase compared to last year. $2.04 is the estimate. Now, last year for the same quarter, they lost 51 cents. Because they were coming really at the beginning, if you will, of this Inflation Reduction Act catalyst. But at the same time, sales are very robust, expected to be around $892 million, up 42% year over year. But maybe there's a challenge. One, if you look at in the last 30 days, there's been a slight adjustment lower in earnings per share for the remainder of this year or the full year 23. It was around $7.91. Now it's around $7.76. You look at 2024, there's also been a slight reduction now to $13.12, about 7 cents reduction. So it's not too bad. It's marginal reduction. But I think if you look at the price relative to the earnings potential of this business, there's a real big discrepancy. And it's not just my view. If you actually look at the analyst consensus on this name, the median target is $237. The low on the street target is $181. All these prices are above.
I mean, we had the safe haven of gold, and we went up well over 2,000 troy ounce, and have since pulled back. I mean, today, a big move down over $14.
Absolutely, and some of this tied to what we've seen in terms of U.S. dollar. I think a big rally again, back up through this 106 handle, and oftentimes you see that inverse correlation tie there. But I also think that some of the geopolitical premium that we saw 3 or 4 weeks ago come into gold kind of has not really seen any real follow-through to the upside. Taking a look at the move lower from that spike high that we saw recently up to 2017, as you remember, back down to 1987 here. This is a 1 minute candle chart here. So this is just over the last recent move here that we've seen since today here, basically taking a look at how that's somewhat counter trend though, right? Because again, as mentioned, we just recently did trade up to this 2020, 2019 level, and you can see this is the news that we did have when we had the war on Israel and some of the geopolitical tensions. You can see that premium that comes into gold when you have that play out. But look at this, still holding above the 200, still holding above the 50.
All right, looks like we're headed to 42, 4,200.
We're talking about the spring of 2020, Nicole. Prior to that run up, we saw it at 2,100. We've retested that level a couple, 2-3 times here now. That's the area the bulls want to see us take out, but I think we're still comfortably in this uptrend right now. Anything that sparks further geopolitical tensions could bring that bid back into gold. Keep an eye on the U.S. dollar, keep an eye on rates, obviously, though that has an influence here also.
All right, then, like this night. Thank you so much. Great to see you. Well, Tanya Young is with us. We're talking all about the Fed because that's what we're waiting on. So glad you're with us. What are you expecting?
Great to be here, Nicole. Thanks for having me. We're not expecting the Fed to raise interest rates. I mean, what's happened since the last Fed meeting is mortgage rates are up, car loans are up, business loans are up. The Treasury market got beat up pretty good, meaning the rates are the yields are up there as well. I don't think the Fed raises interest rates because interest rates are going up all by themselves. It's happening organically.
Right. I mean, the question, I actually saw one projection that it's not crazy or it's still possible to think that the 10-year could go higher, in fact, even up to 7%. Do you think that's a possibility?
I do think that's a possibility. And, as I watch these markets, I mean, we had to know at some point when we're borrowing money that it's going to be very, very difficult to get back over a period of time, that our credit rating, how people feel about our debt.
All right, looking good.
Rates, I think, could possibly go high. If you're a saver,
Tesla looking like it might push a bit higher. It's consolidating after pushing off the VWAP, pushing a bit higher.
So there is a silver lining to that, but yes, I do think rates continue to go up and go up again.
So you say you have to have an offense and a defense in your portfolio. Explain that.
TKR. TKR. Timken Steel.
So you've got to have a good offense. You've got to be in a position to make money as the market goes up and not lose money when the market goes down. So how do you actually do that? There's a number of ways, but the way we do it for our clients, we manage over $1 billion in these products called a fixed index annuity. And Nicole, one just came across my desk recently. It's probably the most unique that I've ever seen. It's called a performance trigger. It's a 5-year account. And the way it works is if the market goes up at all, you get 8.5%. If the market goes up 1/10 of 1%, you get 8.5% for the year. And if the market goes down, you don't lose anything. There's no annual fee. The catch is it's a 5-year account. And you can't take all your money out for 5 years. But gosh, if the market just creeps up a little, you get 8.5. I've never seen, in my career, I've not seen anything quite that good. So we're moving a lot of clients to that. That will help you have the offense, the upside that you need, and avoid the downside if the market does correct. We don't want it to. We never want it to, but sometimes it happens. We don't get hurt by that. So offense meaning growth when the market's going up. Defense meaning keeping what you've made, locking your gains, and not going backwards when the market goes down.
I love some of these great tools do require a commitment, whether it's 3 years or 5 years or something like, or a certain minimum. There are some great ideas out there, but you do have to make a commitment as well. In the meantime, it's an election year next year. You see the market heading higher at the end of the year, now and next year?
It's a tough call. I mean, the reality is we have the Fed saying they're going to raise interest rates to continue there, although they really haven't been doing that. Core inflation's still like 4.1%. The real inflation rate, if you count gas,
CAMT.
and we have the turmoil around the world, as a lot of your guests have mentioned here in the last few minutes. That said, I don't think the market's going to surge. We think the market's up this year, albeit maybe just a little. And I think the market's probably flat next year is what we're thinking about as well, or what we're thinking is going to happen at this point. Tough to predict, but the nice thing about the product that I mentioned a moment ago, when the market goes down, if we're wrong and it goes down, you don't lose a cent. Market goes up, you capture the gain. It's kind of a good position to be in this crazy world we live in.
All right, thanks so much, Ty Young. Thank you. Still ahead, we'll bring in our panel, talk about the latest housing data, and what it means for the future of real estate. Our panel is ready, and one believes the U.S. is short more than 1 million single-family homes that really could be on the move. We'll be right back.
All right, so we got SPY. Watch Molson Coors tap TAP. That one turned the corner. Seeing above average volume on TAP. Molson Coors. Also saw something on SAM earlier. U.S. Steel seeing some above average volume. Hubble Common, HUBB. Gap down. Halozyme, HALO. Nope. Transdime, TDG. U.S. Steel. U.S. Steel breaking higher. U.S. Steel.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick,
for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere. Schwab Network. Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free. Welcome back to the watch list. We're watching mortgage rates that have moved even higher. I mean, they've gone to 8%, highest level since 2000. We've got the latest round of housing data. I want to bring in our panel. Aaron Sykes is with us, Chief Economist at Nest Seekers International, and Jeff Ostrowski, analyst at Bankrate. Thank you both for being with us. Aaron, as you comb through some of the numbers, what are your thoughts?
Okay, looking good.
That we've gotten today and this week?
Yeah, so this is one of the most bifurcated markets we have ever seen. Of course, the top of the conversation is that we're seeing price increases, just over 1%. However, it's actually much more challenging than that. We're seeing price decreases in markets like New Orleans and Austin of about 10%, and then we're seeing
Thank you, Grover.
increases in other markets like in New Haven of 11%. So oftentimes we look at these macro charts and we apply them across the board, but it's really, really more local.
Trading 2-to-1 up by him on the NASDAQ.
Different things in different parts of the country. I'm based between Florida and New York, and Florida has been running about 2 months ahead of New York in terms of this market shift. So we already started to see the price decreases about a year ago here, and New York City really just started to see them about 3 months ago. So I think we have a lot of data to sort through and a lot of question marks in the future.
Yeah, understood. Jeff, your thoughts and the takeaways from some of the releases that we've seen of late, including today?
Yeah, my
U.S. Steel making new highs. U.S. Steel. All right, let's look at TAP, U.S. Steel, U.S. Molson Coors, TAP, Sam Adams, bouncing, Bud Light, Bud, Anheuser-Busch. Bud, Pop, TAP, follow. Coinbase, high of the day. All right, Bitcoin starting to turn. Bitcoin. Bitcoin's catching a bid here.
Inventory that's been stagnant on the market for 6 months, sometimes even a year, which means that there's opportunity. And this is what I really want to hit home today, is that if you are looking to purchase, now is actually an opportunity. You don't want to move with the herd, you want to move against the grain. So you can go in and you can start to lowball offers, and you're going to lock in a price that is lower than it will likely be in the coming years. But then you can refinance your interest rate. And I know this is a caveat that is a huge asterisk, but most likely within the next 5 years or so, rates will be in that 5 to 6% range again. So lock in a low price now at an interest rate that you can afford with the hopes of then refinancing that rate later.
Look, I mean, and it depends how much. I mean, Jeff, what do you think? Do you agree with that?
Yeah, I would agree. And Bankrate recently surveyed Americans, and we found about half of Americans said now is a bad time to buy a home. And I would push back against that.
All right, we're breaking higher. We're breaking higher. Looking good. 4,200. Most of you are looking for 4,200.
Yeah, I saw that, and that actually makes sense to me. So the biggest part of your credit score is paying your bills on time, and so paying 15 days.
All right, S&P trying to push through this area. Tesla still waiting for a push possibly through 203. All right, we're breaking high. We're trying to push through. We're pushing through this area now, 41.91. Cash, S&P cash. All right, nice break higher.
Welcome to Schwab Network. Daily live exclusive content tailored to today's investors. Broadcasting 24/7 from our studios in Chicago and from the heart of Wall Street at the New York Stock Exchange. Up-to-the-minute market insights, example trades, and stock-specific analysis featuring the smartest minds in the business. No politics, no noise. Analysis ahead of the biggest events for the economy. From bell to bell and beyond. Watch live and on demand. 24/7, 7 days a week on schwabnetwork.com. And on all your favorite streaming services. Available anytime, anywhere. On any device for free.
Schwab Network, empowering every investor and trader every market day.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network.
All right, so nice break. 4200's target.
Part of the latest commodities action on Futures with Ben Lichtenstein and weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, I'm Oliver Rennick. Get ready to cut the cord. Market on close is coming up.
Chewy trying to take out the high of the day. Chewy. Tesla. All right, Tesla trying to go. All right, there goes Bitcoin. Bitcoin.
Good afternoon and welcome to Market on Close. I'm Oliver Rennick. We've got an hour left in the day. Stocks right now are getting bid again. Hello, day two. Follow through here to a solid start to the week. Equities trying to firm up and find some solid ground. Had a big
All right, nice follow through.
Treasury news and big FOMC decisions and big data on Friday. Got everything. So far, it's been not without news.
High took alert plus 800.
All right, now we're getting high ticks. Thank you. So bear is capitulating.
Of course, Fed, but no real action there. Perhaps more focus on the Treasury and plans to finance our government, issue a bunch of debt. Those worried that bonds are going to be a source of volatility when they come to market. Carefully watching for any details on that tomorrow. Dollar is stronger though in the face of it, interestingly enough. If the Treasury were going to be in some trouble with Mr. Market.
All right, Bitcoin on the move. All right, there goes Bitcoin. All right, did we have anything on Bitcoin? Let's see.
Even though there's some notable stuff going on, like crude oil down again, Bitcoin hanging out near 35. A few stock moves too we'll talk about, and a little taste of some tech earnings. But the dollar is really the most important thing that's on the top of the list of movers today because the greenback is holding its own after a little bit of an increasingly tighter Bank of Japan perspective, some data from China and data from Europe.
S&P continues. All right, Bitcoin looking pretty strong here. Check out Bitcoin on the move. Bitcoin turning back up. Volume coming in. Daily, weekly, 4 hour. Everything looks strong. S&P looking good though. S&P. All right, so making it to 4,200 potentially. Tesla. All right, nice follow through. Nice. Okay, so all the FANG stocks looking better. Looking better. Apple finally green on the day. Snowflake up $1.50. Google trying to go green. Microsoft up 90 cents. Amazon up 46 cents. Green on the day. Nvidia erasing some major losses. It's still down $4, but reversing, pushing higher. Netflix is up $1.76. Continuation. And looking good. Looking good. S&P continuation. Got so many things going on tomorrow.
Strong enough to warrant the Fed's aggression, perhaps by December or early next year. Keep your eyes on the 2-year, which continues to hang around 5%. Helping the Fed's case right now is the fact that we're not getting any major inflation boost from WTI, despite the geopolitical escalation in the Middle East. As crude oil is $81, we are now notably lower since the conflict began. You can see that on the mid-right of your screen, and the pullback from the highs, that gap up, that was around $83. Well, guess what? Now we're lower, and we're actually breaking through some pretty well-defined.
All right, so a little profit taking, a little more profit taking. Watching the FANG stocks, they're doing well.
Last thing, as we talk, what drives the market, the stocks, on the last hope here for bulls to get things back on track this early season is Apple. Shares are okay after they unveiled the new chips. Stock, little change, probably a victory by the standards so far in this market for this earnings season, where big tech has been at best very divided. All right, let's start things off. Caroline, what's the techniques? I got Kevin Miller in the studio. Hey, what's up, Kev? Day 2 bounce, not bad. 11 sectors in the S&P all higher. Even energy with crude oil down is slightly in the green. Even communication services with Google Alphabet down is slightly in the green. The rest strength across the board. So pretty interesting what's going on here in the 11 sectors of the S&P. But Oliver, there's a lot of things, and then there's one thing. Oh, we lost comm services right as you speak. 10 sectors down. I spoke too soon. You're right. It just went negative by 3 cents. Changed it. Exactly. So it's all the risk-off numbers, and then it's the dollar. And that move in the yen has to strengthen the dollar. That relationship trade, that's down 1.75%. Wow, yeah. It's a massive move for foreign currency. There's very little chance the dollar could not be strong in a day like that. So the dollar is its own island today. Foreign currencies are heating up, but you've got the 10-year base.
A little bit of profit taking, but we're continuing to make higher highs and higher lows.
You've got gold down higher. Some of gold might be the stronger dollar affecting gold, but it's also a slight risk-on day here in this market. So a lot of follow-through as well. You know, maybe some of the whispers from tomorrow's Treasury refunding announcement coming in a little on the low side for the money that the government, the Treasury might need. We'll see if that comes. 30 Chicago time, 8:30 Eastern tomorrow. We'll get that number. Jerome Powell, not expected. We're not getting any dots. We're not getting probably any interest rate moves. So Jerome Powell's going to have to figure out something else to talk about to make some moves. So I expect that to be a benign event for Jerome Powell. So I think that if we get through this Treasury number tomorrow, if we get through that, and no geopolitical incident pops up on the radar, we could drift higher here. So it seems like right now, at least the crude market has been kind of shrugging off the geopolitical risk anyway. Yeah. I wonder if
Nice buying. Thank you, Grover.
other than military, other than tanks and jeeps and trucks, we also need airlines and stuff to talk about, right? Right, exactly. So there's disruptions there, but yeah, crude oil, a lot of people surprised in the crude oil. What's interesting, I think, particularly about the last 3 months compared to last year, is that even though bonds have been the source of main headache here, and the inverse relationship yield curve stocks go down, that's been undeniable now for 3 months. But it's not as cataclysmic, it's not as broad as it was when we first came up the high in early 22.
All right, we continue to push higher highs, higher lows. Earlier, we talked about the FANG stocks, and we needed to see this wick build underneath the candle and move above the closing level from yesterday. Now we finally see it. We got an entire wick and a close above the closing part of the body of this candle yesterday. MACD's turning, stochastics is firing. So now we need to look at These are just 10 stocks. Now let's look at the S&P 500 for that buy signal that we've been looking for on the daily. We want to see stochastics fire. Okay, stochastics is about to fire here. Stochastics is about to fire. Okay, so this could get very interesting very fast. Okay, about to trigger. Okay, looks good. Okay, everything is lining up now.
Consumer confidence eased a little bit, and that data point reading, I thought this was a good one to make sure folks were aware of.
Good job, folks. Good job. Looking good. Looking good. All right. Hope everybody's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a fine Halloween, October 31st. Can't wait. My son's all excited about going Halloween trick-or-treating with his friends. I don't blame him. That should be fun. All right, let me just check NYMO one more time. NYMO is positive plus 12. It was minus 60. Was minus 60 last week, coming into Friday.
Small sample size, right? Sure. Thanks, guys. Carolina Blood. So it's definitely a minefield for earnings, but at least the last 48 hours of trading here, equities are able to find a bright spot and go with the winners. It's pretty painting a visual principle to the comic. Talk a little bit more about the big picture here. Jeff did a back on the show. What's most important for the next couple of days? I mean, you've got employment on Friday. We've got the Fed. We've got Treasury plans. Earnings are going to be a separate stock thing. From your perspective on the economy, what do the others matter the most? All of the above matter. But I think the biggest thing on my mind is the Fed. And heading into tomorrow's statement and press conference, I think bond investors are far too confident that the Fed is done. I think there was a recent speech by Christopher Waller where he said that he can envision two scenarios. One would be where the real side of the economy slows and the Fed is done. They've done enough. And the second scenario he brought up was that, growth would continue to come in above trend, labor market would be solid, inflation might even pick up a bit,
And in that environment, the Fed would have more work to do. And I think it's quite possible, based on the data we've seen in recent weeks, that
sounds like what happened.
Yeah, exactly. That's my take. So definitely a lot of pretty well telegraphed they're not going to do anything.
All right, looks like a higher low printing on the S&P, higher low. Higher high. This 15-minute. Let's go to the 2-minute chart's good. 2-minute. 2-minute chart. Looking for another higher low.
So if your view as a central banker is you expect slow growth and a softening labor market, and you don't have that, well, I think you...
Tesla, breaking higher. Tesla, there goes Tesla.
You could argue, hey, we've done a lot. We can maintain tight policy for a while, but if the data keeps coming in...
Tesla, breaking higher. Tesla. Nice follow through on Tesla. TSLA, Tesla. Okay, Tesla pulling away from VWAP, pushing higher. Tesla.
How do we distinguish between sort of an anomaly style bounce to perhaps real trend continuation in the economy? Is it possible we could see PMIs and ISMs continue climbing from here?
I think it all comes back to income growth, from my perspective, for households, the consumer. So you look at that personal income and spending report on Friday, nominal income growth growing 7% year on year. 7% year on year. That is going to support consumer spending, and consumer spending was the biggest chunk of that 5% number for Q3. So if we can have continued solid labor market, income growth persists, then this is no fluke. In fact, if you look at the last 4 quarters, the Bloomberg consensus has expected, the next quarter, the economy will roll over, the consumer will retrench. The reasons for that are varied. People have said, oh, consumers are going to run out of savings. Consumers are already running up their credit card. The bite of interest rates will finally, be too severe.
Yep.
But income growth continues at a 7% clip. And I think that's really the tail, and that's the fuel for the underlying economic situation right now we're in.
It's a great point that employment, ultimately, jobs, I mean, yeah, we can keep swiping our card, but if we can keep paying it off too, then it can go on for a while. Not to mention also that the math behind the strikes is starting to add up in the favor of union workers in the IOs.
All right, higher low printing, looking for a higher high. Tesla, looking for a higher high. Tesla. Most stocks look like they're being bought. Chewy.
Well, the other thing that happened today, now that you're bringing up wages, is the employment cost index, and you look at the breakdown of wages and salaries in there, and it's up, let's call it 4.5% year on year. It's that's a measure of wage growth that has cooled off a little bit over the last year, but it sort of just seems to be hanging out in the 4 to 5% range. And if these anecdotes that you're spotting here on the labor front also add to that.
Looking for a higher high. S&P looking for a higher high.
Especially in the bond market, there's been this expectation that wage growth is going to cool, growth is going to cool, the labor market is going to cool, inflation is going to cool. It seems more likely at this point that everything's just staying a little bit stickier here.
All right, I got a bear flag on VIX. Bear flag.
I think that very much keeps the Fed in play. Not likely to go tomorrow, but maybe they go again in December.
Okay. And if they do go again in December, the last kind of point to put this all together, if we think about what pressure that might add to the economy, it sounds like you might argue here that the pace at which they've gone so far just hasn't had that real pressure yet. So it's not something we should necessarily freak out about. Like if they say they are going to have to hike again, it's not the end of the world, or does it really do meaningfully kind of limit our potential growth from there?
No, I don't think it's the end of the world. This comes up a lot in our conversations about credit sectors in the bond market. Say like high yield, for example. I think what's really been weighing on credit sectors in the last few weeks, or even the last couple of months over the summer, higher rates. But over the longer term, if they're hiking because we have great momentum in the economy, then maybe that's not the end of the world for credit sectors in the bond market, and in turn for the equity market. So it's really growth that's driving things here.
All right, great stuff. Love the optimism and frankly the very real take on the economy that goes underappreciated still. Jeff, I saw you guys are shopping. I didn't see you, so make sure you come next year.
Okay, yeah, sorry, Anthony got one of those gated dogs.
No. Good to see you. Thanks for the comment, Jeff. Good to join us from Peyton. They go, all right, but the look at the Fed is still the main driver of what comes next as Powell sees the pressure from a stronger than expected economy. Let's talk some more earnings when we come back. This is actually really interesting stock coming out after the bell. It has a little bit of tech, a little bit of consumer, and a little bit of surprise to it. It's Match, the dating business, had a huge rally in shares throughout COVID and a big sell-off back. And right now is toying with 5-year lows. What can the owner of Tinder do to spark a flame and it bowls again?
My dad was a hard worker. He used to do side jobs, installing charging something.
All right. Bitcoin, a little profit taken there.
My dad instilled in me always put people before. Be proud of offering a good product at a fair price. I think he'd be extremely proud.
Trading the trending names every day. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Looking for a higher high. Tesla pulling back a bit from the highs. Tesla.
It's time to move forward.
Find the next trend.
From every click to every tip.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Peace out, Coffee. I'm Jenny Ford. Join us.
Okay, seeing some profit taking now. All of the FANG stocks are seeing profit taking at the high with a little bit more than 37 minutes to go. 37 minutes to go. I'm your host, Kazaveni, coming to you from theclosingprint.com. It is Halloween, October 31st.
Remind us firstly how we got here. How come this thing has been such a disappointment the last 2 years?
Well, first of all, thanks for having me. I guess the biggest reason for why Match stock is trading the way it's trading is Tinder. Tinder accounts for over half of its direct revenue, and it's by far their most profitable asset. The EBITDA margins of Tinder are significantly higher than Hinge or any other asset that they own. And so the top line growth at Tinder has a meaningful impact not only in the company's overall top line growth, but also on profitability. What we've seen over the past few quarters is that sequentially,
UTF looks good.
growth has been declining for, call it, 3 quarters in a row.
this quarter. And
Looks really good. Nice chart.
And hence the stock movement. So the biggest question now that investors are asking is, are we going to see an inflection up in bigger beta growth? And one of the leading indicators is the top of the funnel. The question is, all the
All right. UTF looks good. Cohen and Steers infrastructure.
will we see the fruit of that? And the key here is going to be this year until we get to that next year. And that's going to be the second year for the new seat now, not so new, but relatively new COBK.
The thing that's interesting to me is that as the number of willing payers and slows down for the service, and I look at the stock of Bumble competitor, and it looks almost exactly the same in terms of performance. You look at the consumer, and people aren't buying cars or $1,000 hotels as much as they were 6 months ago, but they're still happily buying mid and low tier of services and products. So as far as the explanations go, I mean, what does the churn look like? Was this like a generational thing, perhaps, that people wanted to use these apps? Are young people that are like entering the dating world? So I think about like the workforce, so like the young people using these apps while the people who have been using them match and then leave?
Looking for a higher low. Looks like a higher low is printing. Looking for a higher high.
Online dating as a category is not growing as fast as it was growing over a decade ago. Clearly, because a decade ago, the penetration levels were significantly lower than they are now today. So online penetration is over 50% in developed markets of the U.S. and Western Europe for online dating. There's still room to grow, and these assets can still continue to grow, but that's one factor to keep in mind. The other, obviously, is the demographics of it. Yes, $15 a month or $30 a month, it may not seem too much, and the retention levels as well as the churn may not have changed meaningfully for any of these apps. Typically, users pay for these apps for about 3 months, maybe up to 6 months on average, but it's on the lower end of it. But the attractive part of this is that if they do come back, so you could have a very fast up in the funnel, like for Tinder, you may be there today.
Okay, looking for that higher high.
Today, guess what? You may start paying again to your regular basis. So they have that dynamic too. So it's difficult to think of churn beyond that. And then the third thing I would say is that all these assets are great assets. Tinder, Bumble, and in their own way, they have been three of the most successful dating apps that we have today, and the reason why they are publicly traded stocks. But one thing to keep in mind when we think about Bumble also is
S&P pulling away from VWAP all day today. Very strong, showing that persistent buying that's lifting the markets across multiple sectors.
And then the other thing is also the relative scale of the businesses when you compare Match, which is a clear category leader. The liquidity of the stock is meaningfully different than that of Bumble, and that also has a role to play in how these stocks trade.
Now, thinking about the profitability and the cash flow, what they can do with that, do you want to see them reinvest then at this point into the platforms if they're not growing as fast? But what's the solution for their free cash flow?
Well, they are wanting to give half of free cash flow back to investors. And so that the Match, I'm talking about Match here, generates almost $1 billion in free cash flow, and their margins and free cash flow dynamics are very, very attractive. Now, in terms of choosing where to allocate that capital, they have been very good about allocating capital in terms of buying back shares.
All right, let's go for a higher high.
About where to invest, whether it is marketing or product. So my best guess is that Gary, who's an extremely good operator, will likely consider between these two options, marketing and product spend versus share buybacks to return capital to shareholders in terms of fully potential returns. Now, given where the stock is trading today, I would imagine that buyback is a huge opportunity for them, not only a vote of confidence, but in terms of returns for the company and shareholders. So I wouldn't be surprised if they accelerated and if the stock price remained pressure.
And you think that's something that could happen today?
Well, I mean, it depends. They could, let me share what I think what the stock will find for investors. And it's hard to know how the stock's going to trade because it all depends on what the company mentions tomorrow at the call conference.
In particular, you think maybe they could say something about the buyback today? That might be high on their list.
Well, yeah, they almost always do. Intra-quarter, they bought back $300 million of shares. They just closed that quarter, post the second quarter. So I would imagine they may have bought some more, and that's significantly more than what they did in the second quarter. So they're clearly accelerating.
Okay, a little bit more profit taking. This might be the high for now. We only have 30 minutes to go.
And the shares will look to see kind of shareholder-friendly activity. Maybe they can sprinkle on top of things. Live bulls in the options corner. Coming up next, Starbucks, JetBlue, and Western Digital. Tom spotted all favorable trades. That's interesting because I'm pretty sure when I was standing next to him earlier in the office, he saw something super bearish in JetBlue. But I guess I don't know if he picked that one. We're going to find out.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. They're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Still a little profit taking.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
All right, let's trade some options. Tom's found some interesting moves in today's market. Let's start with that JetBlue. Just an abysmal combination of their deal looking like it's not going to work.
Holding the highs. All right, Tesla just consolidating.
Some really bad math on the bottom line. And you didn't tell me you saw some trading that's going in your
FANG stocks.
Well, I'll give you that one first.
NVIDIA almost getting back its losses for the day. It's up, down $3.
Department of Justice urging a judge to block that $3.8 billion buyout of Spirit Airlines. So a lot on the headlines. And in the background, you've got bad earnings and worse guidance than expected on this one. So what I did see out there was out in January of 2026, those options, about 808 days till expiration. There was a trader out there buying the 2-strike puts. Over 44,000 of those were scooped up. So it's probably somebody that has a big stock position, maybe hedging to the downside in case for some reason this airline over the next 800 days goes bankrupt, something like that. So they're buying the 2-strike puts in there, but that wasn't the one that got stuck out. Yeah, the 2-strike. I mean, they paid over 50 cents for it. So
Consolidating. All right, the FANG stocks. Google, trying to go green on the day. Google, Amazon, flat. All right, we've got 26 minutes to go.
They said the industry was increasing capacity too much. Well, I don't see that because planes are full. They have the ability to increase capacity more. Right. And he keeps on the CEO.
Arista Networks hanging out at the highs.
Planes are full. International is doing better. They only have a small
Leidos,
their industry or their business is international.
International Fragrances and Flavors. FRT, Dow Jones, Boeing. All right, so Boeing is day 4 off of the low. Intel, nice follow through, looking for a continuation. American Express, along with MasterCard, I believe, and Capital One, those are looking pretty good. Verizon, we talked about this box, Darvis box, looking for that to follow through yesterday. Okay, that's what we were looking at yesterday. We broke higher above the 200-day. Now I'm looking pretty good. The volume's starting to pick up, which is good. We're going to see that follow through.
So, a little division, kind of with how these two traders are approaching it, but I mean, it's a very polarizing event. So, when you have a moment like this, I can see the bets basically kind of skewing towards the two extremes. Either you think they're going to bounce back, be a major player again, and bet for big upside, or you bet that this is really like kind of death blow to them not being able to scale up with Spirit.
Question though. I mean, this is what I've had a hard time. If you look at
ask the questions here, Tom.
If you look at any of the airline stocks, the Jets ETF, over the last 3 to 4
Chewy, having a good day. Chewy,
for them. But then you look at TSA data.
right at the highs of the day. Chewy.
You know what? I get it. A lot of it is down to jet fuel prices still elevated.
Nice volume. Chewy looks good for the follow through. S&P. All right, a little bit more profit taking.
Sure, but for some more than others, still, Jet ETF at $14, only a couple above the COVID level. All right, you got two trades got to move through here pretty quickly. Let's stay in the consumer for a sec. Starbucks, little change, kind of going sideways. Where's this coming from?
We got earnings on Thursday morning. And that's what I think this trader's setting up for. Stock's still down about 6% this year. Option market pricing in about a plus or minus 5% move in the shares. This one's been beaten down. Analysts have been reassessing this company, lowering price targets on a daily and weekly basis. So saw a trader out there in the November 3rd weekly cycle. So these expire on Friday. You'll capture that Thursday morning earnings event. They bought 3,000 of the 93 strike calls, paid a debit of 260 on those. So the break even at 95.60 over the next 3 days is about 3% above the current share price within that one standard deviation range. The market pricing in. Call volume 52-week high of this stock, Oliver. little bit, down over 3%. Still up
We're fading a bit more.
got over 3 months in this.
Okay, a bit more fade. I don't like this kind of fade end of day. We had a little fade right here, right around 2 o'clock, but obviously prefer if we were to hold at this level, 4,200, just overhead.
Was seen as a bonus yesterday, giving back some of those gains today, but somebody thinks it's going to pop before February.
Yeah, 3.5% drop, a little frustrating because yesterday it was real close to closing that gap from the merger breakup. All right, nice. Thanks for the trades, Tom. Bullish with the exception of that deeply bearish, possibly hedged JetBlue trade. When we come back, let's talk some of the other stuff. Crude oil and Bitcoin. Then we'll get back to the macro, close to the bell. Then earnings after the bell. Right now, though, we'll get an update on a big bullish call out for BTC, as well as a little chat about WTI down low 80s. Stick around.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account.
Nike reversing, pushing a bit higher.
With no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees. And enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing.
All right, looking for a higher low.
It's as easy. Cash moves to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Accelerate your market knowledge and shift your perspective into OG. Real-time example trades, full hours of trading. I'm Tom White, Uncovered News. Catch me on Fast Market, weekdays at noon on the Schwab.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
It's time to look forward
Find the next track.
from every click to every tip.
There's no fear of missing out on Next Gen Investment.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Peace out to coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only the Schwab Network.
All right, stocks headed strongly into the closing bell. Let's switch gears. Let's talk crude oil. We're putting this Bob Ichino, energy strategist, path trading partners. Low 80s, Bob. We're like breaking support, threatening it. What do you think technically?
We're threatening it. I think that's a good way to put it. The more that I sort of back up and look at
All right, Tesla, a little fade.
ranges for crude oil, we're creating a range. Let's call it, I don't know, at this point I'd call it probably 71 to 82, but it's probably a little wider than that. And the thing about crude oil right now, and I've mentioned this before, you know this, crude oil volatility, it's off another 4% today. Crude oil volatility usually has to do with some sort of, I'm just going to call it general chaos.
All right, nice little bounce so far. Bitcoin just off the highs of the session. We have 16 minutes to go. 16 minutes. Pretty decent day for the S&P and the FANG stocks. Nvidia was off quite a bit earlier. It's still off $5 now. Amazon's flat. Apple's flat, up 20 cents, 27 cents. Microsoft up 80 cents. FANG stocks mixed. So this looks okay. Looked a lot better a few minutes ago. We're in the top of this candle for today. Buyers stepped up at the low of the day. We are currently trading 2 to 1 on the NASDAQ. 2 to 1 up volume. 2 to 1 on the NYSE as well. Tick cumulative fast signal has turned up. We got quite a bit of buying volume today. Let's take a look at number of stocks trading above the 50-day. Looking for this to continue rising from 20% through 30, through 40, and hopefully higher into the seasonally stronger months of the year, into November and December. Okay, so we start off November tomorrow. Remember, any end of the month selling, you'd see that today. Any lagging stocks that a institution or portfolio manager might have, they might take those off end of the month and use that money to buy in the start of November, tomorrow. All right. All right. Yeah, Lockheed Martin, I like it. I like it.
Some of the numbers from overnight are seemingly contributing to that kind of demand softness that still exists. Hey, Bob, before we let you go, Jenny's about to tell us about the fourth Bitcoin call. You're watching BTC here at just below 35 still. It's hanging on pretty darn well.
Yeah, quite a bit. And I think, I mentioned this last time. I don't remember which of your shows I was on, but I think the ETF thing is going to be a sell the fact type of event, because just like NVIDIA, where everybody had to be in AI and then we subsequently saw a 40% drop in the stock, I think the same thing is going to happen to Bitcoin, and that's the buy.
Netflix about to go. Netflix is looking pretty good. It's up $2 on the day, 412, trading at 412. All right, so we're seeing a little bit more short covering, a little bid in the markets at the moment. Number of stocks trading over the 50-day, number of stocks trading over the 200-day, all of this turning up. You got CCI, you can see barely coming through now, minus 100. It'll trigger, looking for a push back to the highs. Looking really good. So nice follow through for tomorrow would be nice. Okay, let's look at NYHL 30-minute. Okay. Daily needs to get above 0 like we did the last time we ran up. Advanced decline, turning. So we need a higher high now. Get above the 200 period, that blue line. Continue to build blue and green elder sticks, hopefully. Netflix looks good. Netflix is on the move. Hey, Netflix looking good. All right. Nice higher low printing on the S&P. Higher low, looking for a higher high, looking for that 4,200 test. You should be aware that the S&P is triggering, I believe. Let's take a look. Should be triggering here. Stochastics. Okay. So we're looking for that trigger. Close. You get above 20. Last two times this happened, we had these two rallies. Took 2 weeks. In each case, it looks like that's what we're starting right now. Day 3 on the reversal. Starting off the week, Monday, Tuesday. Looking pretty good. FANG stocks looking a little better. Tesla fading a bit. Looking for Tesla to be higher tomorrow.
That means about my community and every community. No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics,
no noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day. Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere on your device for free. Schwab Network.
We got some time until the bell rings, about 7.5 minutes, bringing our Schwab Big Picture panel. Kathy Jones, Chief Fixed Income Strategist, and Michelle Gibby, Director of International Research, join us. Good afternoon, ladies. Good afternoon, team. Let's talk big picture around the world first, Michelle. This is a big week for
All right,
the department.
a little choppy, but all in all, it's been a pretty good day. Pretty good day with 6 minutes to go. There goes Apple. Apple's starting to move here. Apple taking out the high of the day.
Market to function more on its own. But if we look at what was the expectation going into the meeting, there were some rumors yesterday, but kind of a bigger change in policy, so that didn't happen. There might be some disappointment in the end in that respect. And also, bond purchases scheduled for November they're going to be unchanged from prior months. And so the problem for the yen is that U.S. yields are just rising faster. If we look at just in the period since the last Bank of Japan meeting last week in the YCC in July.
Okay, a nice rally into the close. All right.
While the Japanese 10-year yield is just at 94 basis points, it was 85 a week ago. So the Bank of Japan policy remains very dovish and not yet enough to overcome the spread between its bonds and the rest of the world. Eventually, we could get further normalization of their policy, but it looks like we might need to wait a little longer.
All right.
Their car was in park and now they're just in neutral. Then I was thinking maybe they were going backwards and now they just put it in park. Thoughts on which of those analogies makes more sense?
I mean, they're just not making a lot of changes. It's happening really slowly.
Yeah. All right. So the dollar kind of finds its legs despite all this then.
The overnight news was in no short of supply, though, from other places too. Chinese numbers, Europe numbers. What was the other highlight to you, Michelle? What else should we be taking away from the overnight data?
Well, I would say Europe is, teetering on recession. And while we didn't, the expectation was for growth in the third quarter, we also had an easing in inflation at 2.9%. And, we don't normally think of as an economic slowdown as a good thing, but that's basically what central banks need for inflation to slow down. So this is
All right, Meta going. All right, so Meta is pushing a bit higher. It's still off $1.50. Nvidia is off 360, taking back a lot of the losses. Google's about to go green. Microsoft is up $1. All right, we just got a couple of minutes to go. A couple of minutes to go into the close. Nice S&P is about to close at the high of the day. Apple at the high of the day. S&P is about to close at the high of the day. Looking good. Looking really good. Look at the volume coming in. Look at the volume end of the day.
Seems to also put into perspective just how kind of stable our economy is compared to the rest of the world. I imagine we might hear some of that from Jerome Powell tomorrow. Kathy, what do you think? Could we be getting a little bit of appreciation from the Fed on our own economic status?
Yeah, I think that Fed, well, first of all, no change in rates is expected, and it seems very unlikely anything will happen there. But I think the statement will acknowledge the recent strength in the economy. The third quarter numbers were very strong, and the consumer spending continues to support the economy. And that certainly has been dollar support, and probably will continue to be dollar supporting. We're not looking, though, for any definitive view on how high rates are going to go. I think, Fed leaves the door open, but whether they walk through that door or not is a big question in our minds. Probably fourth quarter things slow down again. They have seen a lot of tightening in financial conditions. How do we get more information that's useful out of the unemployment report on Friday than we get out of the Fed on Wednesday?
What do you think is possible now after a couple big surprises to the data? Should we be widening out our range of outcomes for employment to the upside?
Yeah, I don't know that I think you have to keep a wide sentiment. We've come to surprise so many times this year. And I think there are a handful of predictions for another big 300,000 number. But we'll probably see a lower number just based on the job state data that we've seen. Get some more of that ahead of time. The job openings data being announced later.
All right, so we're looking for a follow through tomorrow. Got seconds to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Happy Halloween, everyone. Have a great evening. We're at the closing bell. We're about to close. Pretty decent day today for the S&P. Pulled away from VWAP, higher highs, higher lows. Into the close. There's that volume in the day. Have a good one. Enjoy your time with your family if you're going out trick-or-treating. Otherwise, take care. We'll see you in the morning on a hard stop. Gotta go. Ciao.